He's really bragging. But we are just moments away then from the start of equity trading here in Europe. Yesterday we saw technology stocks doing really well, the likes of ASML. So outside of the budget story, there are other things to talk about, but we're also 20 seconds away from the gilt open.
We are, and I think this was really fascinating because, again, we kind of had a 180 in the intraday session when we had the kind of sigh of relief from the OBR leak in terms of the number being higher, but then as we went through it, a lot of panic. Do we start to see some of that move, some of that headache get retraced in today's session? Guy, of course, has the opening trade. Guy, what do we see?
Okay, let's see what we're going to get here in Europe. I'm not sure you're going to see much heat. I'm not sure you're going to see much action. I think it's going to be a fairly quiet session. The FTSE 100 is barely budging as anticipated. We are absolutely flat this Thursday morning. I think volumes are going to be, actually, to be honest, volumes have been light all week. And I think very much today is going to be the kind of the bottom. Maybe tomorrow as well. We'll return on Monday, maybe with some better price action. But there you go. Market's doing absolutely nothing. The stock 600 is barely budging. We are down by 0.03 of a percentage point on the stock 600. The CAC's not really moving very much. The IBEX is not really moving very much. We'll wait for the Germans to get going in just a moment. But the overall narrative at the moment is actually that we have seen a decent rally back for equities over the last few days. Maybe in November won't be that bad for the global equity market, but we're going to have to wait, I think, for a couple more sessions to confirm that. Creddy, what else are we seeing this morning? What else are we watching this morning as the Americans enjoy their turkey?
I mean, can you blame them? I've got to say, when you look at some of the sector moves, some of the individual movers, it does seem to be a heavyweight story. And I think this one's interesting here because I'm looking at the biggest weight on the stocks on the downside. It's ASML. So you are seeing that tech trade kind of come out. To the upside, it's actually Rheinmetall. And I'm curious how that kind of factors because these are two stocks that have major valuation concerns kind of hanging over them in terms of the tech and the defensive trade. From a sector perspective, red and green on the screen.
Yeah, food and beverage stocks seem to be doing pretty well this morning. So I'm looking at the GRR screen on the stock 600, and we've got food and beverage is the best performing sector. Pernod Ricard in particular doing pretty well. Consumer products and services also on the rise, but none of these are moving by all that much. You know, this sector, these sectors are up 2-3 tenths of a percent. So not a day for big moves. A day for sitting on the couch, perhaps.
In honor of Turkey Day, this is the advice everyone gives you on Thanksgiving: is that you take your Thanksgiving feast, you kind of meet the family, you get your cranberry sauce, blah, blah, blah. Yep. You have your massive feast, your pumpkin pie, and then you go to sleep. Turkey's supposed to make you sleep. And I think in honor of that holiday, I imagine we're getting a little bit of a sleepy session
That's
today.
what the market has been, is doing then, in honor of Thanksgiving.
This is the market analysis
to make you feel at home.
That you need on Bloomberg Television.
Yeah, absolutely.
Guy, walk us through kind of what we're seeing in the bond market here. Is it as sleepy as it is in the equity market?
I wish I could bring you something more, Creddy. I wish I could bring you some more action, but I can't. The gilt market's action, it appears, was yesterday. The gilt market seems satisfied with the delivery of the meal yesterday from the Chancellor of the Exchequer. Ticked all the boxes, delivered what it wanted. Yes, the tax take in this country is now the highest it is on record, but the bond market kind of got what it wanted, A, on the tax side, and B, on the issuance side, as we were hearing from Lawrence and Mutkin just a moment ago. So actually, to be honest, the action this morning is not very significant in the gilt market. We've ticked that box. We're moving on. We're on to Thanksgiving. We're on to maybe a quieter session. So maybe as we start to get going, we'll get a little bit more action, but I'm not seeing very much of it at the moment when it comes to the 2s, the 5s, and the 10s here in the UK. Now, yesterday, the picture was a little bit different. We did see some action when it came particularly to the long tenors here in the gilt market. And as you can see, a decent bid coming into the long-dated bond market yesterday, yields coming sharply lower. Now, in some ways, the UK is much less sensitive to this end of the bond market than maybe the United States is, but it was a significant move, and it did have an impact. Whether or not actually this is going to be sustained remains to be seen. Whether or not this is a reaction that is going to be sustained by other markets elsewhere remains to be seen. But at least yesterday, Rachel Reeves did get that tick in the box. We didn't get the turbulence in the bond market that some had feared, though, to be honest, the bond market pretty much had all of the pieces of the puzzle in place before she got up and started speaking yesterday, with the help maybe of a few of the UK institutions that provided an early look at what she had to say. Kriti, over to you.
A fascinating one. Let's get a little bit more analysis on how this shows up in the equity market. We've got a guest out here with us. Peter Oppenheimer, Chief Global Equity Strategist over at Goldman Sachs, joins us right here on our Make Do set today. Peter, we've got a ton of questions on these broader markets, but in honor of our UK budget special, let's start right here with the UK. Your initial thoughts on kind of what we learned from Rachel Reeves yesterday. Does it have a read-through into this equity market?
Yeah, morning and happy Thanksgiving.
Thank you. I appreciate that.
I think it does. There were a lot of concerns going into the budget because of so many leaks and uncertainties about the fiscal headwind. And overall, I think markets have taken it rightly in quite a positive way. We are going to see a progression of lower inflation. That was going to happen anyway, and I think this adds to that. And most importantly, from the equity market's perspective, you got the read-through from the gilt market. And I think this is positive for gilts. We would expect yields to continue to progress downwards to around 4% by the end of next year. And the main way that that impacts equities in the UK is domestic equities.
Yeah.
If you look at domestic equities, if you look at the FTSE 250, it's underperformed the FTSE 100 by 11% since June of this year, so quite a lot. It's very cheap. It has a dividend yield which is 100 basis points higher than the FTSE 100, which is already very high. And I think lower interest rates tends to be positive for that part of the market and domestic stocks in particular.
Peter, I'm going to ask you a little bit of a curveball question, out of character, I know. Talk to us a little bit about, there are pieces of the budget that kind of felt like they were laying the groundwork for incentivizing everyday earners and everyday consumers to actually invest, not just in the stock market, but specifically in the UK stock market.
Yes.
I didn't feel like that went far enough just yet, but do you feel like this lays the groundwork for more retail participation in the UK stock market?
Yes, I mean, there was clearly a hint towards that, specifically in terms of some reform to the ISA system. So this is the system in which people can put a tax-free allocation historically to a mix of equities or cash. Now, about half of all money that goes into ISAs historically has gone into cash. And that's effectively the government giving a tax break for people to put money into a risk-free asset with a very low return. So they've wanted to try and encourage people to shift more into equities by reducing the amount that they can put into cash. I think that's a positive thing. The asset managers were up yesterday on the back of that because that should, and I think will in time, create more flows into the UK market from a low base.
But that doesn't necessarily, yes, it incentivizes that from a tax perspective, but it doesn't require UK equities specifically. Is that the next step? Is that what we need to get this kind of structural push into the UK equity market?
Well, it's partly that. Of course, retail is a small part of the overall picture of who buys equities. I think the other part of it, actually, in the UK, and this is similar across Europe, is that big institutions like insurance companies and pension funds have been consistently selling equities over the last decade or so, partly to reflect changing regulation that's forced them more into bonds. UK pension funds, for example, back in the late 1990s owned about 60% of the UK equity market. Now it's about 5%. So any moves in the future along those lines would also be helpful, I think.
Peter, you mentioned that this will have an impact on domestic stocks, and we saw a bit of that yesterday, didn't we? I mean, are you assuming then that inflation comes down, gilt yields continue, will fall as a result of this? What kind of upside can that offer then for domestic stocks?
Well, I think quite a lot. As I said, look, the UK market, we should say, has done well this year. You know, it's up with dividends roughly 20%, stronger than the S&P, and there isn't a single tech stock in the FTSE 100. Yeah. Now, the FTSE 250 has lagged behind, and it's largely because it is more domestic and there's less liquidity. I think that it's very interest rate sensitive as well, because you have things like house builders in there,
Yes.
and other very interest rate sensitive parts of the market, more domestic consumer related areas. So I think with the prospects of lower interest rates and gilt yields, that should benefit. I think there's reasonable upside. I should say that we expect policy rates to be cut in December and then 3 times next year, so getting the base rate down to 3%, and that should help gilt yields moderate as well.
And that will be the dominant narrative that will drive real estate stocks, I guess, because yesterday we saw something a bit more divided. Some real estate stocks benefited from this assumption about lower gilt yields and lower cost of debt, but others were penalised because, of course, what's happening with the wealth tax at the sort of more luxury end. That's an extra complexity, I guess, now from a real estate perspective.
Yeah, that's true. That's true. There is a bit of a mix, but that particular reform in the tax system is going to target a very small part of the overall housing market. And of course, the government is also pushing ahead with planning reforms to ease regulations. So there should be more house building.
And so where does the UK equity market fit then in your sort of landscape of European equity markets? Well, what are you expecting for next year?
Positive. I mean, all equity markets, we should emphasise, are quite expensive now relative to history. That's true even for the UK, actually. Not the FTSE 250, but the FTSE 200. It has a higher valuation than its long-term average. And so I don't think valuations are really going to be the big driver of returns, although we should see a bit of an uptick in the FTSE 250 because it has that really high yield. And I think it's also worth bearing in mind that while growth has been the real dominant factor in equities in the last decade, led by technology, this year we've had quite a big mix of growth doing well, but also value stocks being re-rated. And the UK is a really dominant value market, has a high yield, very high free cash flow yield, very low multiple. The banks, for example, will benefit, I think, from these reforms as well, and no banking tax, that was a concern. They have a multiple of about 8.5. And so I think, again, that area of the market, for people looking at value, the UK is quite an attractive proposition.
And looking at global stocks, we seem to, the Fed seems to have delivered early, or the Fed narrative at least has delivered early in terms of some kind of Santa rally. We've seen stocks recovering from some of their November losses, or close to recovering globally from November losses. How much cutting do we get from the Fed, and what's the read across from that cutting into the stocks narrative globally? Because it has been driven by the outperformance of tech.
It has, but again, well, 2 things. Firstly, we do expect rates to come down in the US to around 3% by the middle of next year. And that, coupled with ongoing economic growth, some moderation in the dollar, is a reasonably good setup, I think, for risk assets and equities in general. You're right that tech stocks have continued to dominate the US market. They make up almost 40% of that index, and they've done well. But let's not forget, this year is a year where diversification has really worked. This US stock market has actually underperformed most other equity markets, including the UK. And many of these other markets, like the UK, don't have any or very little tech exposure. So you are seeing this broadening out. I think that will continue. Aggregate upside, I think, is limited because valuations are reasonably high. But we're going to get profit and dividend growth, and that should really drive equities.
Peter, thank you so much. Thank you for braving the cold with us. It was much nicer weather yesterday. Should have been yesterday, but thank you very much. Thanks for being here. Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs, giving us his thoughts on the UK market and much beyond. Let's check in on individual stock movers today. Chloe Melly is still with us. She's downstairs in the cold, and she has an update. Puma certainly on the move this morning then, Chloe.
Yeah, absolutely. Good morning, Anna. Puma is up very strongly, more than, almost 15% this morning, as it is said to be drawing a lot of M&A attention. So the Chinese company Anta Sports is reportedly considering a bid for the company, and that is just one among several other potential bidders. And that is something that investors seem to be very enthusiastic about. Puma has been struggling to get investors and consumers really enthusiastic about its products, really excited about new products. It is now undergoing a turnaround turnaround, and therefore the prospect of a potential takeover is being welcomed very warmly by the market this morning. Moving on to drinks, after all, there's a holiday somewhere, maybe not here, but somewhere, and we are seeing some positive movements across the board there. So Rémy Cointreau reported better than expected sales growth in the first half. It actually reported a fall in profit because it is facing quite a lot of a weakness in the Chinese market and currency headwinds. But the fact that the sales growth was better than feared was seen as very encouraging and very reassuring for investors, and therefore it is also driving up some of its peers. So we are seeing Pernod Ricard and Campari also up almost 2% each this morning. Moving on to Zegona, which is an investment company that is specializing in the telecom space, and it will return 1.4 billion euros to shareholders in the form of a dividend and a share buyback. This is something that investors are thinking about quite positively, and we're up more than 2% there. And finally, Entain, the gambling company, is down a little bit this morning after detailing some of the impact, the profit impact of the hike in gambling taxes that we'll have here in the UK. It said that the EBITDA impact will be about £150 million from 2027. That's not negligible, and therefore we are down about 1%. Analysts did say that most of that impact is priced in, which explains that this weakness that is not absolutely major for Entain, but we are still down a little bit.
Chloe, thank you very much. Chloe Nelly from our equities team. Thanks for the update. So a host of movers from consumer products to drinks. I noticed Deutsche Börse are doing okay this morning as well. We'll have more on the UK budget, though, coming up. We'll continue those conversations from here on the balcony. St Paul's Cathedral in the background. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to our budget special. Let's talk about the bond market a little bit more and how we should perceive the UK this Thursday morning. The bond market largely was okay with what we learned yesterday from the Chancellor, Rachel Reeves. Is that enough? Is that tick in the box good enough for now for the UK to keep calm and carry on? Let's try and answer that question. The UK Shadow Chancellor is Mel Stride, and he joins us now. Mel Stride, good morning. The bond market is okay with what it heard from the Chancellor yesterday. Is that a tick in the box? Is that good enough?
It's too early, 24 hours out from a budget, to really know exactly how it has landed. And of course, I think implicit within the decisions taken within this budget are a lot of challenges that lie ahead, not least layering up taxes on hardworking people, and as a consequence, spending some of that money at least on increasing benefits. I think part of the story, though, on the markets right now is that, of course, we've gone through a period of many weeks of speculation, of leaks from the Treasury about what might be in the budget and U-turns on that and so on and so forth. And I suspect there's at least some relief out there that we now know what is in it, rather than fearing all the different things that may or may not have been in it.
I'm thinking about this budget as being the Klarna budget. It's a buy now, pay later budget. And I'm wondering whether or not you think when the pain arrives, the reaction will be maybe quite so benign.
Well, I think that's a good question, because the way this has been structured is that £26 billion of increased taxation has been loaded on working people. That kicks in towards the end of the forecast period, i.e. a few years' time, whereas the actual spending part of it is front-end loaded. So a lot of the pain is going to hove into view through time rather than being felt immediately by people. And I think if you add that to the fact that, of course, these tax increases will be penciled in for when the general election is not far off, I think it is a perfectly fair question to ask whether the government will have the discipline to actually continue to pursue that path. What they should be doing is getting on top of public spending, on government spending, particularly around welfare, getting that down so that they can both bear down on the deficit and what we're borrowing, but equally get taxes down rather than seeing them go up as they are.
Mel Stride, good morning to you. Do you think, though, that the Chancellor does deserve some credit for managing to thread the needle that saw her not create any drama in the gilt market and at the same time take hundreds of thousands of children out of poverty? That is a very tough needle to thread, perhaps. Does she deserve some credit for that?
Well, no, I don't think so at all. I think she's taken all the wrong choices. If you go back to the first budget back in October of last year, she heaped taxes on businesses, which is part of the story as to why growth has been so anemic. They are borrowing vast amounts of money and spending vast amounts of money, about £500 billion over the Parliament compared to the plans that they inherited from us. That has stoked inflation, kept interest rates higher for longer than they would otherwise have been. And we've seen another kind of turn of the handle on this in the budget yesterday, another £26 billion worth of tax increases. That is the way to ending up, as the OBR has said, with the highest tax burden in the history of the United Kingdom, and a situation where that will be impeding growth. And you can see that in the OBR's figures. Growth is down, inflation is up in the forecast, unemployment will be higher every single year of the forecast compared to the last forecast back in the spring, and people will be relatively worse off. So I'm afraid the wrong choices are being taken. What she should be doing is bearing down on government spending in order to get taxes down, not taxing in order to put benefits up.
Mel, you mentioned the OBR, and that it played a slightly different role to usual yesterday with an early release, of course, of the Chancellor's statement. You were outspoken about that on that subject, saying that this could even have been a criminal act yesterday. Any further reflections on that? Any further thoughts on the future of the team at the OBR and whether this is indeed a criminal act?
Well, look, there's an investigation ongoing at the moment. It appears from what we're hearing now that the OBR, well, are saying that this was a mistake, a technical error around the timing of the release of their report. And if that is the case, it's obviously far less serious than if somebody was deliberately attempting to take advantage of early access to market information or whatever it may have been. But you're absolutely right. I mean, this is a very serious matter. It is unprecedented that this should have happened, that you have a Chancellor of the Exchequer standing up in the House of Commons whilst the entire contents of the budget has been released by the OBR about an hour before she did so. That is clearly completely unacceptable. So we do need a thorough investigation into it to understand exactly what has happened and therefore what consequences should follow.
Mel, it's Crady in London. Thank you for your time this morning. Can you talk to us a little bit about how the business community should be viewing this budget? We know that Rachel Reeves has been looking to incentivize growth, as many of the governments have before her. Talk to us about how the business community may or may not be viewing this budget and what maybe the Conservative Party should be doing differently to incentivize further investment from the financial community.
Well, the UK business community at the moment, in terms of confidence, is flat on its back. In fact, the Institute of Directors, which has a regular survey of business sentiment, has had surveys recently that are the worst ever in the history of their surveys, and that includes COVID, when the economy here shrank by 10% overnight. Things are pretty dire. A lot of it is around business taxation, particularly the national insurance hike that the Chancellor brought in after her first budget, which really has destroyed jobs and business confidence and growth. And as I say, to the second part of your question, what we should be doing, what my party would be doing, is we've identified £47 billion worth of savings across government, 23 billion of that coming from the welfare bill. And we should be appropriating those savings both into getting the deficit down, but equally into getting taxes down. And the kind of taxes we should be looking at, or I would be urging the Chancellor to look at if she were to take those decisions on spending, are those that relate to business and getting business moving.
Thank you very much for your time. Mel Stride, UK Shadow Chancellor of the Exchequer, thank you very much for joining us. Just time for a quick word on the markets this half hour. Skylar Montgomery-Koning joins us from the Bloomberg Markets Live team. Skylar, we saw actually some UK stocks benefiting yesterday. The FTSE 250 quite liking what it heard by the end of the day, at least. In specific sectors, real estate was a bit divided, but some of the brokers, wealth managers did pretty well. How did you see it go down with stocks?
Yeah, absolutely. I think generally because the budget was pretty okay, actually, like it was quite positive, I think, for markets generally. You had premium come out across assets, including equities. Specifically within equities, there were a couple measures that were meant to be more positive for them. So, for example, if you look at the ISA allowance, the allowance is still 20K, but only 12 of that can be used for cash now. So hopefully that 8,000 goes into UK equities. I think the issue is, A, that's quite a small measure. It doesn't actually mean that you have to go into UK assets as well. You can still go into global assets. You also got dividend tax raises, and the overriding driver of equities is growth. And this is more growth negative than anything else. And so I think while you can cheer in the short term, it certainly doesn't put you on completely positive footing. That's particularly for the FTSE 250, which is more domestically oriented. I also don't think you're in the all clear on the FTSE 100, given that that's been driven in the past year largely by pound weakness, which seems more unlikely to repeat from here. So I think it means that you need to be more defensively allocated within there, especially because I don't see the equity market globally being very strong into year end. And you also have Bank of England easing bets helping those sectors.
Skylar, great to see you. Thank you very much indeed for joining us up here on the balcony. Skylar Montgomery-Koning from our M Live team. You can, of course, follow the M Live team throughout the morning. It is a quiet day. The US is out. We're going to carry on our coverage of the budget. Martin Gilbert's going to be joining us next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the opening trade and a very special edition of it. It's the UK budget special. We're 30 minutes into today's session. It's Thanksgiving over in the States. Happy Thanksgiving for those that are celebrating. When you look at the futures picture, the equities picture, habit, green on the screen everywhere, it seems, including in the DAX, higher by 0.3%. That's your outperformer this morning. S&P, Rheinmetall seem to be the stocks that are moving to the upside, but amid very, very low volume.
Low volumes, small movement in these European equity markets. Let's get an update on some of the other stories that we're keeping across for you this morning. At least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in decades. The blaze began on Wednesday afternoon on a section of bamboo scaffolding encasing the structure, then spread from building to building via wooden poles and protective netting. Hundreds of firefighters worked overnight to rescue trapped residents. 3 people have been arrested in connection with the fire at the high-rise complex. Back in markets, in corporate news, Puma shares are rising sharply. That's as the Chinese sports apparel company Anta Sports is said to be among firms exploring a potential takeover of the German company. Sources say Hong Kong-listed Anta, which owns brands including Fila, has been working with an advisor to evaluate a bid for Puma. And over in the United States, maybe Thanksgiving, but the Federal Reserve Beige Book survey of regional business contacts says U.S. economic activity was little changed in recent weeks, though overall consumer spending declined further, except among higher-end shoppers. Employment declined slightly and prices rose moderately. And Guy, I've seen so many references in the past 24 hours to K-shaped economies and K-shaped dynamics in the U.S.
Yeah, very split in terms of the way that the consumer behaviour story is playing out at the different economic quartiles, and you can certainly see that in the data. Let's talk a little bit about what we're seeing here in the UK. The United States is closed today. We have seen, obviously, some movement in the dollar of late, and that is a factor in the next chart that you are looking at here, which is the FTSE 100. As the pound gains a little bit of strength, you could argue that mechanically that should actually be a little bit negative for the FTSE 100. But the FTSE 100 is coming back a little bit today. Fairly stable session on light volume. What I want to show you, though, is that pound chart, and this is the 2-day session that we are looking at here. You have seen the British pound rising through the budget and then a little bit of a a drop-off that we're seeing this morning. UK 10-year gilts, this is the picture here. Little reaction again yesterday. Most of it actually came towards the longer end of the curve. And the UK 10-year this morning, not a great deal changed. We're at kind of 440. I think it was the issuance story that largely kept the bond market calm yesterday, rather than maybe the economic outlook. The most sensitive part of the UK market when it comes to equities is, of course, the FTSE 250. We don't really look at the FTSE 100 when it comes to that story, but the FTSE 250, full of house price, full of the house builders, etc., and much more sensitive to the UK consumer. And as you can see, on a two-day basis, we are higher, Chrissy.
Absolutely fascinating to see what how these markets are shaking out. Will we see a little bit more of a change when it comes to the volume picture? Let's come right back to our UK budget special, of course, and bring in our next guest. Martin Gilbert, chair of River Global and Revolut, joins us right here on this rooftop. Martin, thank you so much for your time, for bundling up with us. We certainly appreciate it. Your initial take on this budget, from the perspective of a founder, if I wanted to start a business, were you confident, were you given confidence by this budget that as a founder, this is the place to start that journey?
Yeah, I think the Chancellor was caught between a rock and a hard place to a certain extent. Her left sort of leaning MPs and the bond market. So I think probably the balance is probably right. I think we've a step in the right direction as to founders, I would say. You know, the 3-year stamp duty holiday, the upping the limit in the ISA. I would have pressed the Treasury a bit harder on making British stocks come back into it. There are some technical details of how you would measure it within an ISA. So I think that'll be the next step, hopefully, going forward.
To very specifically allocate to British stocks.
Yeah, to British stocks.
Does the UK, though, have that structural, and I should say the scale of that operation? When you compare it to other markets around the world who are able to do that and able to mandate it, let's say in the S&P 500, for example, that's a game of scale. You have to have a massive amount to do that. Is there enough volume here?
Yeah, I think so. There's enough good companies here. They're being taken out at one a week at the moment in the 250. So we have a very undervalued market. And I'm old enough to remember when the ISA was first introduced as a PEP. It was UK stocks.
So 25 years ago?
Yeah. That shows how old I am and how long I've been doing this, sadly. But no, I think we're heading in the right direction as far as I was a bit disappointed that the VCT limit came down from 30 to 20% tax relief. So that was sort of heading in the wrong direction. But I understand the economics that the Chancellor is faced with.
Isn't there a little bit of room for pushback on ideas about mandating people get into UK stocks when maybe they have a preference for other things? Or is it just about providing tax incentives if they choose to do so?
I think if you're giving a tax incentive, you're perfectly entitled to mandate where that money goes. And it was originally that, and then it became international. And it's been to the detriment of the UK stock market as we've seen it become much more international. The ownership of stocks in the UK has halved by individuals. I mean, there are more crypto holders than stockholders now in the UK, which is not really what we want to see.
Yes, I mean, would that really move the dial, Martin, or would it be more appropriate to focus on creating more tech startups and getting them to list here rather than
the listing
it from the other direction?
Oh no, you're quite right. The listing here is a big issue. Now we're heading in the right direction with the stamp duty holiday for 3 years, so that has helped because the automatic place you go to list as a fintech is NASDAQ because it's deeper liquidity and they don't have the stamp duty. So at least one of the things has been taken away, but it's still a big problem getting companies to come here because this is traditionally traditional markets, sort of dividends. As you said, housing stocks, mining stocks, traditional industries market. Whereas NASDAQ is very much fintech.
Does growth equal stock market performance?
Yeah, I think so.
Where's the growth?
Yeah, it does. I mean, I think you can invest in the FTSE 250, and even if you don't get growth, you're going to get a company a week being taken out by private equity. So you don't even need growth in the FTSE 250. But I think, growth does equal stock market performance.
So this morning, not exactly a kind of a great day for the UK stock market. The growth story is getting worse, not better.
Yeah.
Why am I being encouraged to invest in the UK at the moment?
Because it's cheap. It's so cheap. I mean, it's...
Why is it cheap?
Because of the flood of money over the last 20 years out of equities into bonds. I mean, I'm bemused by the fact anyone wants their pension in bonds, but you can see why the finance directors of PLCs de-risk their balance sheet. So that's what's happened.
What kind of mood music does it create, Martin, when you look at taxes on dividends going up, savings income going up? I mean, the Labour Party says it's about making that tax take fairer versus other sources of income.
Yeah, I think I would have been more worried if capital gains tax had gone up, because you really want to be making capital gains, don't you, rather than extracting dividends out of companies, because. And that's part of the problem with the UK market, isn't it? We pressurize the companies to pay us dividends, whereas rather than reinvest in the business and grow the business.
We've had this kind of overhang over the UK economy, over UK financial markets, kind of post-Liz Truss. Are we in any world where that is dissipating, that there is a sense of trust back into this economy? Like the bond market was becalmed because of this budget, but it largely knew what was going on. How fragile? You have seen confidence, you have seen fragility. Kind of where are we on the spectrum of that right now?
Well, as governments borrow more and more money, the bond markets become more important to them, which is why the budget was so slanted towards that particular audience. So I don't see the bond market's importance diminishing at all.
There's a question here of not just an exodus of investors, an exodus of money, but an exodus of British residents to other financial capitals in the world, famously Dubai.
Yeah.
Does this budget encourage more of that?
It hasn't stopped it, that's for sure. I don't think it encourages it. But I think the worrying thing is we're losing not the non-DOMs, we're losing a layer below the non-DOMs to the Middle East. And I suppose, 20 years ago, if someone had asked my advice where to go, I'd have said go to Asia. Now I would say go to the Middle East. I mean, that's where the growth is, that's where...
So what would stop the exodus? You said it hasn't encouraged it, but it hasn't stopped it. What would stop it?
Look, I mean, we've always been exporter of talent in this country. I mean, to Americas before and then Asia over the last sort of 20 years. I think what we want to do is get them back, encourage them to come back once they've made their money, you know, or got some money by that stage.
We'll try and find some sunshine. That might help as well, Martin. The hunt is on for the sun today.
It's nice in Dubai. I mean,
it is. I thought you were going to say here. I mean, it's fine. Martin, thank you very much. Thank you so much for joining us. Martin Gilbert, Chair of Revolut and River Global, giving us the city's perspective, a founder's perspective as well, on everything we heard from the budget yesterday. Now, the UK Chancellor Rachel Reeves announced £26 billion of tax increases in a budget that was meant to convey stability, but left investors reeling when most of the key measures were accidentally released early by Britain's Office for Budget Responsibility. The OBR has issued an apology.
Let me start with an apology. A link to our Economic and Fiscal Outlook document went live on our website too early this morning and was subsequently removed. We apologise to the Chancellor, members of Parliament for this technical error, and have initiated an investigation into how this happened. It'll be reporting to our Oversight Board, the Treasury, and the Commons Treasury Committee on how this happened and how to make sure it doesn't happen again.
There's the mea culpa. Well, Office Budget Responsibility Chair Richard Hughes speaking yesterday. Bloomberg's Lizzie Burden put it to Rachel Reeves that the OBR have said that none of the policy measures laid out in the budget have a significant impact on their forecast for UK growth. Let's listen to what Rachel Reeves had to say in response.
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that the OBR have ever done for our planning reforms. Just a couple of days ago, the Planning and Infrastructure Bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecast on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. In the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
UK Chancellor of the Exchequer, Rachel Reeves. I think that last line is really crucial there. She's saying we want to encourage growth. We also need the money to invest in our public services. Yeah. Did she check any of those boxes in yesterday's budget?
Well, we're hunting for the growth story, aren't we? Maybe we found it. There's plenty of noise, construction noise going on around us. We apologise if anyone can hear it.
I think it's deconstruction noise.
Deconstruction noise. I think that has a value.
I think so. Count? Recycling. Let's call it recycling.
Good start. Yes. Good start.
This is the challenge, though. The UK economy has no growth. If you want to have decent public services, you have to have a vibrant economy to back that up.
Yeah.
You could do it in the short term, but you can't do it in the long term. And that, I think, is the challenge that the UK now faces.
Well, let's see how this all pans out. She has 5 years to deliver on some of these promises, a little less. Politically speaking, lots to digest there. We're going to put some of these questions to our next guest on the program. Of course, as the UK asks the wealthy to pay more tax to fund welfare and growth in the budget. You just heard it from Rachel Reeves. We just discussed the viability of it. Let's get the views of entrepreneur and charity donor John Caldwell joining the program next. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back, everybody. This is the opening trade. It's been an eventful post-budget day special from here on the balcony. Here are some of the highlights so far from our guests.
There's no sort of catastrophic downgrade to growth, but equally, there's not much in this budget either in terms of tax reform or policies more widely that will be good for growth.
I think the government has struggled somewhat with the narrative around growth. So what they've chosen to do is take a path of talking about stability. You know, we're going to keep corporation tax capped at 25%. We're going to keep the 100% capital allowances. You know, we're going to give certainty in the UK system. And so that's the path they've chosen rather than necessarily a big fanfare about attracting investment.
The market did well yesterday. And I think that's because there were basically, three channels she had to get right for us. One of them was about issuance, one of them was about fiscal credibility, and one of them was about the sort of trajectory for inflation. The problem that the UK has had is it does have sort of European levels of growth, but it has kind of US levels of inflation, right? And it's the inflation premium that keeps yields high, I think, more than anything else in the UK.
While growth has been the real dominant factor in equities in the last decade, led by technology, this year we've had quite a big mix of growth doing well, but also value stocks being re-rated. And the UK is a really dominant value market, has a high yield, very high free cash flow yield, very low multiple. The banks, for example, will benefit, I think, from these reforms.
I think the Chancellor was caught between a rock and a hard place to a certain extent. Her left sort of leaning MPs and the bond market. So I think probably the balance is probably right. I think we've a step in the right direction as to founders, I would say. The 3-year stamp duty holiday, the upping the limit in the ISA. I would have pressed the Treasury a bit harder on making British stocks come back into it. There are some technical details of how you would measure it within an ISA. So I think that'll be the next step, hopefully, going forward.
The views from entrepreneurs and philanthropic giants in the UK around what we heard from the budget statement yesterday from none other than Chancellor Rachel Reeves. Does it go far enough? Let's ask John Caldwell, who of course is an entrepreneur in his own right and a philanthropist as well, joining us right here on the balcony for our UK budget special. Thank you so much for your time and for joining us. Good morning. We heard there from a series of guests talking about this. The buzzword seems to be growth. Was this budget a step in the right direction? Did it go far enough?
There's a lot wrong in the budget, but let me be balanced about this, and I think it was the best budget that we could expect under the circumstances. If there was damage done, which there was, it was done in the last budget, and we are not pushing Britain's GDP growth anywhere near in the direction we need to do. So there's real problems within the budget, and I think moving money into the welfare, this is a difficult one, because if you've got a family that are on these credits for children, and they've got more children, and they genuinely can't work, or we need to look after those kids and keep them out of poverty. But by the same token,
there's potentially a real trap here where we finance people to stay at home, give them all these universal credits, and they're not really motivated to go to work. Now, the devil's in this detail. I don't know if they're going to find a way of driving people into work. But we've got 1 million young people between 20 and 30 out of work. That has to be solved. But we have to create jobs for them and motivation for the future, and that's where the inward investment comes in.
Isn't the best way to do it growth? This is what we're lacking here at the moment. Yes, the budget ticked all the boxes yesterday. Yes, it was maybe the budget that we all should have expected. But it wasn't a budget that is going to significantly change the economic trajectory of this country.
No, absolutely not.
How do we do that? You've run a business. Tell me.
It's relatively simple. First of all, we are where we are financially, so that gives us a difficult headwind. But we go out, we send 20 titans of industry all around the world, meeting businesses that might come to the UK, which have been previously not found by...
I thought businesses were leaving the UK at the moment.
Sorry?
I thought people were leaving the UK, not
yes,
coming
but
in.
that's not businesses. That's not businesses leaving the UK. It's rich people. But to my point earlier, if rich people leave the UK, will rich people who want to bring a business to the UK come? We need to make everything business friendly, and the last budget was not business friendly or rich friendly. But we are where we are now. What we do now is we send 20 titans of industry out into businesses to research what do we need to do to get you to move your business into the UK. And corporation tax would definitely be one of those, but also a concierge service to make it easy to move to the UK, to reduce restrictions and bureaucracy. And if we do all of that and drive these people in really proactively, go and find them and negotiate with them to come in. And we create high-paid jobs because they're all in the high technology spaces and environment, medicine, all those areas where there's a lot of money to be made. We can then pay higher salaries to people, and if those businesses achieve the number of employees that they forecast and the higher salaries, then they get a reduced corporation tax. That costs the government nothing because we haven't got those businesses. And what we do is produce GDP growth for Britain. It's a simple formula. It's it's a hard task to do. That's why I use the expression titans of industry. People who would volunteer to go and do this job.
So that's advice, perhaps, if she's shaping the next budget. Well, see whether she's listening and whether we get the new
that's not even a budget issue, though. I've been telling them they should do this for years.
Well, yes, and they could be doing it between budgets.
Any time. It's nothing to do with budget.
Now, you've been talking about growth, John. You've been outspoken on green growth in the past and the need to get more green growth in the UK. What do you make of that agenda in the UK right now, in particular the EV road pricing model?
I think it's all a bit of a muddle, to be honest, and it's all sending mixed messages, because what people will take away is that they've got to pay 3 pence a mile, I think it's from 2028, on their electric vehicle. Now, if you're going to go to a 3 pence a mile or cost per mile, why not scrap road excise licence altogether and have every vehicle owner paying a pay-per-use on the mileage?
Maybe this is the start of that.
Well, maybe it is, but why not just do it? Be radical. What we need is radicalism that changes the UK for the better and that simplifies things and makes it a clear, simple formula. So the cost per mile on EVs could be a much lower level than the cost per mile on diesel engines and petrol engines, to drive the right behaviour and to just have one simple formula.
You're staying, right? You're not going anywhere.
I'm staying. I'm not going to stay here for very long because it's a bit cold.
You're dressed for the London weather.
And on that note, what a perfect point. We will conclude the conversation. Lovely to see you, John. Thanks for stopping by.
Okay, pleasure, thank you.
Here, British entrepreneur, John Caldwell. That wraps things up. We have spent the morning out here digesting, discussing the budget. Have we reached any conclusions?
Well, I think growth came out from that, those clips.
Yes.
People reflecting on, well, okay, that was all very well, but where's the growth? That was the big message.
There's growth, there's more taxation. If we don't get growth, then at least maybe the fiscal finances will get solved. There is maybe a silver lining.
Okay, happy Thanksgiving Day.
Thank you. Thank
you.
I
want to find
appreciate
pumpkin
that.
pie.
Yes, we're going to go do some turkey eating after this. That does it for the opening trade. The Pulse is up next. Thank you for joining us today. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Global stocks gain as traders raise bets that the Fed will cut rates next month. Traders are also locking in a December cut by the Bank of England as a pain of tax rises in the budget is actually postponed. Shares in Puma soar on reports that China's Antasports is considering a takeover. We'll have more on that Bloomberg scoop. Plus, JP Morgan announces plans to build a new tower in Canary Wharf in what will be the UK's largest office building. So this is an artist's impression. We have a lot going on, actually, between new buildings in Canary Wharf and the markets left, right, and center. Now, this is a picture for the European stock 600. Again, they're pretty much flat. I have to say the mood for the moment is very focused on the Fed. We had the budget here in the UK yesterday. It hasn't really moved markets that much, although there is a bit of a move on gilts just as traders are digesting exactly what it means for future spending. Now, look, global equities, again, on track for the longest winning streak this month. It does reflect the strength of a recovery that's, again, fueled by these bets that the Fed will probably cut interest rates sooner than previously thought. The CAC 40 down 0.1%, and then you can see the DAX and over in Milan, the FTSE MIB gaining a touch. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. Happy Thanksgiving to those that celebrate. I'm Francine Lacqua here in London. Global equities close to erasing their November losses, revived by growth optimism or by growing optimism that the Fed will cut interest rates. Now, sentiment also supported by the possibility of a more dovish new U.S. central bank chief. So we're now joined by Claudia Panzeri, Chief Investment Officer in France for UBS Wealth Management. Claudia, thank you for joining us. I mean, look, there's a lot going on. There's always concerns about valuations in the markets, especially when it comes to AI. So we have this like pull and start from the markets. But actually, if you look at the Fed and Fed expectations, the markets are fine because they're expecting a cut.
Yeah, so thank you for having me this morning, Francine. I think the market is very focused on what the Fed is going to do in December, and we are expecting 25 basis point rate cut. The market probability about the rate cut has been decreasing a few weeks ago and now moving back to 80%. So that is quite important. the rate cut in an environment where we see some slowdown in employment market, even if we haven't seen the data for a few weeks now, is supporting multiple expansion. And I have to say that while many clients are concerned about this multiple expansion in US, there is still growth there in terms of earnings. And so the earnings season was pretty good. And we recently upgraded US stocks, but also European stocks. So let's say we meet the market expectation in terms of future performance.
What's your take on equities in 2026? I know we're close to the end of the year, so there's the outlook that's coming up for the year ahead. If you look at AI valuations, are they going to be problematic?
I think one of the particular element is that demand is still there. When we look into the rate of implementation of AI across the different industry remains still very low. So for the time being, what we see are CapEx spending, which has been very strong this year. We have expectation of CapEx rising 2026 and 2027. Demand is also increasing. So valuation in some cases is a bit stretched. But when you look into the companies which will benefit of AI implementation, valuation is around the long-term average. I'm thinking about companies which will implement AI, not only hyperscaler, but really application, and then valuation are around 20 times and on 28 times when we look into semiconductor. When we look into the overall landscape for 2026, with rate being down, multiple expansion can be continued to increase. So we are not concerned about the valuation right now. Volatility will probably increase from time to time. It happens over the last 2 weeks. But we are still convinced that AI will be a big driver for next year. What we are doing, we are more, I say, more diversified than in the past. So that's also help.
So how do you diversify your income? And I know, for example, you like commodities, but you also want to take advantage of what's happening in China.
I think in terms of diversification, within the equity space, we have increased Europe, where valuations are quite attractive, but also where we expect 2026 and 2027 growth to pick up after a few years of zero growth. We have been moving positive on Japan with the fiscal support that could push a bit not only the growth on the economy, but also economy on the earnings side. And we have been positive on Chinese stocks, especially Chinese stocks which are linked to AI. So relative to the past, where we have been focused essentially only on US stocks, we are now more expanding our overweight, our preference in our region. And then in terms of diversification, we remain very diversified across asset class. Our call on fixed income is still positive. We are still positioned on high-grade bonds and commodities more recently, with gold diversifying and reducing volatility across portfolio. So clearly, 2026 is less concentrated than it was 2025 in terms of allocation, but also we see more growth coming, and the Fed continuing to cut into early next year. So really, we're still very positive about the global outlook.
Okay, Claudia, don't go anywhere. Of course, Claudia Panseri stays with us because we'll now focus on the UK. Of course, it was budget day. Markets reacting positively, more or less, or kind of muted, I would say, after the UK Chancellor Rachel Reeves delivered her autumn budget. Now, Reeves also boosted her fiscal buffer with tax rises totaling £26 billion.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Now, the shadow Chancellor of the Exchequer said it was, quote, utterly outrageous and potentially criminal that the OBR released the budget before the Chancellor gave her speech.
It is unprecedented that this should have happened, that you have a Chancellor of the Exchequer standing up in the House of Commons whilst the entire contents of the budget has been released by the OBR about an hour before she did so. That is clearly completely unacceptable. So we do need a thorough investigation into it to understand exactly what has happened and therefore what consequences should follow.
Well, joining us now is Kit Reese, co-editor of Bloomberg Markets Today. Kit, so first of all, I mean, there's two things, right? First, the OBR budget leak, which I'm assuming and hoping it will be dealt with rather firmly, and this we understand is like a digital security lesson maybe for others. But the bigger part, the budget was okay. It didn't ruffle any feathers. But do we worry about growth in the future?
Yeah, well, this is the really big question. I mean, markets seem to be breathing a sigh of relief that after weeks of chaos, speculation, and U-turns, that, it was pretty much in line with expectations. So there are 88 measures, a huge amount to get through, lots for markets to digest. And while, they are breathing a sigh of relief that it is as expected, they're focused on tax, raising tax in order to fund spending cuts. There's this big question over growth, and ultimately, is it going to kickstart the economy, which looks kind of unlikely at the moment. So we'll be hearing, of course, from business leaders and think tanks and the rest of it on what it could mean. But overall, there's still quite a lot of questions left there.
I mean, if you look at the reaction from the markets, I mean, again, it's muted and then you have a little bit of flare-ups as they're trying to digest. I had understood that this budget was never going to be growth positive. So is it in locksteps? You kind of, try and deal with it now, keep the show on the road, and then you take bolder measures further down the road?
Yeah, that seems to be very much the case. So kind of like spend now and tax later, and these things are being pushed out into further years. So there's a lot of uncertainty around that. And of course, with so many measures, lots of this sort of smorgasbord approach, which has been touted, where we have lots of little tweaks, it's not really certain how this will filter down into the economy and affect things later on. Also, it is the Thanksgiving holiday, so liquidity is going to be a bit lower. So any moves that happen, they might be exacerbated, and it might take a few days for this to properly filter through the market. So there's still a lot going on, still a lot to digest, questions over growth and the measures and getting through it all. So we'll see how it plays out in the next couple of days for sure.
Yeah, you're absolutely right. Volumes are muted, so you could see some flare-ups out of nowhere. Kit, as always, thank you so much. Kit Reese there, our co-editor of Bloomberg Markets Today. Now, to discuss the impact of the budget, let's get back to Claudia Panseri from UBS. Claudia, I mean, your take, again, the market, I guess, is now doing a bit of yoga. They're saying, okay, let's see what happens next. And she kind of calibrated, the chancellor calibrated so that there were no huge surprises.
So I think there are two elements which are quite positive. And I mean, we would love this kind of budget in France and this fiscal room. The first one is the deficit trajectory. So the deficit trajectory is going down. So that is very positive. And the second one is bond issuance. When you think about the market would have been expect much more bond issuance for next year, the reaction will have been negative. And these two elements are taking positively from the fixed income investor. The third element probably is about the Bank of England. I've heard many comments saying that the economy will slow down, but at the same time you have a BOE which will cut rate in December, and then still, according to our scenario, 2 times next year. So I think the risk of growth is offset by monetary policy. So on one side you have some fiscal, let's say, discipline, and on the other side, you have a monetary policy able to offset the risk on growth. So this is the reason why the market has been reacting well yesterday.
Yeah, and Claudia, I mean, to your very good point, the OBR was also saying that, these plans will basically knock off some 0.5 percentage points off inflation in the second quarter of next year. So was this sought out to give a helping hand to the BOE?
Yeah, exactly. That is also the point. The implementation of the different tools which have been used to push down inflation, that will be positive and will push the BOE cutting rates, which is not always expected by the market. So you may have the short-term end of the yield curve moving down a bit, and that will help as well, to balance the risk I was mentioning before about growth. And everyone is mentioning that there will be an impact on growth because of the rise on tax. I mean, once again, I think the UK situation is much better than the French one.
Yes, it's always relative. Claudia, thank you so much for joining us. Claudia Panseri, Chief Investment Officer, France for UBS Wealth Management. We'll talk extensively about France as well. Coming up, we speak to the President of the European Bank for Reconstruction and Development on Ukraine's IMF deal. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The conversations that matter, the insights you need. This is the Pulse, and I'm Francie Lacqua here in London. Now, at least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent Min Min Lo has the latest from the scene.
I'm right here at the scene of the fire in Tai Po, the most devastating fire that Hong Kong has experienced since 1962. It started yesterday at 3 p.m. We're well into the second day now, and yet firefighters are still trying to put out the fire. Rescue efforts are ongoing, and the crux of the issue is what exactly causes fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards. They found flammable materials like styrofoam boards sealing some of the windows, and they have arrested 3 people from the engineering firm for manslaughter and gross negligence. And residents certainly are demanding answers from the government as to why this was allowed to happen. Many of the residents are just completely shocked and heartbroken. They're figuring out what is the longer-term housing situation, and the authorities are now converting some schools in the vicinity into temporary shelters for them. But it's going to be a long, harrowing night for many of these displaced residents. Min Min Lo, Bloomberg News, Hong Kong.
Well, that's our China correspondent Min Min Lo. Now, 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials say a gunman was taken into custody after another guardsman returned fire and moved in to stop him. President Trump was in Florida at the time, but has ordered an additional 500 troops deployed to the nation's capital.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
Now, Puma is the biggest gainer on the Stock 600 today, following news that the Chinese sportswear company Anta Sports is believed to be amongst the firms exploring a potential takeover. Sources say that Anta, which is listed in Hong Kong and owns brands including Fila, has been working with an advisor to evaluate a bid for Puma, whose shares have fallen more than 60% this year. Now, let's bring in our Manuel Baigori, our team leader for Asia Deals in Hong Kong. Manuel, Puma shares have really struggled this year. So what's the appeal for a Chinese bidder?
Francine, the appeal is mostly to continue to expand and to get hold of a very iconic global brand such as Puma. As you well said, the company has been struggling. That's been reflected in the share price this last year. The company also had a new CEO in place. They held a capital markets day a couple of weeks ago. with the expectation that a new strategy and a focus on new marketing and new products would rev up and kind of like create a little bit of a catalyst for the stock, but that doesn't seem to play out that well so far. Now the question is, at what price this company can trade? Shareholders, including the Pinot family, who have a significant stake in the company, obviously they have very high price expectations. Just a year ago, the stock was trading at 45 euros a share versus 15 euros a share, excluding the bump today, following the exclusive from Bloomberg News. So there is a bit of a gap there that needs to be bridged between potential buyers and sellers. Meanwhile, bidders including Anta and Li-Ning, two very well-known sportswear companies in China, as well as ASICS, are doing some preliminary work, talking to prospective advisors, also potential partners, including private equity firms and financing banks, to see if they can put together a bid. So it's slowly moving. There is work behind the scenes being done, but there is a very wide bid-ask gap there that will have, to be addressed and may become a challenge.
Yeah. Manuel, thank you so much, as always, for that briefing. Manuel Bagori there, our team leader for Asia deals in Hong Kong. Now, the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. This comes as the repercussions of the war are being felt economically in both Ukraine and Russia. Now, we're joined by Odile Renaud-Basso, president of the European Bank for Reconstruction and Development. Thank you, as always, for joining us. I mean, it's been a complicated situation, frankly, for Ukraine over the last 2 weeks, with the comings and goings with the U.S., the allegations of corruption, very close also to President Zelensky. And then we have the news that actually at the staff level, there could be this big loan from the IMF. How much of this is a game changer?
I think this is a very positive news. I was in Ukraine last week when the IMF was discussing with the authorities, and I think that having this agreement at the staff level on a macroeconomic program for Ukraine is very positive, because it creates an anchor for the policies to be implemented and for supporting countries to continue to support Ukraine in its difficult situation.
Odile, this is basically a 48-month arrangement, right? Under the extended fund facility, so they could potentially, access $8 billion, but there are conditions attached, including adequate financing assurances from donors. What does that mean for what Ukraine actually has to do in terms of concrete steps?
So there are two elements. The first one is indeed they need financial contribution to support the program, as it was in the previous program, and that's where the EU funding is very important, because the European Union is one of the key funding partner for Ukraine program, a macroeconomic program, together with other G7 countries such as Canada, Japan, and so forth. So setting the support is very important. And the second one is a policy that Ukrainians need to continue to implement in terms of reform, anti-corruption, functioning bodies, progress in the governance of the state-owned enterprise, but also fiscal efforts in order to improve tax collection, enhance the tax base, and so forth, so as to have also the capacity to provide more internal resources to finance the big deficit and the war effort.
How delicate is the situation on the ground, given all of these corruption allegations?
So the situation is delicate, first of all, because of the war, and a lot of attacks on civilian infrastructure, on energy infrastructure, so a lot, the situation is, for example, on access to electricity, access to energy, very challenging. This is our top priority at the bank, to ensure that Ukraine has the capacity to support the winter through, for example, providing heating to people, and we work a lot with the authorities on an additional support for the gas company in order to be able to buy more gas and to have supply through the winter, but also build up more generation capacity. So the energy situation is very, very fragile and very worrying. And of course, for people living in Ukraine, it's a very difficult situation because you have a lot of alerts, a lot of civilian victims, and of course the situation of the front is also difficult. But overall, the resilience, the determination of the country is important. You mentioned the issue of corruption. Indeed, there is this investigation going on. On the positive side, having effective anti-corruption body that can investigate freely, put on the public and pursue the people who have been at the core of it is very important. And this is a very positive step. The role of civil society in Ukraine to support also this anti-corruption bodies and so forth is key, as we've seen in the summer. And this is a good progress. And this will need to be followed up, of course.
Have you? I was going to ask because this corruption scandal, has rattled a lot of Western investors, has rattled a lot of Western allies. Have you thought about it differently in terms of putting actually things in place to make sure that it's ring-fenced?
So we've worked already, for a long time on governance, for example, because this case is related to one state-owned enterprise, Energoatom, who is in the nuclear sector, and so state-owned company governance was for us a key priority, has been a key priority, and in the last few years we made some progress. This shows that there is further progress to be done in terms of how the companies are managed, what is the role of the board, what is the role of the government, transparency of procurement, and this is an area where we have worked with a number of companies on top of our own rules. Where we invest in these companies, we have very strict procurement system that we control. So, but on top of that, in the management of the companies, I think further rules are important, and this is an area we will continue to focus upon.
Can you give me an idea of timeline? So again, the IMF's decision, as you laid out, is good because it comes amid some battlefield setbacks, because it comes also under this U.S. pressure to accept, these peace talks with Russia. So does the war need to end before access to these facilities, or can you start rebuilding at the same time as fighting?
Now, the program is built on the premises of a continued war, I think, and they said very clearly that this will be adjusted if the war is over. So I think that's the underlying assumption. What will be very important for the program to be approved by the governance body of the IMF, which is the board, is that Ukraine needs to have the financial instruments, and that's where the decision-making in the EU about access, for example, to this reparation loan, building upon the existing foreign asset, will be very important. So the timeline for this decision on funding is absolutely key.
And for the EBRD, how much are you going to get involved in this?
So we are not directly involved because we have our own capacity to fund Ukraine thanks to our own capital and donor support for our financing. So we do not cover the budget gap of Ukraine. We are supporting the real economy, state-owned enterprise, access to energy, but also mostly private sector. And this is, of course, having an IMF program is a good framework, but our funding is not directly related to the IMF program.
Odile, thank you so much for joining us. Odile Renaud-Basso, they're president of the European Bank for Reconstruction and Development, with a very, very important conversation on Ukraine and, of course, the rebuilding and the war there. Coming up, JP Morgan announces plans to build a huge new tower in London's Canary Wharf. Details next, and this is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks gain as traders raise bets that the Fed will cut rates next month. Traders also locking in a December cut by the Bank of England as the pain of tax rises in the budget is postponed. Shares in Puma soar on reports that China's Antisports is considering a takeover for the German company. Plus, JP Morgan announces plans to build a new tower in Canary Wharf in what will be the UK's largest office building. Now, the former Goldman Sachs chief economist, Jim O'Neill, is amongst those who've criticized the UK budget for doing little to spur economic growth. The Chancellor, Rachel Reeves, unveiled £26 billion worth of tax rises. Well, she told Lizzie Burden that the move will raise revenue to support economic growth.
Last year, I had to close the black hole in the public finances left by the Conservatives. In the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
UK Chancellor Rachel Reeves there. Now we're joined by Bruno Scarica, Chief UK Economist at Morgan Stanley, and Maren Somerset-Webb, Editor-at-Large at Bloomberg UK Wealth. Maren also just did a fabulous event upstairs on our 8th floor with many questions from many audience members. So thank you both for joining us to try and understand exactly what was in the budget. What's the question you got the most, Maren? Because it feels like the Chancellor landed the plane, yep. But actually we don't know how she's going to put growth to the test.
Yeah, interesting. This is the big question. Is there anything in there that would drive growth? The answer, of course, being no. And so one of the questions that we kept getting from the audience, and I think if we'd been able to go on another half an hour, we would have heard it again and again and again. The question kept me effectively is, what's in it for me? What are my incentives? And we had a couple of questions from younger people, the Henrys, high earners, not rich yet, saying, why would I stay? What do I get out of this? My marginal tax rate with my student loan is 51%. Those thresholds have been frozen. My income tax thresholds are frozen. I just pay more and more and more and more and more. And we're at this point where the income tax revenues are more or less equal to welfare spend. And it's a bad feel for ambitious young people.
Yeah, it's a bad feel, but at the same time, Bruna, it could have been much worse, right? Some of the things that were kind of thrown out there in the last month or not really spooked the markets, and for the moment, the markets are doing yoga and taking a big breath.
Yeah, I think gilts had a good day yesterday, certainly the longer end of the curve, precisely, I think, because the feeling was, okay, a bit better than expected, and the DMO did a lot of heavy lifting there in terms of the issuance profile and obviously the gilt remit numbers for this year in particular, which are things that the market focuses on, just the very near term. Let's take it one step at a time. I think in terms of what was really surprising to me is the degree to which we entered this budget speculation period. I think the real kickoff was NISR coming out saying this fiscal gap could be as high as £50 billion, and in the end, the OBR erosion was £6 billion. It was not much at all, right? We didn't even have to have any tax hikes if we had not had the increase in headroom and spending, and we still would have made it to the balanced current budget in the medium term. I was quite surprised by that, I have to say.
Yeah, it was interesting. We also spoke to someone from UBS about 15 minutes ago, and she's like, well, it's much better than France. France is terrible at the moment because they don't really have a budget and they certainly don't have enough fiscal space. Is there anything good that came out of it?
I mean, interesting, better than expected and not as bad as France. They're not great. I mean, there were a couple of signals. One of the things that we've been lobbying for ages on the podcast is constantly talking about stamp duty in the UK and how we have, basically one of the highest stamp duties globally, and it's really got to go. And my big hope was that she would step up to the plate and abolish stamp duty in the equity markets. That would have been a great step. Now, she didn't do that, but she sent a sort of, limp little signal that, if you IPO in the UK, then there won't be stamp duty for the 3 years. It's something. It's the beginning of a recognition that she is occasionally listening, if not taking the best actions, listening a little bit. So, there's a little positive.
I mean, to your point, it kind of felt like it was a chaotic month, frankly, for the last, 4 to 5 weeks. Yeah. It kind of felt like she didn't, it wasn't bold, right? No. It was kind of middle down the road, and let's push back everything to next year.
Exactly. As we say, there was nothing in there for growth. There was nothing in there that really recognized our productivity problem. There was nothing in there that incentivized creative entrepreneurs to just keep going. So yes, it felt very much like, and I think a lot of people have said there's a budget to let Rachel Reeves keep her job as opposed to a budget for the long-term good of the country. And that, of course, is disappointing. She had an opportunity, particularly with all the trailing, to do something bold, and she didn't.
I mean, the governor, Andrew Bailey, is probably a little bit relieved, because if you look at the inflation, again, it's kind of, the markets now really expect a cut in December.
Yes, so I think that's pretty nailed on. I would say, though, that probability of that rate cut did increase with the labour market data. That was really what kind of solidified those expectations in the aftermath of November. Unemployment rate at 5%. This is something that, given the guidance in November, I think market participants thought, okay, the BOE will take this seriously and lean against that. I think one takeaway from yesterday, this particular idea of not much news here. I think in terms of next year, if you look at it, we had, I think, the direct effect of government decisions is an increase in borrowing of about £3.9 billion. On a £3 trillion pound economy, this is really not much. And the takeaway was, well, for the Bank of England, is there really any news here? I would argue that the drop in inflation probably is marginal positive news for the rate cutting cycle. But in terms of that kind of extra fiscal drag that maybe frees up the path for the market to reprice that very front end, that obviously wasn't there yesterday.
I know in terms of expectations, right? I mean, there's not growth yet. Does a cut from the Bank of England December, in December, and then possibly 1 or 2 more next year help with growth?
Of course it helps. Of course it helps.
Meaningfully?
Well, we'll see, won't we? Because we don't know what the other effects will be. And as I say, you move into an era where you have a historically high tax burden, you have a historically high welfare bill, and you have no obvious plan beyond that wasn't so bad, the Bank of England can cut rates a bit now. It's not enough, is it?
No, I mean, it's not enough, but, one of the other things that I know you've been looking at on your podcast is, do billionaires exit? And actually, is there if you look at the non-doms, is there a huge pitfall because people have left and the UK seems uninvestable at the moment?
Yes, I mean, this is obviously a problem. The non-doms leaving, that's about inheritance tax. And we talked about this on the podcast this morning. It's about nobody wanting, obviously, to have to give 40% of their estate to the UK government because they lived in the UK for 10 years. This is something that would be quite easy to fiddle with, quite easy to reverse, but we haven't done that. So the incentive remains for the very rich to leave the UK. The incentive remains for well-off foreigners who might invest in the UK to not invest in the UK. But the worrying thing for me, as I think I said earlier, is that we're increasing the incentives for our ambitious, relatively well-off young people to go and build their long-term wealth somewhere else.
And Bruna, overall, because this didn't move the needle at all, do you think the market can go back to it in 1 or 2 weeks and actually say, I'm better off elsewhere?
Yeah, I mean, I think it really depends on your view on the economy next year, right? So there's a lot of bearishness on UK growth, but if you think about it in terms of what's priced in the front end of the UK curve, it's kind of 2 rate cuts. It's not even as much as we're seeing in the US, where I don't think the general consensus is as bearish around near-term growth prospects. So I am a little bit more bearish on UK growth than the OBR next year, but that's really why my call on the Bank of England is more aggressive than what the market is pricing. And I think we do need to separate the structural growth challenges, which I agree with, right? 1.5% is just not enough for an economy like the UK, with the cyclical growth challenges, which are really very simple. Savings rate in UK is very high. Cut interest rates, and it's going to be lower. Consumers will spend. So it's really about clearing that path for the BOE to cut, and we'll see whether the Chancellor has done enough with the disinflation.
Bruna, is it just a win because, the bond vigilantes have been kept at bay?
Well, yeah, I mean, I think obviously the main kind of focus yesterday was really what will the bond market do. I do have to say it's been a really volatile period, and we had a very, very big move in the aftermath of the income tax U-turn, right? Or the apparent income tax U-turn, I should say. So I think it's important to look at the market moves in the context of what we had really last week as well. Yeah.
Maren's looking at me like you're really clutching at straws here. She'll let rip on her podcast. Thank you for joining us. Bruna Scarrica, Chief UK Economist at Morgan Stanley, Maren Somerset Webb, Editor-at-Large at Bloomberg UK Wealth. And do check out Maren's podcast, Maren Talks Money, in which she gives her take on your money and the world of investments every week. This week is particularly good and spicy. Now, JP Morgan planning to build a new 3 million square foot tower in London that would serve as its principal UK headquarters and could contribute nearly £10 billion to the local economy over 6 years. Now, the bank says the new site would accommodate up to 12,000 people and become its most significant presence in the region. Let's bring in Jack Sitters, our team leader for real estate and European investment. Jack, I mean, this is a surprise announcement from JP Morgan. How big of a vote of confidence is it, A, in Canary Wharf and the UK just one day after the budget?
Yeah, I mean, absolutely. It's huge. And I guess if we take a step back here and, if you'd asked me, or indeed if you'd asked Sir George Jacobescu, the architect of Canary Wharf, the former chairman and chief executive of Canary Wharf, who's advising JP Morgan personally on this, if you'd asked him best part of 10 years ago when the UK voted for Brexit, would JP Morgan be building what is undoubtedly going to be London's biggest office building, one of the biggest office buildings in Europe, in Canary Wharf, I suspect he would have probably said maybe not. There's a decent risk that they don't. But, we had a story the day. It's become clear since COVID and since Jamie Dimon, really leading the charge to get people back to their desks. They've been short on space. We knew that. We knew they were looking at options. We'd reported that they'd drafted in Foster and Partners to look at new plans. But, for Canary, it's huge. They could have left. They could have gone back to the city. I think one of the things it shows us is just how few options there are for big organisations who want a huge new office tower. There just really aren't any being built. Developers have had to put up with Brexit. They've had to put up with COVID. They've had to put up with higher interest rates. There aren't those buildings available. And so JP Morgan has really kind of gone down the maximalist option. They've owned this site for a very long time. They're now going to dust it off and they're going to build an absolutely enormous new HQ there, which will be great for Canary Wharf because that's 12,000 workers who are going to be using the restaurants, the bars, the shopping centres there.
Yeah, so, Jack, what does it also say about Jamie Dimon's legacy? He's put his stamp on Manhattan. And it does feel like he's now doing the same in London.
Yeah, absolutely. Yeah, well, we've got Diamond Town in Midtown Manhattan now, the big new office headquarters, and a couple of other buildings around it. And we often, when speculating about his legacy, we talk about 5 years. Well, this building is going to take 6 years to deliver. Yeah, you'd be a brave person to bet that he's not there to cut the ribbon when it's time to open it. And having fully put his imprint on London as well as on New York.
Thank you, Jack Sitters there, who leads Bloomberg's coverage of real estate and European investing. Coming up, U.S. tariffs reshape global trade. We talk to the company tasked with making sure that inventories stay stocked, that your parcels still arrive on time. That's next, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Pentagon is accusing major Chinese tech companies of aiding the country's military. The U.S. Department is recommending that Alibaba, Baidu, BYD, and others should be added to an official list. Now, for more, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, as always, thank you so much for joining us. What would it mean for these major U.S. tech firms to be included on the Pentagon list, and how have they actually been responding?
Yeah, I mean, to be honest, I don't think for any of these companies it would make a massive difference to kind of their business, because they're not really kind of that big in the US. And I think you have to kind of look at this more in the kind of broader context of the geopolitical tensions between the US and China. I think clearly, the US continues to try to find ways to put a brake on China's commercial military technology developments, and also these companies, do supply and do kind of leverage things that are going on in the US market. Obviously, Alibaba and Baidu in particular, kind of very much in the AI race. So anything that the US can do to dissuade US companies from working with them or supplying key technology to them, I think is going to help the US administration's goal to kind of keep a brake on China's development.
Matt, I mean, we've also had this flurry of, Alibaba stories in the past days, a Quen chat box, and now they're making a rare foray into consumer hardware. Yeah. How should we read this?
Yeah, with the glasses, look very much like the kind of Meta AI glasses. I think this is an inevitable evolution. They've been very popular in the US and European markets. It's not surprising that there's a good market opportunity for these in China too. And the technology is there and readily available and can be delivered at a good price point. So, for comparison, the Meta glasses cost about $800. These ones, the Alibaba ones, probably about $540, $550. So, coming in at a cheaper price and probably as good, if maybe in some ways, maybe a little bit better, given what we see in, for example, the smartphone market.
I've tried actually the Apple Vision ones that were like mind-blowing.
Yeah.
Take a little bit of getting
These are
used
quite
to.
different because, they're continuing to allow you to kind of act as normal and just see something overlaid.
There you go, secret spy stuff. Big tech players from both the US and China are warning of potential memory chip supply shortages. How big of a problem is that?
Potentially quite significant. Obviously, we saw, I'm going to say, was it yesterday? I think it was yesterday, Hewlett-Packard, maybe the night before, announced between 4,000 and 6,000 job cuts. That's maybe about 10% of their workforce. And they specifically called out pressure on their costs from memory chips. There's huge demand for memory chips from lots of, pretty much everything these days has memory chips in it. But the AI momentum has kind of really tapping demand, and manufacturers are shifting their capability to support that AI race. So we're going to see that. Typically memory is about 15 to 20% of a PC, and some of these companies like Dell are talking about 50% increases in cost. So you could see quite a significant increase in the cost that they're inevitably going to have to pass on to the end customer. So we could well see prices rise for key technology, whether it's consumer or enterprise servers and PCs. So I think it is quite a significant issue. And, we see the memory market go through these kind of supply and demand kind of tensions from time to time, and I think it's just another one of those coming through.
Matt, thank you so much. As ever, Matt Bloxham there from Bloomberg Intelligence. Now, we're almost a year into Donald Trump's presidency, and tariffs will dominate his economic agenda. With tariff rates changing constantly and trade routes being redrawn, how do companies ensure they have stable logistics and supply chains? Well, joining us now to discuss all this is Oscar de Bock, Chief Executive of DHL Global Forwarding Freight, which arranges the transportation of cargo on behalf of global business customers. Oscar de Bock, thank you so much for joining us. I mean, you do the real stuff. We talk about this every day, but you have to take it from point A, point B with all the geopolitics and, the rewiring of global trade. So first of all, where do you see flows declining, and where are they actually increasing?
Yeah, no, and we not only have to do from A to B, but we also have to customs clear them as well, which is obviously where the complexity really lies. But indeed, the flows. To start with, what is interesting to see is that the overall global trade is still growing. But the flows themselves are drastically changing over time. And also because of the changes of supply chains that companies are setting up, because obviously everybody has to respond in some shape or form. And that actually happened already from 19 onwards. And the overall, from just in time, we're now actually to making sure that you actually have products available in the right market for the right rates. But so the other impact, which is an interesting one, is that the average kilometer traveled per product is fast increasing overall as well. So you see,
is this because of trade routes? Because they're changing?
I'll give you some simple examples. For instance, where maybe in the beginning, this is a technology example where you would have produced from China for the US. Now that actually would then be for China to Europe, and then from Vietnam to the US. Or an automotive example, which I thought was even more interesting, is what was originally some from China, US, and then actually became a factory in the Middle East that now does the US, and then actually from China to the Middle East. So you see that there's a colleague of mine always calls it that it's like trade is like water. It finds its way.
I heard the IMF managing director also said that, and I think people kind of forget it's just more expensive. How much more expensive is it to ship from, just your general cargo box? Has it increased significantly?
If you come back to the point I made earlier about the average kilometer driven per product, and
it's
so
more
yes,
expensive,
right? So that means that you spend you spend more over time on logistics. Also, the higher complexity that we are creating. I mean, customs clearance, to take one example, the amount of workload on customs clearance has increased drastically. That translates into cost as well. But what is an important element there is the whole digitalization agenda there, because in order to beat the cost part, it's also important to use digital tools. Yes, we all throw in AI and all that, but for instance, on customs clearance, if you're interested, I have a very specific example where you can now see that through using agentic AI, we can increase the productivity on customs clearance by about 20%.
That's impressive.
And that can translate into capacity.
Oscar, you're also a great barometer, basically, of the current state of the global economy. So what are you seeing? Are consumer spending, are businesses weathering the tariff, but also tech transformations?
Yeah, the interesting part is that, one is in the old world, we used to have seasonalities, right? You would have, of course, end of the year, you would have the peak, you have the Easter peak. You don't see that anymore now because the peaks...
So it's all the time?
Well, no, the thing is that you have lots of peaks because every time that there's some kind of announcement of some kind of new regulation, then there's an acceleration of shipment. But then the stock is already there. And then it's... So this year, you've seen complete different trends in ups and downs on capacity than what you would normally see. And therefore, you don't see the same high season, peak season that you would otherwise see.
That's so interesting. So do you think this is to stay? And if you look at the first quarter of 2026, how are you doing in terms of demand and pricing?
Yeah, the way we look at 26 is sort of a careful optimism, as in it will probably be more stable. But I'm very careful saying that because ever since I'm part of the board of DHL Group since 2019, every 6 months there was something unexpected that we could not foresee, and I think that is probably something there to stay. But putting that aside, the way we look at next year is that it is sort of slightly better than this year, flattish.
So give me a sense of what sectors you think will see the most weakness and the most strength.
Yeah, so you see, when you look at it sector specific, you have sectors in transition. So for instance, you have the healthcare sector, which is very much in transition from traditional prescriptive medication towards patient-specific medication, which has a whole different logistic flow. That sector, whatever happens with trade, is a sector that is evolving and growing. You see data centers, which is mind-blowing, the amount of investments that are being done in data centers, the point that was made earlier on semicons. Also there you see a major growth in semiconductors because, as was stated, semiconductors sit in everything at the moment. So data centers, because there's an enormous speed of investment and a high complexity of logistics to build that. We basically fly all that, and it has to be fast, and it has to be high quality level. So so that's another sector. On the other hand, you have the automotive sector, which is a sector definitely in transition, not only where it's produced, who's winning the game, but also electric vehicles have less parts than and have a complete different setting than traditional vehicles. So there you see a big change.
Oscar, we're also expecting shipping lines to restart returning to the Red Sea. What does that mean for global trade?
Returning to?
The Red Sea?
Yeah. So that's the interesting question, right? When is it going to happen?
And what happens?
And what's the implication of it? So the when, I leave that, obviously, because that's more a political question, because that all depends on stability. When it does happen, it has, there's a lot of different scenarios that you can look at on what will actually happen. Because one, of course, there's between 10 and 15 days less travel time. So that means that you have an increase of capacity, but you also suddenly then have an increase of volume that goes into the same European ports. So that will have an implication on supply chain. So I think this effect that you've seen after COVID, for instance, you're also going to see probably here, because you need a whole supply chain that needs to stabilize, because consumer confidence will increase, most likely, so demand will increase at the same time, and then it all depends on what happens when, on how this ripple effect in supply chains will actually happen.
So interesting. Thank you so much, Oscar de Bock. There, we covered a lot of ground, and I could talk to you for a lot longer because it's always fascinating to understand exactly how this changes. Of course, Oscar de Bock from DHL. Now, there's quite a lot going on in the markets. Stocks overall heading for the longest streak of gains this month. A couple of caveats. Let's wait to see exactly what happens tomorrow and then Monday against Thanksgiving in the U.S. Volumes may a little bit short, so you can have a little bit of quirky reactions. Bitcoin trading above $91,000 for the first time in a week. Gold little changed, dollar pausing a 2-day retreat. Up next, Bloomberg Markets, and this is Bloomberg.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
So I know from owning a sports team that owning one team takes a lot of energy and time.
Tell me about it, yeah.
So you decided after you bought the Washington Spirits to buy some other soccer teams. So you bought stakes in a team in England, is that right?
Yes. I bought a team called London City Lionesses, and that is the only one of the two teams in the entire, potentially Great Britain, that are independent. 99% of the teams in Europe are part of the men's team. But this is one of the only two teams that was independent.
So now you have two soccer teams, one in England and one in the United States. So I would think for most people that might be enough, but you decide to buy a team in France as well?
Yes. Olympique Lyonnais Feminine is actually the best women's team in the history of women's football. In terms of how many trophies the team has won, they are the 8 times champions of the Pan-European League, and I can't even count how many times they won the French domestic league, the most successful team. I want to professionalize women's sports, right? I don't want people to think that somehow women's sports is a charity or a corporate DEI project. This is a legitimate entertainment product, and it is a business.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, good morning, everyone. I'm Francine Lacroix, and welcome to Bloomberg Markets. Coming up, global stocks come close to erasing all of November's losses. Traders raising bets that the Fed will cut rates next month. The UK Chancellor delivers a budget that postpones most of the pain from tax rises until the end of the decade. A Bank of England rate cut next month is all but locked in. And the Kremlin saying that the U.S. presidential envoy Steve Witkoff will lead a delegation for Ukraine peace talks in Russia next week. The Pentagon also finding Alibaba should be added to a list of companies that aid the Chinese military. That's according to a letter to Congress. Now, there is quite a lot going on. Happy Thanksgiving to those that celebrate. If you look at the markets, they're maybe celebrating a little bit, or certainly there's nothing hugely wrong with them after the Bank of England path has maybe been eased thanks to what Rachel Reeves, the Chancellor, did yesterday. Now, look, if you look at a gauge of global equities, they seem pretty much on track for its longest winning streak this month, reflecting of the strength of this recovery fueled by bets that the Fed will cut interest rates sooner than previously thought. Bitcoin also trading above 91,000 for the first time in a week. Maybe it's another sign of this risk appetite returning. Again, more expectations of the Fed easing, and that sends a sign of relief to the markets. Now, the UK Chancellor, Rachel Reeves, did enough in her budget to help her and the Prime Minister, Keir Starmer, survive, with markets also responding positively. Well, Reeves boosted her fiscal buffer to $22 billion, with tax rises totaling $26 billion.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Well, Jane Foley of Rabobank saying, while there may be some room for a short covering, given the lack of surprises, the UK's backdrop of slow growth, sticky inflation, and weak productivity is still suggestive of a gloomy economic backdrop. And I am glad to say that Jane
joins us for more. Jane, I mean, I love this quote because you kind of encapsulate in a couple of sentences some of the anxiousness that we're seeing in the markets. I mean, the problem is growth. So she landed the plane, right? There's no disaster. There's no, after like 5 weeks of turmoil, but how does this country grow?
And that's really the problem now, because like you said, she landed the plane. She had a difficult job to do, because we all know she had to, appease the Labour backbenchers, and she had to appease the bond market too, and the electorate. Well, maybe she hasn't really done that, but certainly there was no great fallout, and I think there was a little bit of relief in the gilts market, maybe in sterling on the back of that yesterday. But now we have to look ahead. And what we're hearing from the business community is that where were the growth incentives here? Where was the incentives for investment here? And perhaps she didn't really provide that. And there has already been a rift, we know, between the business community and the Chancellor over the last year because of the tax hikes she forced upon them a year ago. And today, I think there's a bit of disappointment that there isn't more of an olive branch to the business community in order for them to really promote investment and therefore growth.
But Jane, how radical would she have? I mean, there's nothing radical in this, right? And I know some of the growth things could have been the stamp duty. There could have been something else. Was there a danger that we're not happy with anything, because that would have been also really unsettling?
Well, exactly, and that was part of the problem, because she had so many people to try and satisfy in a way that she could not perhaps have gone radical, because that would have raised the risk that she would have left one party, really, upset about this. The Labour MPs, of course, that was really important, and that's why she announced the end of the childcare cap. Or children's allowance for them. That is, according to some surveys, an unpopular policy, because it's perceived that she's really gone for welfare payments and therefore, taxing for welfare payments. That is one perception from, one band of the electorate out there. So it was tough, and I think to do something really more extravagant on taxes could have been hard. That said, we now have a much more complex web of taxation, and that's not necessarily something that business will appreciate.
Jane, I mean, is there a concern? I guess there's a helping hand for the Bank of England, or certainly there's not a huge difference in terms of inflation expectations. I think it adds some 0.5 percentage points or something like that. So does it really help the Bank of England, or is it kind of, BOE neutral?
Well, there is a little bit of a stone in the shoe, because the OBR have increased their inflation forecast for this year, and that's, perhaps a little bit disappointing. But that said, we did have the Chancellor appearing to comprehend that fiscal policy does have a weight on inflation. And of course, last year, we didn't really have that because of, the Nix insurance for employers tax hikes that we had last year, the wage increases. That was passed through in employers' costs through into prices. So that was an inflationary budget. This year, we haven't had that. You're quite right. We had announcements before the budget that she was going to freeze prescriptions, that she was going to freeze some train fares for some people, and also another freeze on fuel duty. So that will help moderate the inflation outlook. It hasn't really given us any new news over what we thought a few days ago, but the market, all the same, is still pretty hopeful that we might get that interest rate cut from the Bank of England in December.
Jane, let's also bring on our Stephanie Flanders, Head of Economics and Government. Stephanie, you're always on the money, Stephanie, on what you think the Bank of England and actually what the Chancellor should do going forward. What was your main key takeaway from what we heard yesterday?
Oh, you have such a generous memory, Francine. I mean, I think we have seen the Chancellor take some short-term steps, as you've just been hearing, that actually do make it easier for the Bank of England to cut rates. I think that it does clear the way, as our economists have said this morning, for a Bank of England rate cut in December, when they were obviously waiting to see what was in the budget. But I did think, the very kind of calm reaction of the gilt markets to the budget yesterday suggested that she'd really left a missed opportunity there for a real bump in the UK bond market. I think you could have shaved, with a single budget, you could have shaved a significant chunk off that 40 basis point gap in 10-year yields with the US, which, as you know, is historically unusual, by just showing that she was able to take some difficult decisions on upfront tax increases. But once again, those have been pushed to the longer term. So although she did everything she needed to do, there was an opportunity that she definitely missed to get a benefit that would have benefited the Treasury to the tune of billions of dollars in terms of pounds and dollars in terms of debt service.
Stephanie, can the Chancellor come back in 6 months? I mean, was this about actually saving her job and her boss's job? And then can she come back in 6 months and offer more radical solutions to grow this economy?
I mean, one of the big changes, and it was disappointing that we didn't see more for growth, the government's done quite a good job of hiding the things that they're doing at the micro level that could be quite significant long-term for improving growth. You know, making it easier to build things, including big infrastructure projects, nuclear power stations, all these things. There is work underway, which they, I think possibly because it's quite boring and meticulous, they're doing quite a good job of hiding from the British public. But the other thing, as you know, that they did, she did in the budget yesterday, was to say there really is only going to be one big fiscal event a year. So at the very least, there's less room for this kind of every 6-month pattern of us constantly sort of asking, you know, what's going to change and the uncertainty that brings to the tax system and to investors. So I think, you know, that's a change that's been welcomed and encouraged by the International Monetary Fund. I think that will be helpful for stability. But gosh, I wish she'd use this Labour majority and the stability they have before the next election to be a bit more ambitious on growth.
Stephanie, what are you hearing from chief executives? I mean, a lot of them are saying, look, they're concerned about, the tax rises, business rates, the impact of specific sectors such as hospitality and insurance. But others say, look, there's support for small businesses, there's digitizing the economy that could benefit them.
Yeah, I think there's some sort of, if you look at the UK, some of the underlying fundamentals, they're not great, but in a world where you're being compared with France that hasn't been able to pass a budget for the last year, and many other countries that are really struggling to pursue basic prudent policies, you know, the UK has some advantages, and we're seeing private investment actually pick up. Even as these businesses complain, there's an increase in private investment over a year ago, and we've also seen this government sustain public investment relative when in fact it was on a downward path, the plans that they inherited. So there are some, if you're a big business, I think you're looking to the longer term and potentially, at least in terms of your day-to-day decisions, being a bit more positive about the UK, even as you complain to anybody who asks you that this is a terrible government that's taxing you too much. I think both things can be true. And we saw today, of course, JP Morgan announced that it's going to be building a building that's it's going to take 12,000 employees in Canary Wharf.
Yeah, and that's a big vote of confidence in the UK and Canary Wharf. Jane, I mean, we also had Maren Somerset Webb, who was talking about, Stephanie's good point is that, so it is better than France, and that would maybe be a relief for the markets. But is it really good enough for gilts and sterling if you say, well, look, we're in a better shape budget-wise than France, and the budget was also not as bad as it could have been?
So there's a big difference, really from sterling's point of view, from between the UK and France, and that is that the UK has a big current account deficit. Of course, in France, it's more or less balanced, and that makes a big difference about who's funding the budget deficit and to what extent they can get away with poor fiscal positions. So, for instance, if we look at Japan, their debt is huge as a percentage of GDP, but they have an enormous pile of domestic savers. So, if you like, they have protection from that. And similarly, France has got a bit more protection because it's got this balanced current account position. The UK has, according to previous Bank of England governor, this reliance on the kindness of savers, and that means that the gilt market is going to always be, as long as that position maintains, more sensitive to bad news. And this is why we have this premium on the long end of the curve over and above other peers, other G10 peers. So this is why this great sensitivity. And as long as international investors, are looking in at sterling, they're sensitive to the fundamentals, well, sterling's going to be more sensitive to that. And that's why you have sterling more sensitive, perhaps, to the shenanigans of the gilt market than you would have, for instance, with the euro and the French budget.
So interesting. Thank you both for joining us. Bloomberg's Stephanie Flanders and Jane Foley of Rabobank. Now, coming up, the latest on that deadly fire in Hong Kong, where hundreds are still missing. This is Bloomberg.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At least 44 people have been killed and hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent Min Min Lo has the latest from the scene.
I'm right here at the scene of the fire in Tai Po, the most devastating fire that Hong Kong has experienced since 1962. It started yesterday at 3 p.m. We're well into the second day now, and yet firefighters are still trying to put out the fire. Rescue efforts are ongoing, and the crux of the issue is what exactly caused this fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards. They found flammable materials like styrofoam boards sealing some of the windows, and they have arrested 3 people from the engineering firm for manslaughter and gross negligence. And residents certainly are demanding answers from the government as to why this was allowed to happen. Many of the residents are just completely shocked and heartbroken. They're figuring out what is the longer-term housing situation, and the authorities are now converting some schools in the vicinity into temporary shelters for them. But it's going to be a long, harrowing night for many of these displaced residents. Min Min Lo, Bloomberg News, Hong Kong.
Bloomberg's China correspondent Min Min Lo. Now, 2 U.S. National Guard troops have been critically wounded in a shooting just blocks from the White House. Officials saying a gunman was taken into custody.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
Well, President Trump is ordering an additional 500 troops deployed to the capital. And the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. Now, this comes as the EU is set to unveil its plan to unlock frozen Russian assets to help Ukraine. As peace talks continue, President Trump has defended his envoy, Steve Witkoff, after claims by Bloomberg News is working with the Kremlin to shape U.S. policy.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Well, Bloomberg's Piotr Skolimowski is in Warsaw. Piotr, first of all, talk to us through the details of this IMF agreement.
Hi, Francine. Indeed. So yesterday we had an agreement on the staff level. IMF has agreed to grant this new loan program to Ukraine worth $8.2 billion. Now, this loan is going to replace the loan that IMF granted in 2023, which was extraordinary move back then because it was the first time that they actually granted a loan to a country at war. So that money ran out and Ukraine went back to IMF to ask for more. And now, obviously, it's great news, but the agreement or the approval that we got from on the staff level still needs to go to the board, which will probably happen in January. And it comes with a lot of strings attached, meaning IMF identified that there is a financing gap that Ukraine has, which is around 140 billion euros over the next 2 years, so over the whole duration of the new program. And this basically raises pressure on EU to come up with that money. And that money is basically depends on whether EU agrees to grant a loan, which is backed by Russian frozen assets, which are mostly frozen in Brussels at the Euroclear. And at this point, a lot depends on that element, as well as a certain decision that Ukraine has to do as well. But pretty much the main point here is whether the EU is going to approve that loan, which it is expected to do at the summit in December.
Is there any chance, Piotr, that this IMF deal will at all affect the situation on the battlefield?
In a way, it could, because obviously, any little help is needed for Ukraine. At this point, what we have to know is that since the second half of this year, all the money that Ukraine relies on, or all the help actually comes from Europe. US is is selling weapons to Ukraine, but it's the Europeans who are paying. So, and the expectations are that Ukraine will run out of money essentially in the second half of next year. So it's an urgent need for money to come through. So IMF is important, but it's just 8 billion. The main or the majority of the funds will have to come from EU, and that's where this agreement is really important. And without that money, there won't be any weapons. So pretty much the pressure is now on EU. There are still holdouts. It's mainly Belgium, which is host for most of these assets, and they did not agree at the previous summit to back that loan. EU is going to, as you said, is going to present new documents, new legal text that will kind of maybe help Brussels or Belgium come around, but the next few weeks will be crucial in that decision.
Piotr, thanks so much for joining us on the very latest, of course, with this IMF loan in Ukraine. Bloomberg's Piotr Skolimowski in Warsaw. Still ahead, JP Morgan investing in Canary Wharf, a sign of confidence, possibly for London and the UK economy. That's next, and this is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GPS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
JP Morgan announcing plans to relocate its UK headquarters to a new tower in Canary Wharf. Now, the building would be the largest in London, standing at 3 million square feet, and could host up to 12,000 employees. Well, joining us now is Jack Sitters with the latest. Jack, this is like an artist impression. It looks beautiful. Same architect as the one that did their place in New York. This is a surprise announcement. Is it really a vote of confidence in the UK and London?
Yeah, it's a huge win for London, for the Chancellor, Rachel Reeves, and for Canary Wharf as well, after a fairly torrid few years for them, post-pandemic, worries about the long-term future of the office, who would be, who actually needs all that space if we can work from home. Well, Jamie Dimon led the people back to the office, and, we had a story the other day saying that tube and train travel to Canary Wharf is actually higher now than it was before the pandemic, unlike the city, unlike the West End. So, yeah, it's a massive win for them. JP Morgan have owned this site for a really long time. They bought it in 2008, and then they thought about selling it. There was uncertainty about what they did. But, yeah, they've committed, and they've gone really maximalist, biggest office building in London by quite a long way.
If you look at the one that they did in New York, it's very impressive. Is this about Jamie Dimon's legacy?
Yeah, well, look, he's certainly stamped his footprint, made his mark on Manhattan, Jamie-town. It's not just the new headquarters, they've got buildings around it as well, like a whole campus. And, yeah, this potentially could be the same thing for London. We often joke when asked about his legacy, about his, how long's he got left? It's 5 years. Well, this thing is potentially going to take 6 years to build. Who knows? Maybe he'll be there to cut the ribbon. 6 years, I feel like it would still be record time, right? For something this size and the amount. No, exactly.
It's like Foster and Co.
Well, and again, that sort of speaks to potentially why they might have gone for this site, which they own, because it does take out some of the risk in terms of, having to rent somewhere and getting the timings right, construction delays, planning delays. These things are complicated. So, yeah, 6 years maybe is optimistic, but we'll see.
Yeah, we'll see. How much does it cost?
Oh, it's multi-billions, and whatever they say now, I'm sure the final figure will be higher.
Yeah, that's spoken like someone who knows. Jack Sitters, who leads Bloomberg's coverage of real estate and European investing. Coming up, Callum Pickering of Peel Hunt as markets continue to weigh in on the UK budget. That's next, and this is Bloomberg.
cidade estava sitiada.
Isso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back, everyone. This is Bloomberg Markets. Happy Thanksgiving to those who celebrate, especially our friends in the U.S. This is a picture for stocks across the globe. Look, a gauge of global equities seem to be holding firm after 4 days of gain. Again, it's a recovery fueled by bets that the Fed will cut interest rates faster than previously thought. Money markets now, I think, roughly see an 80% chance of a quarter-point cut next month, leading towards 3 more by 2026. And then the other pictures, of course, Bitcoin traded above 91,000 for the first time in a week. Gold little changed, and dollar pausing a 2-day retreat. Now let's check in on some morning movers with Chloe Melly. Hi, Chloe.
Good morning, Francine. It's a pretty muted day for equities across the board today, but there is one company that is moving much higher today, and that is Puma, because it is reportedly drawing a lot of M&A attention. So the Chinese company Anta Sports is reportedly considering a takeover bid, and that's just one of several potential bidders. This is coming as Puma is undergoing quite a difficult turnaround at the moment, and the prospect of a deal is something that is being welcomed quite warmly by investors. Moving on, but staying in Germany, and Deutsche Börse is also up this morning after being upgraded to a buy rating by JP Morgan analysts that said that the current valuation did not reflect the quality of the business, and that it could potentially benefit from any pickup in volatility we might see in 2026. And finally, Novo Nordisk is down after being downgraded by Handelsbanken analyst. This follows a slide in the shares recently, and of course a series of setbacks that includes the recent failure of the Alzheimer trial. And this lack of enthusiasm for Novo Nordisk is being reflected in those shares this morning.
Chloe, thank you so much. Chloe Melly there with the very latest on some of the stock moves, including, of course, Puma increasingly higher. Now, back to our top story in the UK. Investors reacting positively. The Chancellor, Rachel Reeves' budget was yesterday. Critics argue that the plan offers little on growth. Callum Pickering, chief economist at Peel Hunt, calls the budget a political Frankenstein. Callum joins us now. I like that. Straight to the point. I mean, there was never going to be any growth in this budget. So the thing is that, you could be disappointed that she wasn't more radical, but she also had to, I guess, be careful not to upset anyone.
I think that's right. Let me just take a step back and make a point which I think is just a little bit missed on the principle, which is before the last election, the consensus by market economists, like myself, which I actually think is reasonable, was the UK basically, along with some other advanced countries, faces a very simple choice. You either need to increase the share of taxation to meet higher public spending demands and accept that will come at the price of less economic dynamism, or you cut spending, you get more private sector economic dynamism, but you'll have to tolerate worse public services. Labour refused that choice, said, no, this is not the choice. We're going to be so much better in office than the Conservatives. We're going to generate the economic growth. Taxes aren't going to have to go up all that much, and we'll finance the better government spending. Okay, fair enough. We've had 2 budgets with substantial tax increases, and what strikes me about this particular budget is the government has known basically since spring that the OBR will downgrade its productivity estimate. Yep. The government delayed the budget by a month, and there's not even a veneer of an attempt to signal ways in which they can raise productivity. And so we talk about manifesto commitments on income taxes and corporation tax and VAT, but the real big manifesto commitment was we're going to go for growth, and this budget doesn't address the downgrade.
Okay, why? Is this political because her hands were tied because she just wanted to save her job, or is it because the finances just make it almost impossible?
So my hunch, and this is the reason I call it a political Frankenstein, is that Labour got into office without being properly scrutinised by the institutions that matter, partly because, justifiably so, people were fed up with the 14 years of Conservative government, but it meant that the naivety that you should lose on the election trail was carried into office. And so I think at the government level, so that's the Prime Minister and the Chancellor, they have had a process of learning by doing over the past 16 months, and they probably know what the real issues are now. And we should keep in mind, and this is where I come to this idea of a political Frankenstein. A month ago, the idea was, let's raise income taxes, let's bring down inflation, let's bring down borrowing, let's get to a point where we don't have to rely on our forecast being right in order to meet our fiscal rules, and create space for the Bank of England to cut interest rates more aggressively and for bond yields to come down. And just to give you an idea, UK bond yields are very mid-Atlantic under normal circumstances. Like the 10-year should be 3.5%, not 4.5%. So the bond yields have come down 10 basis points. Okay, great, we've avoided an inflationary crisis, but we're not where we should be. We've not restored credibility. And so in an attempt to get there, and I think to your point, the politics of the Labour Party prevented this income tax increase, they've cobbled together this haphazard patchwork of measures to try and make the fiscal arithmetic work. Yes, it's managed to survive the first 24 hours in markets, but in order for the government to meet its self-imposed targets, you need massive tax increases in the 3rd, 4th, 5th year of the forecast, with the biggest increases coming at the eve of the next election. I'll leave it to viewers to decide whether or not they think that the Labour Party will manage to do that.
Is there anything that was positive for chief executives? I know some of them, you know, they weren't happy about the tax rises, business rates, impact on specific sectors like hospitality and insurance. Some of them did point to the fact that, look, they're talking about digitizing the economy, a bit of support for small businesses. That could be, again, positive, you know, marginally growth positive.
I think the bigger effect will be indirect, which is I think that if we just were to... The reason not adding to inflation in this budget, as the government did in the last year's budget, matters so much is the UK is on a disinflationary trend. We probably have a 2% handle for inflation this time next year, if not at 2%. The bank can probably cut 3 more times. I think we'll get 10-year rates below 4% within a year. Those 2 tailwinds, so rising disposable income in real terms because of disinflation, falling borrowing costs, is good for the private sector. Yeah. And the government has not knocked that off track.
Yeah, and I know, so basically, and I do hear this quite a lot, you find this, you know, uninspiring and think that, you know, bond vigilantes could come back maybe in a couple of weeks when they digested some of the nuances a little bit more. Is there anything that the Chancellor can do now that she saved her job and potentially her boss's job to kickstart growth in 5-6 months? I mean, she could do measures any time.
She could do measures at any time. I think there's very little. I think it's a wait and hope, which is to say that the UK, after 10 years of lots of policy dysfunction and more inflation than experienced elsewhere, now pays, and it's right to call it this moron premium in markets. And this budget was an opportunity to address that. It hasn't addressed that. Over the next 6 months, if economic data come in okay, if inflation data show a decelerating trend, and as long as borrowing doesn't come in above expectations, I think in the end this gets a little bit better. Okay. And I don't put much weight on this idea that the main elections next year are when Chancellor and Reeves have to go. Starmer and Reeves. I think they managed to survive and just muddle through. And actually, I think that's where, if there's any silver lining, the absence of any inflationary mistakes in the budget means the economy will probably do a bit better than people expect into next year, but not great.
Callum, thanks so much.
Thank you.
Callum Pickering there of Peel Hunt with very smart thoughts on the UK budget. Coming up, a new era or a new area of possible tension between the US and China. We'll talk about that next. And this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back, everyone. This is Bloomberg Markets. Now, the UK Chancellor Rachel Reeves unveiled her new budget, boosting her fiscal buffer to £22 billion, with tax rises totaling £26 billion. Well, Reeves speaking to Bloomberg's Lizzie Burden about the plan and the details leaking earlier.
Richard Hughes and the OBR have confirmed that they have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
The leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets. But what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
When you talk about cutting borrowing, the Institute for Fiscal Studies says it's a spend now, pay later budget. What do you say to traders who are still concerned that this fiscal tightening is backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office for Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill as being positive for the economy. Well, and indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the forms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Well, that was the UK Chancellor Rachel Reeves speaking with Lizzie Burden. Well, we'll have plenty more to come. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back, everyone. This is Bloomberg Markets. Now, let's check on the markets. Maybe there's a bit of risk appetite returning. It's nothing huge, but we'll take it as a positive. Bitcoin trading above 91,000 for the first time in a week. Gold pretty much a little changed. The dollar pausing a two-day retreat. If you look at global equities, they seem to be holding firm after 4 days of gains, and it does seem to be because there's just an expectation in the markets that the Fed will cut interest rates faster than previously thought. So, a White House national security memo claims Alibaba provided the Chinese military with technology support against targets in the U.S. That's according to the Financial Times. The report raises concerns about the e-commerce giant's links to the People's Liberation Army as it steps up efforts to compete globally in artificial intelligence. Well, Bloomberg intelligence analyst Matt Bloxham is here with us. Matt, so good to speak to you. I mean, this feels like a huge story.
Yeah, I mean, it's quite significant. So the Alibaba, BYD are kind of really big organizations, operating across tech and automotive vehicles. So, and also there's another 5 companies on top of those that are kind of being recommended or suggested for this list too. So I think, in terms of kind of near-term impact, it's probably not that significant. Certainly not for the big 3, maybe for the kind of other 5, because they provide critical components and sensors for data center equipment and cars and various other kind of technology. Maybe this might have some effect on how American or corporations decide to do business with them or not. But I think this is also kind of much part of this much broader geopolitical tension between China and the US. The US administration, I think, quite clearly wants to continue to put a brake on China's economic and technological development, and this is just another way of slowing that down by, encouraging or dissuading American technology companies and big customers from working with these companies.
I mean, Matt, there's just been a lot of Alibaba stories, right? There was the Q and Quen. I'm not sure how to say it. How do you say it?
I think I go with Quen.
Chatbot.
But I think maybe QN might be the...
QN,
yeah.
we can say it both ways. And now they're making a rare foray into consumer hardware. Like, what does that tell us about where Alibaba is?
As an enormous, ambitious, successful company that's, kind of mirroring a lot of what we see in terms of the technology development in the US, and the Chinese consumer has a huge appetite for the latest technology, and the Meta glasses, which retail for about $800, have been a huge success. And so it's not surprising to see, effectively one of the Chinese equivalents come out with something similar. The tech that goes into those glasses is pretty mature now. It's much less intrusive than the kind of the VR kind of glasses. It's something that you can integrate much more into kind of daily life, particularly if you do wear glasses anyway. And I think that's kind of been a kind of an easy segue in. So I think demonstrates their ambition.
But is this for the global market, or are you going to see still a difference between some of the Asian markets and the China market?
Yeah.
And then the Westerns keep on having their own brands.
Yeah, I think initially a Chinese product, but I'd be amazed if it's not something that kind of creeps into other markets too. We see that with the kind of the range of Chinese smartphone brands that you can get in pretty much every market, and they have a lot of appeal because they generally have kind of high-end technology for a much more affordable price than some of the kind of the Samsungs or the Apples of this world. So I'd be surprised if this isn't seen by them as a kind of global product.
Matt, I mean, there's big tech players, from the US and China warning about this potential memory chip supply shortage. How bad could this be?
I think it's already quite bad because we saw HP, Hewlett-Packard Enterprise, warn about profit, and they're taking remedial action, cutting 4,000 to 6,000 jobs, which is about 10% of their workforce. And they specifically called out rising costs, and that memory chip cost was a big part of that. So it's already having an impact, and I think it's just going to kind of leach into kind of lots of other companies too. It's memory is 15 to 20% of the cost of a PC. Memory is in pretty much every technology device we use and that enterprises use in data centers, and the AI boom is kind of sapping demand, and so all the chip manufacturers are shifting their capacity in production to kind of meet that AI demand. It's having knock-on effects to kind of other markets. So I think inevitably this will kind of have an impact on pricing for the consumer and other customers.
So is there like a global scramble now to get your hands on this?
Yeah, absolutely. And I think there's been a bit of a scramble for a while, and I think it's just escalating now. Yeah.
In terms of you cover a huge, range of stories that have to do all with technology and AI. What are you working on the next couple of weeks? Does it go back to AI evaluations and what, that China consumer market is doing, or is there something else that could come left field? Always. I mean, there's always something that could come, but what are you working on?
The big thing that we're working on within Bloomberg Intelligence right now is the enterprise demand for AI. Pretty much every company is testing and piloting AI. Some are kind of going into kind of scaled rollouts, but there's still a big question mark about the return on investment. How much do we need to change the way our business operate? Is there going to be either a revenue opportunity or a productivity opportunity, and what does that mean for jobs? And so that's the thing we're really looking at right now, is how these pilots are going into deployment, what the concerns are amongst CFOs and CEOs about how they roll this out. Is it a job threat in the midterm, or is it something that they're happy to invest in because they see the productivity and revenue opportunity gain? So that's a massive focus for us across, and that's obviously not just from a technology lens about what that means for NVIDIA and Google and everybody else. It's what it means for the actual companies that operate in these specific industries, from advertisers and agencies through to kind of car manufacturers, industrials, software companies. It affects different industries in different ways, some more profoundly than others, and that's a really big focus for us.
It's so interesting. Matt, thank you so much, as always. Bloomberg Intelligence Analyst Matt Bloxham. Now, coming up on Bloomberg Markets, Tom McKenzie will have much more on the UK budget, plus a look at consumer sentiment as the holiday shopping season gets underway. Happy Thanksgiving, everyone. This is Bloomberg.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins. are almost entirely used in the mechanisms of trading cryptocurrencies. So what we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Welcome to Bloomberg Markets. I'm Tom McKenzie. Global stocks coming close to erasing all of November's losses. Traders raising bets that the Fed will cut rates next month. The UK Chancellor delivering a budget that postpones most of the pain from tax hikes until the end of the decade. A Bank of England rate cut next month is all but locked in. And the Kremlin saying US presidential envoy Steve Witkoff will lead a delegation for Ukraine peace talks in Russia next month. So UK Chancellor Rachel Reeves did enough in her budget to help her and Prime Minister Keir Starmer survive, of course, with markets also responding positively. There's a little bit of sell-off and gilts today, but not making up for the gains that came through yesterday, not making, of course, any significant adjustments. The 10-year is still relatively comfortable for those with exposure. Reeves boosting her fiscal buffer, of course, to £22 billion, £22 billion above many of the estimates, with tax rises totaling £26 billion.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Okay, let's bring in Stephanie Flanders at this point. Stephanie, head of economics for Bloomberg, of course. What is the current... There's a lot of focus today, not just on the fiscal room that she's given herself, but also the backdated nature of these tax increases. Where do we stand in terms of our understanding of the economic impacts? As we look at the gilt markets, a bit of a selling pressure, but nothing too dramatic.
Yeah, I think there was a very calm reaction from the market. I think it was a bit of a missed opportunity, because they obviously, I think a lot of people, a lot of investors had been pricing in maybe a much worse budget, a really irresponsible budget, but if she'd over-delivered, if she'd actually shown a willingness to take upfront pain, I think you could have seen quite a lot of benefit to the Treasury from lower gilt yields. So I think that was a missed opportunity. But as you look at the overall package, you know, as you mentioned, she's sort of put all the focus on that room for manoeuvre around the fiscal rules, and that's her sort of badge of prudence, if you like. And she's following, you know, many previous governments in doing that. She hasn't done anything very brave, but I think it's just enough to reassure people. And at the same time, she's taken steps that will short-term bring down the inflation rate and make it easier for the Bank of England to cut interest rates.
What is our current expectation around how the BOE moves ahead? Is it fair to say December's a lock-in? And if it is, what does 2026 look like?
Well, we're a bit worried about words like lock-in, but I think certainly our chief UK economist, Dan Hansen, has said this clears the path very nicely for that rate cut, which we thought it was pretty likely even before the budget, but this was the last question mark that had to be ruled out.
The other question mark is where the growth is in this budget. The estimates have been revised lower by the OBR, the Office of Budget Responsibility. What is our understanding of the growth trajectory of this UK economy? Do we align with that view from the OBR, or are we slightly more optimistic?
I think one of the things that has actually added to some of the uncertainty around the UK was actually that the fiscal watchdog, the OBR, was a bit too optimistic and was, people obviously, all forecasters will usually be wrong, but they had been consistently on the optimistic side relative to consensus for quite a long time. They're now more or less in the middle of the pack. But the interesting thing that happened yesterday, or interesting if you're interested in this kind of thing, was that they lowered the sort of real trajectory for the economy, that productivity downgrade that we had long trailed. But the reason it didn't do a lot of damage short term for the Chancellor, didn't leave her a big hole to fill, was they also, the OBR, revised up the estimates for inflation and wages in terms of how that affects the cash value of the economy. So we've got the cash value of the economy is looking, if anything, a bit healthier, but the underlying growth is weaker.
Okay, let's get a broader market look right now. Stephanie, thank you very much indeed, leading, of course, economics across Bloomberg with that view in terms of the economic outcomes, the likelihood of the BOE cutting rates, of course, in December, and what that picture looks like in 2026, and the market reaction, of course. We'll get more of a deep dive in terms of the global equities piece now, because, of course, global stocks beyond the UK, and the UK's holding up just about today, close to erasing their November losses, reviving growing optimism the Fed will cut interest rates. So from the BOE to the Fed, sentiment also supported by the possibility of a more dovish new US central bank chief. Ben Laidlaw of Bradesco BBI joins us now for more. Ben, all of those elements to unpack for the markets. Let's start on the UK, though. The FTSE 100 has actually outperformed the S&P 500 year to date. It has outperformed. Now, there's that international exposure, of course, for the FTSE 100. The FTSE 250 is a very different story. Gains of around 4% year to date. As we think about further easing for the Bank of England, do you want to get exposure to those smaller mid-term caps in the mid-sized caps here in the UK, given that we have a little bit more certainty with all the question marks of the budget is out of the way, the BOE can cut rates? Is there room to get exposure to domestic-focused UK stocks?
It's certainly better than it was. I mean, this sort of grey cloud of uncertainty that's sort of been hanging over the UK for the last 3 months is now beginning to clear. We can now refocus a little bit on what's ahead, which, to your point, is easing from the Bank of England. I think, in an asset class which is so cheap, so small, so unloved as sort of UK domestic and UK small cap, I think a little bit of love goes a very long way. And I think the outlook is certainly better today than it was yesterday.
Okay, the outlook is better than it was yesterday. That's an interesting take, Ben, as we consider the opportunities maybe for some of those small and mid-sized domestic cap stocks here in the UK. When it comes to the US, then, December, it's almost fully baked in for the markets now, and that's been quite a switch in terms of the view. Of course, we had Jay Powell earlier suggesting that December was very much an open question. Then you've had Fed speakers close to Jay Powell who've been signaling that the December is very much in the cards, and money markets are pricing around that. The question then is what kind of cut we get, or at least what kind of signalling we get around December. Do they cut and then signal that they'll be on pause afterwards? Is it a hawkish cut that we should be bracing for in December from the Fed?
Yeah, I think the odds are that we get a hawkish cut. I'm not sure what the odds are for the Fed just to be overly dovish at this point. We're talking about the last 2-3 cuts of this cycle. I think they're going to go slow. I think they're going to go cautious. But there is still that Fed put out there. If the economic data deteriorates, then they can clearly do more. But I'm not sure I see the incentives for them at this point to be overly dovish, certainly for December.
Do markets, though, need to be pricing in a more dovish tilt from this Fed in 2026, given the changes at the top?
Markets are pricing 3 to 4 cuts next year. That feels reasonable. That gets you down to a sort of 3% sort of neutral rate.
You see that 3% by the end of the year?
Yeah, I think that's definitely doable. I think there's a lot of supports to markets. I am worried about lots of things, but I think that sort of Fed put. I think these very strong earnings numbers, this US economy which is sort of hanging together at this point. Technicals over the next 3-4 months as we get this go into the sort of year-end seasonality. I think there's a lot of support for the US here. I worry much more about where the upside is going to come from rather than I do about downside per se.
You have question marks about the US exceptionalism trade next year. Yes. And how further that has to run, given the strength of earnings that we've seen so far this year.
Agreed. I think we're back to a more average US, not bad, but 10% returns, not what we've got used to over the last sort of couple of years. I think there's much more opportunity in the rest of the world. There are three levers here. Profit margins, we pulled them. They're basically at all-time highs. Valuations, 23 times PE, tech 30. Both of those well above average levels. And earnings expectations already up at 14, 15% for next year. Which one of those is going to massively surprise on the upside? I'm not sure.
Outside of the US then, where's your favourite destination? Is Europe looking good to you for next year?
Europe looks okay, but I think Europe needs to deliver on the earnings and deliver on the growth. You've already had a bit of a multiple re-rating in Europe. Valuations a little bit above average. Certainly very cheap relative to the US, but earnings expectations are low. We are expecting more GDP growth next year, but I guess the point is that does need to deliver to validate a little bit what we've already seen. EM stands out for me. I mean, that is the smallest, cheapest, most out of favor asset class in the world. Earnings are firming up. Currencies are reasonably cheap. And there are, I look at Brazil a lot. It's probably the cheapest market in the world at this point, 9 times PE, 5% dividend yield, and they have the highest real rates in the world, which they're about to start cutting. So you don't need to look very far in EM, and you can find these sorts of interesting idiosyncratic stories which are just overly cheap at this point.
What assumptions are you making about the dollar, the trajectory of the dollar, when you take that EM view?
I'm assuming that the dollar doesn't rally. Yeah. Which I feel quite comfortable with. I think if the dollar continues to weaken from here, then that just adds fuel to that sort of EM fire. I think a lot of the EM story is a domestic sort of self-help story, whether it's fiscal stimulus in China, rate cuts in Brazil. I think that gives you a little bit of defense in EM, but weaker dollars would certainly go a long way.
Let's end back on the US. I haven't asked you about the AI trade, and you talked about the valuation premium that's been baked into some of these stocks, and Nvidia has worked that back in the last week or so. How do you play that? Do you want, how much exposure do you want to Mag 7, or at least some of those AI heavy names, the hyperscalers?
Well, you probably have more than you think you have. Yes. If US is 65% of global market cap, tech is 40% of that, depending on how you count it. So you have a lot already. I don't think this is a bubble. I do think valuations are high. I do think earnings expectations are high. So again, I worry about the upside more than I worry about the downside. US tech valuations, 30 times PE, that's high. 2000s bubble was twice that.
It was twice that in 2000.
Yeah, you can get EM tech for half what you can get DM tech for. So again, that's another reason I quite like the EM story. Is I get a big valuation buffer. Now, yes, it's a bit more hardware and a bit more sort of.
Is that China?
Downstream. A lot of it's lot of it's China. China and East Asia. Yeah.
Okay, Ben, fantastic. Thank you very much indeed. Ben Lely, Bradesco, of course, BBI, with that take on the markets from the US to Europe and to EM, with a particular lens, of course, in terms of opportunities around Brazil. That was one of the standout takeaways from Ben. Thank you. Last week, of course, Federal Reserve Governor talking of the Fed and the impacts in terms of the expectation around further easing from the Fed. Federal Reserve Governor Stephen Myron spoke to Bloomberg News about why he thinks the board should be moving in a dovish direction.
I think the implications of yesterday were obviously dovish, and if anyone was on the fence, I would hope that this would move them in the direction of cutting. I mean, you saw the unemployment rate edged up a bit. You saw some other indicators like an increase in permanent layoffs. Those are indications that the labor market has been affected by restrictive Fed policy. And given the outlook for inflation, there's not really much of a need to be as restrictive as we are.
And yet on the committee, we have pushback. Almost immediately after that, Fed Governor Michael Barr had this to say: I'm concerned that we're seeing inflation still around 3%. Inflation's closer to 3 than it is to 2. What do you make of that argument? How persuasive is it?
It's not persuasive to me, and I'll tell you why. All of the inflation excess, almost all of the inflation excess, is a mirage. It's not indicative of supply-demand imbalances. And so, for example, if you look at the housing market, market rents have been running at about 1% for a couple of years. Measured inflation in the index is actually much higher than that because it takes a really long time for the index to converge down to where market rents are. That's a statistical artifact, That's an artifact of the statistical measurement process. It's indicative of a supply-demand imbalance that was there in 2022, 2023. Monetary policy works with lags. It has to be set now for 2027. So when you look at the housing data, you see market rents running about 1% for a couple of years. There's no supply-demand imbalance there. we should not be setting policy for 2027 based on a supply-demand imbalance that existed in 2022 or 2023. That doesn't make any sense. There's other things too, like portfolio management services, which confuse quantities for prices. This stuff is all well known. If you look at market-based measures of inflation, they're much closer to 2 than they are to 3. So I think that the excess, the overage, is a mirage, and it's a mistake to ask people to lose their jobs because of quirks of the statistical measurement process.
And you've got to put out new forecasts on December 10th as well, which is going to be complicated by the fact we've had limited data more recently. How relevant do you think the calendar actually is? Because I'll offer you the perspective on Wall Street at the moment. It goes something like this. The meeting's on the 10th. You don't get the data until the 16th. The Fed's kind of constrained by that. They can't do anything. What's your perspective on that?
Yeah, so as I said a moment ago, monetary policy works with lags. It would be much easier if it hit the economy immediately, but it doesn't. It works with lags. So you have to set policy based on the forecast. So the data matter insofar as they affect your forecast. It doesn't make sense to be setting policy for where the economy was 3 or 6 months ago. We should be setting policy based for where the economy is going to be 12 to 18 months from now. And so if we have data, it gives us the ability to update our forecast. But the lack of data doesn't mean that we don't have a forecast. We did have a forecast. And all it gives us is opportunities to falsify our forecast.
That was, of course, Federal Reserve Governor Stephen Myron. Now, the Pentagon finding that Alibaba, Baidu and BYD should be added to a list of companies that aid the Chinese military. That's according to a letter to Congress. The Deputy Defense Secretary informing lawmakers that the 3 companies, along with 5 others, merit inclusion on the list, which identifies businesses connected to the Chinese military operating in the US. Alibaba said that there was, quote, no basis for the move and that it would not affect its ability to conduct business in the US or anywhere in the world. Coming up, the latest on that deadly fire in Hong Kong where hundreds are still missing. Stay with us. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Markets. Now, turning to the markets. Let's check in before the markets before we get to what's happening in Hong Kong. Here's what the picture is. Let's just retrace what's happened over the last 4 days. You've had 4 straight days of gains in the US, and a lot of that is traders moving their focus away from AI angst towards expectations of easing from the Federal Reserve. Money markets pricing in more than 80% chance, of course, that the Fed will cut in December, and that appears to be the key catalyst. Here in Europe, it's a pretty flat day after 3 decent days of gains for European stocks. Today, range-bound, looking for the next catalyst. The FTSE 100 is down 0.2% after the budget of yesterday, of course. Expectations that the Bank of England here in the UK will cut rates in December. Nonetheless, UK equities, the FTSE 100, slightly under pressure in the session today. S&P E-minis then, when the US reopens for half a day of trading on Friday, currently pointing flat. Nasdaq 100 futures looking slightly brighter, up 0.9%. Let's flip the board and have a look across our set. It's interesting to note that Bitcoin is back above around 91,000, suggesting that those sentiments in terms of that risk-on move in the markets is still there. That has been something of an indicator, of course, Bitcoin, in terms of those risk-on sentiments and how much exposure investors want to get to the crypto space after a torrid couple of weeks. 91,500 right now for Bitcoin. The pound at 132 after the budget, of course, a little softer, down to 0.1% on sterling. 447 right now on the benchmark UK 10-year. So giving up some of the gains that came through yesterday. Bit of selling pressure on gilts right now, but still below that 450 level. Yields are up at 5 basis points. And gold at 4,157. Just a little softer on the yellow metal, just by 0.1%. So, the tragic story, of course, that's been unfolding in Hong Kong. At least 55 people have been killed, hundreds still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Our China correspondent, Min Lo, has the latest from the scene.
I'm here at the scene of this fire in Tai Po that has been raging on for over 24 hours now, and we can still see fresh fire ablaze in certain apartment units, and it shows you just how challenging it has been to fully put out the fire. The fire department gave a press briefing earlier. They said they have the fire under control in at least 4 buildings. They have updated the death toll to 55, 51 dead on site, 4 more dead on arrival at the hospital. And as of this morning, hundreds more were still missing and unaccounted for. It's been a devastating night for these Hong Kong residents who are staying in these government-subsidized buildings. It's an estate that is over 40 years old, undergoing heavy renovation, and there were these bamboo scaffoldings, green mesh surrounding the buildings that help to spread the fire quicker than usual, and authorities said they found substandard materials, inflammable materials in some of the floors, including styrofoam boards sealing some of the windows, tarpaulin sheets, plastic cloth as well, materials that are not compliant with Hong Kong regulations. And so a criminal investigation is ongoing, and authorities have arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence. But for now, many of these residents are just overwhelmed and figuring out where are they going to stay as they have lost all of their belongings and their homes. Min Lo, Bloomberg News, Hong Kong.
And that was Bloomberg's China correspondent Min Lo reporting, of course, from Hong Kong for us. Now, the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the war-torn nation's international allies. This comes as the EU is set to unveil its plan to unlock frozen Russian assets to help Ukraine. Joining me now is Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, talk us through the details then of this IMF agreement and what the EU could be ready to pull the trigger on.
Right. So the agreement at hand is actually a staff-level agreement and still needs board approval. But under the agreement, it would provide an $8 billion loan to Ukraine over a 48-month period. This would essentially replace a 2023 IMF loan, which has been used up, and Ukraine went back to the IMF. That loan, in particular, was considered somewhat unusual at the time. It was described as the first time the IMF has lent to a country at war. This is supposed to shore up Ukraine's finances, its debt situation, especially as the country finds itself at war and stressed on the budget level. One stipulation from this, of course, is that Ukraine needs to find donor support elsewhere. That obviously would probably come from the European Union, which leads us to the question of where the European Union stands on using these frozen Russian assets. Obviously, they froze the Russian assets in the wake of the war that were in Europe, mostly in Brussels. So far, they've been stalling on this plan, partly over concerns from Belgium over legal concerns. But it does look like there's momentum to actually back a loan with frozen Russian assets by Christmas time, in December, looking at potentially a 140 billion euro loan to Ukraine, which would be pretty substantial given that the IMF estimates its funding hole at about $135 billion over the next 3 years. So that's pretty much where we stand on the IMF loan and where Europe stands with the frozen assets.
Well, that's really interesting, Greg, isn't it? Because this has been a long-running discussion, as you nod to in that answer, from the EU around what to do with these frozen assets and whether or not to make a loan on them. So you're saying that that could happen potentially by the end of this year. And as you say, 140 billion US dollars would be substantial. Does any of this money, Greg, either from the IMF or the EU, if that is coming in the future, does any of it affect the prospects for Ukraine on the battlefield?
Well, definitely, at least indirectly. For one thing, this sends a signal to allies, and specifically to the EU, a positive signal to them, and also puts some pressure on the EU to come up with this loan for Ukraine. In another way, in a more indirect way, it lets Ukraine keep its house in order, lets government programs continue to run and services operate. And that all will help with the war effort, but also with morale at home, which indirectly contributes to the war effort. So it is important. On another hand, U.S. aid to Ukraine has largely dried up. It has evaporated, and including to the fact that the EU is now buying U.S. weapons for Ukraine. So Ukraine definitely has a funding need, and any help is going to be at hand and contribute to the war effort. Another way that it does help, it takes pressure off Ukraine. Ukraine is facing a corruption scandal, pressure to accede to this U.S. plan. So this is just one less pressure point on Ukraine at this as they're at war.
Greg, so we go from the Ukrainian economy and some movement there to try and plug some of the holes and support that economy. What's happening over in Russia? You are our Russia economy editor, and we have some reporting suggesting that the Russian economy is now feeling the squeeze of this conflict.
Well, it's been an interesting arc with Russia. It has shown remarkable resilience in the face of sanctions. It's shown great adaptability to some of the pressures that it has faced in the wake of the war. But there are cracks now. We've seen that growth has slowed. There is still growth in the economy, but it is much slower than it was when it was backed by massive government outlays, record energy revenues. But now they've faced a prolonged period of inflation, and because of that, prolonged period of record high or just plain high interest rates, and cracks are showing. Households are pulling back on what they're spending on food. Businesses are struggling under the weight of these high interest rates. So there's definitely cracks in the veneer of Ukraine's or of Russia's economy. Furthermore, the war is having a direct impact. Ukraine is striking oil and port facilities, and that has contributed to a domestic fuel crisis, shortages, high prices. So there are definitely cracks. Whether it's enough to influence Putin's thinking on the war, it remains to be seen, but there's clearly risks building to the medium-term health for Russia's economy.
Okay, and we'll see how those economic pressures tie in to Putin, of course, and the Kremlin's thinking as they continue these ceasefire, or at least peace deal talks with their US counterparts and the Trump administration. Greg Sullivan, Bloomberg's Russia economy and government editor, with that important update. Greg, thank you. Still ahead, the holiday shopping season, seeing some weakening demand in the luxury sector. We're going to speak to Morningstar's Jelena Sokolova next for a view and analysis in terms of what's happening in the retail space as we enter holiday season. That's coming up. This is Bloomberg.
have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. Happy Thursday, happy Thanksgiving, everyone, of course, who celebrates it. Let's check in on the markets then, briefly. European stocks looking for direction. You've had 3 days of gains. Today, giving up, it seems, on the upside that we've seen so far in the week for European stocks. Need the next catalyst, it seems. In the US, you've had 4 straight days of gains. Of course, US markets are closed for Thanksgiving. They reopen for half a day of trading tomorrow. FTSE 100 after the budget of yesterday, currently down 0.2%. The S&P E-minis picture is also looking fairly lackluster after a revival of spirits on Fed rate cut bets, of course, and a more dovish central bank stateside. Nasdaq 100 futures are pointing to a brighter picture, pointing higher by 218 points as things stand. Let's flip the board and have a look cross-asset. The pound was in focus yesterday, of course. We're still seeing a bit of a move around UK gilts and UK assets as investors continue to digest the budget. There's been a bit of sell-off in gilts today, not making up fully for the gains that came through yesterday. Yields are up close to 5 basis points on the benchmark 10-year here in the UK, but still below that 450 level. 132 on the pound, 91,300 on Bitcoin. So the cryptocurrency has gained 1.3% in the session today and back above that 91,000 level. And gold under modest pressure in the session today. The yellow metal down 0.1% at 4,150. Let's get to a sector focus right now. And luxury consumers, of course, showing signs of caution ahead of the US's largest shopping day of the year, Black Friday. For a view on how this is all shaking out across the luxury equity space, Yelena Sokolova of Morningstar joining me around the desk. Yelena, just get us a broad view in terms of the recovery, modest recovery we've seen in luxury year to date. Where does that recovery story stand right now?
Yeah, so we really have seen a little bit of improvement in the third quarter. So the first half of the year has been still pretty weak for the sector, but in the third quarter there are a little bit of green shoots, a little bit of hope of improvement, specifically in the U.S. market, but also maybe stabilization and slight improvement in China.
What are you watching for at Black Friday then, and the holiday season?
In the U.S. specifically, I do expect the trends to continue. First of all, the stock markets has been strong, sort of, you know, we have lived through the April calamities. Now it has calmed down a little bit. Most companies have already passed on the tariff increases. So far, it has not at least weighed on consumption. And we do think that the base of comparison is much easier for the U.S. consumer because it has been, the demand has been weak for the last almost 3 years now, but it has come off the very, very elevated base post-COVID.
So the tariff pass-on has been worked through already. What has that done to margins?
Well, so far we have not really seen the margin impact on the companies because most of them report half a yearly results.
Yeah.
However, we don't see kind of like the pushback on volumes because the demand in the third quarter for the companies have been relatively strong.
Did they pass most of that tariff cost on to the consumer, or did they take the hit on margins?
Yes.
How did that balance out?
I do think that especially the brands kind of on the higher end side, especially Hermes, they pass the pricing very early on. So the higher standing of the brand, the more they were able to kind of just pass on the tariffs to the consumer. But of course, the companies on the lower end side, the brand that have less pricing power, they probably will take something more to the hit to the margin.
And we're seeing in the US, we are seeing evidence of a K-shaped recovery. So the high end doing very well and showing resilience, but the bottom end of the consumer, those with lower incomes and maybe less exposure to the equity markets, under pressure. Is that a theme that continues? Is that a dynamic, do you think, that continues next year?
I do think so, especially given the resilience of the market. That is a very good leading indicator for the luxury consumption, for the kind of more affluent consumers, because they do actually have the exposure on the stock market side. They also are not pressured by the cost of living crisis and potential, increase of the products that are hitting the consumers on the low end side. So I do expect, and the tax bill is also kind of more favorable, right? So I do expect that trend to continue.
Should investors position for a comeback of Chinese luxury demand next year?
I'm generally kind of long-term quite bullish on Chinese demand. I think that there are still kind of structural drivers behind Chinese demand improvement. I think the main headwind right now is the sentiment is not there. Chinese are still sitting on the savings that they have accumulated during COVID years. But the sentiment is low, the real estate market is under pressure, so stabilization in the real estate prices is really key to the stabilization of the sentiment and improvement of the sentiment in this market. And I think there are still a lot of wealth that is created in the new economy sector, in the tech sector, etc. So I'm quite long-term optimistic on China.
Yeah, I mean, some estimates of household wealth, about 30%, 40% tied up in real estate, and real estate property prices have continued that downward for more than 4 years in China, and no evidence that is turning around yet. But you do have the view maybe that is a story for 2026 at some point. In terms of your favoured names, then, and some of these are down to that strength of demand and the margin resilience, but some of them are management changes as well. I'm thinking of Burberry here in the UK. The stock is up 20% year to date. Where are we in the Burberry story? Let's start there.
Yeah, so with Burberry, I think what we are seeing, first of all, last year it was kind of on my buy recommendations from last year. The stock was just ridiculously cheap.
Well, that was a good call. That worked out well.
Thank you. And now we basically do see some early indications that the new strategy is working. And the new strategy was basically focus on where the brand is the most differentiated and the strongest, which means outerwear. Scarves, British heritage, which is kind of like highlighted in the marketing campaigns. Also be more aware of pricing, not to push it kind of too far up. So what they have been trying to do for the last 10 years was kind of to play in fashion, to do leather goods, which is super competitive with the big heavy hitters. That has not really worked for them. But now we do have improvement in sales.
And you think do you want to take profits on Burberry at this point? Or do you think there's further upside?
I think that it's still kind of marginally undervalued as far as our, forecasts and models are concerned. But of course, it's much less kind of headroom for investors to get this wrong.
Is the Gucci brand turning around at Kering?
We do have like early indicators of positive trends in Gucci. Of course, it's very early days, and a lot of that will depend as well on how the Demna's collections are taken by the market. And the problem with this designer appointments is it's a big bet and it's a long-term payoff, and you don't really get to test it, right? So it's. There is a lot of risk to this one, but I do think that kind of from long-term perspective, it's very low probability that the brand, the size of Gucci with its resources, with its brand recognition, will just kind of linger and lose share. And that was what the shares were essentially pricing in.
Yelena, thank you very much indeed. Really great analysis as we lead into, of course, holiday season and Black Friday and the spend that could come through for the luxury space. Yelena Sokolova, Senior Equity Analyst at Morningstar. Meanwhile, Bloomberg's Romain Bostic sat down with Bloomingdale's and Burberry CEOs, talking of Burberry, to discuss the consumer spending outlook this holiday season.
'Tis the season for holiday shopping. And despite U.S. inflation holding above historical averages for 4 years, and tariff tumult upending global supply chains for the past 5, the CEO of Bloomingdale's, he says consumers are ready to spend.
Actually cautiously optimistic. The trend over the past few months has been amazing at Bloomingdale's. We feel pretty strong about our customers' feedbacks, about our partner feedback, about the current trend that we're experiencing, and we're building such a great event for this holiday season that we're convinced that it will resonate very, very well with the customer.
And he's not kidding. Bloomingdale's is betting big on the holiday season, from personalized stockings to a Labubu tree and even a visit from a very familiar face. All in an effort to reinvigorate the department store shopping experience with emphasis on experience.
This is what we're really focusing on right now, is bringing experiences, not only great products, but really bringing experiences that create the conditions of relationship. People want to connect, and we want them to connect at Bloomingdale's.
The Bloomingdale's flagship store on the east side of Manhattan has for decades been one of the crown jewels of New York City retail. But behind that grand facade was a company struggling to adapt to the times. Now, after years of sales declines, Bloomingdale's, a division of parent company Macy's, has found its stride, posting 4 consecutive quarters of same-store sales growth heading into this holiday season. And Bloomingdale's has reason to be bullish. The National Retail Federation estimates that 44% of consumers will do their holiday shopping at department stores this year. And Olivier Braun, he's confident it will extend his company's rebound.
It's really about rebuilding the next golden age of Bloomingdale's. We heard a lot about Bloomingdale's in the 70s, in the 80s, where it was really the place to go. And actually, you know, right now what we're trying to build is really recreating this destination, Bloomingdale's. And we're an icon, but we have to reinvent ourselves. It's also what Josh is doing with Burberry. This is what we're aiming to do at Bloomingdale's, with one key focus is actually bringing back customer experience, customer delight in our stores, and really based on building relationship connections, etc. This is what is making us different.
The New York retail giant joining forces with the iconic brand and plaid, a relationship that goes back decades.
This is a relationship that Burberry and Bloomingdale's have had for over 70 years. So it's the perfect place to bring our timeless British luxury brand expression to all of Burberry customers and all of Bloomingdale's customers, and frankly, to all of New York City.
To celebrate that partnership in the spirit of the holiday season, Bloomingdale's has literally wrapped their flagship store in a giant Burberry scarf.
It was a little bit emotional, I have to say, seeing this uniquely British, uniquely Burberry, uniquely Bloomingdale's story come to life on the streets of New York City. There's only one New York. We are really thrilled to open our arms and wrap a scarf around New York City and bring a little bit of warmth and joy for this holiday season.
And since Joshua Schulman took over the helm of Burberry in July 2024, shares of the London-based brand, well, they've rallied 50% as the American-born CEO leans into the brand's Britishness.
There are many luxury brands that have wonderful, beautiful heritages, and they celebrate their heritage, whether it's Italian or French. But Burberry is unique because we are the only luxury brand of scale that has a uniquely British heritage.
Burberry, remaining true to its roots, is highlighting the products that cemented its status in the luxury space, while also branching into new directions.
Everyone knows and loves a Burberry scarf, which is the perfect gift for anyone in the family, around $520. But we have a range of products. You know, you can buy a candle for $130 to one of our iconic made in England trench coats for $3,000. Burberry has always been at its best when it is a luxury brand with broad universal appeal. What we love about Bloomingdale's is they really share our values. And this is a brand that also has broad universal appeal.
A recent report by J.P. Morgan shows that consumer demand for luxury goods in the U.S. is largely held up despite the economic headwinds. The S&P's Global Luxury Index, which tracks 80 of the biggest names in that space, including Burberry, Prada, Dior, LVMH, that is showing no sign of slowing down.
momentum that we're saying didn't start for holiday. It started, months and years ago, and we just keep the pace right now. So we have new events, we have new marketing activation that are coming, we have new brands coming in the store right now, we have new ideas, so I think it's just a kickoff of what's coming.
And though Bloomingdale's has only just unveiled their 2025 holiday display, they're already looking ahead toward the future.
We already know what's going to happen in 2026. We're already working on what's going to happen in 2027.
Bloomberg's Romain Bostic reporting there. Coming up, another check on the markets and a chat with Bridgewater founder Ray Dalio on the pod shop hype. That is coming up. This is Bloomberg.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalize on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Markets. Let's check in on the markets then. European stocks looking like they need some direction. European stocks flatlining after 3 decent days of gains, so maybe a consolidation at this point, and looking for the next catalyst here in Europe. FTSE 100 is currently down 0.2%. S&P E-minis on a day, of course, when the Thanksgiving holiday kicks in. No trading, of course, stateside today, but you'll get a half a day of trade tomorrow. Nasdaq 100 futures currently pointing to gains of around 0.9%. Let's flip the board and have a look across assets. The pound continuing to be in focus post-budget, of course, here in the UK. The pound currently trading at 132. You do have a bit of a sell-off in gilts today. 447 right now on the benchmark UK 10-year yields, up 5 basis points after a rally in gilts yesterday as the Chancellor Rachel Reeves unveiled her tax and spending plans. 91,400 right now on Bitcoin up 1.4%. That's a level that we haven't seen the Bitcoin, the major cryptocurrency by market value, cross for some time. Suggests there is a little bit more risk momentum heading into the crypto space. 4,161 right now on gold, just a little softer by 0.1%. Watch out then, pod shops. That is, Ray Dalio is not buying the hype. That is one of the key lines for his interview with the team, of course, over in New York. The billionaire Bridgewater founder saying that multi-strat hedge fund models dominating Wall Street won't stand the test of time. He spoke on Bloomberg's Odd Lots podcast.
There's different ways to play the game. That's a totally valid way to play the game. And maybe it's just a totally utilitarian way. In that way, there's is it effective? In making the investment decision can be very effective for lots of reasons I can digress into. Uncorrelated return streams, many observations, blah, 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 blah. That could be very effective. It may not be effective of creating the meaningful relationships and those types of things. Therefore, you're going to have a continuity and a competitiveness problem. In other words, people will go for, a little bit more. Which is what we've seen.
Yeah, we've seen plenty of that, haven't we?
A little bit more money, a little bit more. They're not in it together. They're not sharing their lives. They're not sharing their mission together, and so on. So maybe it's a totally fine way for the investment management, but it's not a fine way for building a 50-year-old. I did this. I built a 50-year-old organization while others have...
It is raised the question, like, in those environments, like, what is the franchise value? Because what happened, right, what seems to be this model which has produced extraordinary returns for some investors, you do get the situation in which everyone is sort of a mercenary. Everyone, you dangle these big paychecks and bonuses and
you're an independent contractor, basically.
Yeah, it's hard to imagine that environment building a 50-year franchise.
I think it's not going to last. Interesting. And it's particularly in the area of an AI.
Say more. Okay? Say more.
Okay. I think that you're going to have, and I'm going to try to help it, have AI-enabled ability to be an independent investment manager. Okay, like Uber.
Okay.
Uber's got a technology that they take the individual, they plug them into that technology and whatever, and everybody can do that in a sense. I think we're going to be moving more into that direction. So what is it? That's a path that we can go down, and that's a whole other path.
Well, you said you're going to try to help it. What does that mean? Are you working on something?
Well, I'm building my own ability, and I want to share how people can do certain things. That's it.
But you don't think this model, because it's been very hot, again, talk about things that have changed 10 years. 10 years ago, we were not talking about multi-strats.
Talking about fund of funds.
Yeah, fund of funds, much more back then. It sounds like you're skeptical that this model will endure.
Well, I think I'm just looking at mechanistic.
Yeah, talk about it.
Okay, so what creates cohesiveness? You have to have the need for cohesiveness. Okay, what is the cohesiveness? What is the commitment? Okay, I think when we help each other, I believe in how people can help each other. Okay, are they helping each other? Can they be better? And that's the question, isn't it? Okay, so when we're thinking multi-strat, if everybody's there and you put it together as that could be done technologically very easily, right? So is that going to stick it together? Okay, what is a relationship like? Okay, to be on the mission together and to have relationships and so on is invaluable, not only in terms of effectiveness, in terms of doing job, because different people have different skills and you do that together, but it is also psychologically rewarding. The greatest source of happiness, okay, this is I think an important thing. Studies of happiness all around the world and so on shows that income past a certain level does not bring a higher level of happiness once you get the basics taken care of. That the greatest source of happiness is community.
Yeah.
Do I have a sense of community? Okay, people who are there for me and I can help and I work for that. That's a powerful force and it's very rewarding. Okay, those are my thoughts.
That was, of course, Bridgewater founder Ray Dalio. And you can catch more conversations like that on Bloomberg's Odd Lots podcast, wherever you get your podcasts. So, UK markets continuing to digest the Chancellor's budget. Rachel Reeves boosting her fiscal buffer, of course, with tax rises totalling £26 billion. For more analysis on the market adjustments around the budget, let's bring in Morwenna Coniam, co-editor at Bloomberg Markets Today. What a day it was for you and the team yesterday, Morwenna. You do see a little bit of selling pressure now in UK gilts after a rally. So it was met well initially, the budget, now giving up some of those gains. What do we make of that?
Yeah, well, absolutely. It does come after a big rally yesterday. In fact, the 30-year gilt had its best day since April yesterday. There was a bit of added volatility yesterday because we had that OBR leak. So I think that even the moves yesterday weren't purely in the context of what the budget actually delivered, because there was that sudden jolt and then a recovery. And I think today what we're really seeing is, them giving back a little bit of that as people are starting to go through the budget measures. It was a very messy, very complex budget, and realizing that, yes, there is more fiscal headroom, but a lot of it is very backdated. A lot of the measures won't come into force until sort of 2028, 2029, 2030, and so...
That's with the tax, a lot of the biggest tax increases, the fiscal drag.
Yes, exactly, and so therefore the benefits aren't quite there yet, and there's always questions about whether these things come into force in the way that they're intended by when you're looking at a longer time frame. So we're seeing a bit of that, and also I think there's a little bit of uncertainty about whether it really makes a difference to the Bank of England and what they're able to do, whether the inflation projections are correct. And we also have to remember with all of this that with the US being closed, liquidity is, extremely tight, and therefore moves probably have to be viewed through a slightly sceptical lens today.
That's a really important caveat, isn't it? On a day like today, there is very thin liquidity. So how much we read into these moves is important within that framing. When we think about the BOE, the Bank of England, then, and markets are pricing in a December cut from the Bank of England, there were these measures, disinflationary measures, that the government would point to in terms of what's happening on energy bills and what's happening, for example, on rail fares. Where do the markets stand on having a clear view for the BOE next year?
Yeah, well, that's a good question, because obviously these things come in incrementally, and the OBR's projections, were actually for inflation to be slightly higher than they'd thought before. This year, it was slightly undershooting as well. So I think there is definitely some uncertainty there. CPI has accelerated this year, even though it is now coming down again. And so that's something that I think is still going to play on the mind of the market. And of course, it wasn't really a big growth-boosting budget. And that's the other key thing, that she did mention that that's her sort of priority still, but we didn't really see a lot of measures that I think are being interpreted by the market as significantly boosting the growth profile for the UK.
Okay, Morwenna Coniam, thank you very much indeed, co-editor at Bloomberg Markets Today. The day after, of course, that budget, as the markets continue to digest the detail in all its complexity as well, of course, as Morwenna saying. Gilt selling off a little bit today. To Morwenna's point, yields up 3 basis points at the front end, up 4 basis points on the 10-year, but still below that 450 level. Coming up in our next hour, I'm going to speak with Chuck Lieberman of Advisors Capital, and where he thinks, or why he thinks, we are not in a tech bubble. We're going to get back to the AI theme with Chuck. Stay with us. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. I'm Tom Mackenzie. Global stocks coming close to erasing all of November's losses as traders raise bets that the Fed will cut rates next month. The UK Chancellor delivering a budget that postpones most of the pain from tax hikes until the end of the decade. A Bank of England rate cut next month is all but locked in. And the Kremlin saying US presidential envoy Steve Witkoff will lead a delegation for Ukraine peace talks in Russia next week. Let's get to the markets then. Happy Thanksgiving, everyone. Stateside, of course, no trading in the US. Markets will reopen for half a day tomorrow. And with that note, thin liquidity, of course, on Thanksgiving Day. European stocks flat currently. Financial services, one of the leading sectors across the European space. Here in the UK, the FTSE 100 currently down 0.2%. S&P E-minis also range-bound after 4 days of gains on expectations of a more dovish Federal Reserve. And certainly some of the consumer and labour data has built onto that story. Let's flip the board and have a look cross-asset then. The pound continues to be in focus, as do gilts. Here in the UK, sovereign debt is selling off, giving up some, but not all, of the gains of yesterday. 446 right now on the benchmark 10-year here in the UK, with the yields up 4 basis points. 132 on the pound, a little softer on sterling, down 0.1%. Bitcoin, importantly, back above that 91,000 level, 91,400 as money moves back into that cryptocurrency. 135 is the gain today, and gold at 4,156. The yellow metal is a little softer in the session, down 0.1%, having gained, of course, on rate cut expectations. Now, for more on the latest market moves, let's bring in Chuck Lieberman of Advisors Capital Management. Chuck, thank you for your time. Happy Thanksgiving. Let's start on the animal spirits that have been revived, it seems, in recent days when it comes to US equities. Do you think there's further upside once traders get back to their desks next week and reassess the landscape of the fears and angst around AI being replaced by optimism of a more dovish Federal Reserve?
Yeah, all the economic indicators are positive. The economy continues to grow. The Fed is likely to cut, but it'll be a close vote. I think there is some disagreement within the Fed. So we expect one cut, but probably not again in January. And corporate profits are doing spectacularly.
Chuck, is that a hawkish cut that you expect then in December from the Fed? And if so, how does the market react to that delivery?
Well, I think the market would like more cuts, of course, as demonstrated very clearly. But I don't think I would call it a hawkish cut. You know, that's like saying there's a big half and a little half. A half is a half. A cut is a cut. Lower rates, I think the market would get really nervous if the Fed cut more aggressively. I think the long end would sell off, so the curve would steepen. So overall, I think the Fed is cutting a little bit more. That'll help the market, and corporate profits are doing fine. And the other part of it is growth. Economic growth, I think, is going to improve a bit. Growth slowed after the announcement of tariffs, and I think things are picking up back up at the same time that corporate profits are doing extremely well.
On the growth picture then, Chuck, what is the growth catalyst for 2026? Is it the big, beautiful bill? Is it stimulus, fiscal stimulus? Is it a receding trade war? What is the catalyst for U.S. growth next year?
I think it's momentum. The economy continues to grow. It's broadly diversified. We're seeing enormous growth, of course, in technology and everything related to AI, massive investments there. But job growth is okay. Income growth is fine, so consumers have the capacity to spend. They'll continue to do so. Businesses may need to spend more to adapt to AI. Aside from spending on AI itself, there's a need to invest to take advantage of AI. So I think that's going to be very, very broadly diversified throughout the economy. And then consumers are in good shape. They continue to spend. If you look at the consumer sector, certainly travel continues to do well. Other aspects of the economy continue to do well. I just don't see any material slowdown.
How does the labor market, how does the jobs market of the U.S. evolve into 2026, Chuck?
The labor market is actually more complicated than it's been in a long, long time. Because on the one hand, what Trump did with the borders is to shut off some of the influx of labor that had been propelling the U.S. market. So now we're seeing much, much slower job growth. There's less growth in the labor force and therefore less availability of labor. But there's a skill mix, perhaps, that's a little bit inconsistent with the needs of the economy. So lesser skilled labor is now becoming scarcer. That'll help the lower end of the income spectrum. But job growth is likely to slow down, and therefore we're not going to see the robust growth that we've seen over the prior 3-4 years. So I think we should expect some moderation in the pace of growth, but it's still a tight labor market.
Chuck, in that view around a stronger U.S. economy next year and a tight labor market, do you want to be rotating more to domestically focused stocks, the smaller cap stocks in the U.S., particularly if you get that rate cut in December? How much exposure do you want to mega cap tech versus some of the small cap Russell 2000 names?
Yeah, that's another hard question. Very good question. So we've seen the Mag 7 carry the economy and carry the markets, account for a very large fraction of the overall gain in the stock market. But at some point, the rest of the economy has got to catch up and got to perform well. And we're beginning to see that rotation already. If the economy continues to grow at a moderate clip, that's good for domestically oriented companies, which means smaller companies. The Mag 7, I think, is still doing fine. There's no reason to think that they're going to falter. And so if you put a gun to my head and made me pick which I would prefer, the S&P 493, the unloved, the unwashed, the ignored S&P 493 versus the Mag 7, I think I'd have a tough time picking, but I prefer, I think, the 493 because the valuations is so much lower. The valuations of the Mag 7 are relatively high, but deservedly high, because that's the part of the economy that's growing the fastest. And it's nothing like back in 2000. So We don't have a bubble like that episode. All of these companies are making a lot of money. They're growing quickly. They're hiring. They're expanding. They're doing very, very well. It's not like we're trading at ridiculous price to sales. We're trading at relatively high price to earnings and very rapidly growing earnings for the Mag 7.
Chuck, we had Ben Ladle on the show earlier. He is constructive on equities, but he says the earnings momentum for US stocks is going to start to slow. It'll still be at a healthy 10% or so. That's his view in 2026. But his regional preference is emerging markets, countries like Brazil. Is there a case to be made for getting further exposure beyond US shores at this point?
The case to be made for diversifying globally. So certainly that's the case. And then I think it's too simplistic to simply say international versus the U.S. The prospects are very different for different countries. So Brazil is a country that I think has some upside. Certainly Argentina does, but obviously with considerable risk. You look to Asia, Japanese growth prospects are a bit better, but everyone has its own issues, its own national issues. The UK is a perfect example. So I think there are prospects, opportunities overseas. We prefer to look at it company by company as opposed to by nationality. Within every economy, there's some sectors that have better prospects than others, and companies certainly have better prospects within certain industries. So we prefer to look at it from the bottom up.
Across your client base, Chuck, is there still a lot of cash on the sidelines? How much is there of dry powder is still to be deployed?
A tremendous amount. And in fact, one of our jokes is that, yes, we do have a bubble. It's a bubble in cash. There's a tremendous amount of cash sitting on the sidelines now, something like $1.4 trillion. And some of that is, of course, just normal savings, but some of it is a flight to safety or movement into a safer asset class. And so there is a lot of cash on the sidelines. And as someone joked many times, no one is more upset than someone holding cash, watching their neighbor get rich. So there's a lot of cash on the sidelines that could come off, and that would obviously be very positive for the market.
We are in a bubble. It's a cash bubble. Chuck Lieberman of Advisors Capital Management, thank you, sir, for your time this Thanksgiving. We appreciate it, with a view, of course, on US markets and beyond. So from turkey to T-bone steaks, Americans, of course, are consuming more protein than ever. Bloomberg's Wall Street Week takes a deeper dive to explain how weight loss drugs and changing diets are transforming the way we eat and how much protein we really need.
In 1918, Lulu Hunt Peters' book, Diet and Health, first popularized the idea of calories in the American diet and the practice of counting those calories as a way to keep healthy and fit. Ever since, Americans have been trying to fill their plates with foods we think are good for us. But that's constantly changing, and today, Americans are eating more meat per capita than ever before. According to the U.S. Department of Agriculture, U.S. meat consumption has increased by more than 100 pounds per person since 1909. Brian Ernest is lead economist for animal protein at CoBank.
The fastest growing segments in the grocery store when we look at fresh is yogurt, cottage cheese, and eggs. These three things really have kind of a halo effect when it comes to health for the consumer. Each one, I believe, is seeing double-digit sales at the grocery store here in 2025. Specifically things that have stronger protein components to them, but also lend themselves very well to changes in flavor and fit a profile that accepts and adopts flavor profiles very well. Animal protein in general has seen strong growth over the last couple of years. If we look over the last 10 years with the U.S. consumer, chicken consumption has grown by nearly 19 pounds, whereas beef and pork have been relatively steady.
We're seeing very strong demand overall. In fact, our value-added sales this year have been up versus last year, which is great opportunity for us. And that goes well beyond just Thanksgiving turkeys.
One of those sources of animal protein is turkey. And Jay Jandrain is the CEO of Butterball, the largest producer of turkey in the U.S. The iconic American brand has been in business since 1954.
Butterball, when only the best will do.
We know consumers are health conscious right now, and there's a lot of focus on protein, and turkey is naturally a good fit for that. It's low in fat, high in protein, and it's a very economical source of protein as well, particularly during the holiday. When you see product at about $1 per pound, it's an incredible value for the consumer. One of the things that we're seeing particular right now is a category that's real growth for us is our ground turkey business. And some of that is just because more and more consumers are realizing the opportunity is to use ground turkey in their everyday meals. But then also, given the incredibly high prices in beef right now, it's a very good advantage for consumers who are looking for a ground meat product to use turkey instead of ground beef.
American consumption of protein from animals and other food sources is up, but so is the use of protein supplements from new companies like David Protein, maker of protein supplement bars. Its co-founder and CEO is Peter Rahal.
In our first year, we'll do $150 million in sales, which I believe is the fastest growing food company. And next year, we're forecasted to $300 million plus.
Before David Protein, Rahal founded RX Bar, which he sold to Kellogg for $600 million in 2017.
Americans, we keep jumping from different diet trends. So first there was Atkins, then there was the paleo diet, then there was Whole30, and then there was keto, fasting, plant-based had a moment. And if you look at the fundamental reason for those trends and what drove them, they're really around body composition changes or weight loss. Every January, everyone feels like they need to get back in shape, and so you're looking for diet as a solution to that. We don't want to be susceptible to those diet trends, and we wanted a position that was factual and around something that is true.
But do we really need all this protein? Barrow says that for most Americans, the quantity of protein itself isn't the problem.
For the average American, we recommend 10 to 35% of your total calories should really come from protein. And so narrowing that down to, let's say, a 2,000 calorie diet, if 10% of that needs to come from protein, that would be 200 calories of my total protein needs should come from protein. And then equating that to grams of protein, that would be about 50 grams of protein for the average American. And so if you want to translate that to what that means in terms of food, if you eat a 6-ounce piece of steak, that's going to give you about 50 grams of protein, which is plenty for your protein needs for the entire day.
What explains the recent interest in protein, and why is consumption on the rise? Rahal says part of the answer is GLP-1s.
For the first time, we actually don't have Americans going to a diet to lose weight. We have Americans going to a drug to lose weight. And so that's changed this whole entire pattern in how Americans are thinking about nutrition.
Roughly 8% of the U.S. population is currently on a GLP-1 weight loss drug like Ozempic or Mounjaro, a share that may grow after President Trump reached a deal with drug makers this week to make their weight loss drugs more affordable.
You mentioned drugs. GLP-1s are very much in the news right now. Does that change your protein needs?
So there's still a lot of ongoing research about that. The emerging evidence that we're seeing is that there are some patients that take GLP-1 agonists that experience lean muscle loss, right? Lean mass going down along with, the fat loss. And so the need to, let's say, can we compensate that with protein levels? And the rationale for why that happens is still under investigation. But in general, if you are losing lean mass, we do want to replenish that and make sure you're meeting your protein needs.
While they're looking to reduce the caloric intake, they may be looking to increase the protein as a portion of overall caloric intake. So protein has lent itself very well to this, and we're starting to see products on shelf that are marketed towards users of GLP-1, and these are more inclusive of protein in general.
GLP-1s are changing our nutritional needs as a country, and Rahal says that's welcome news for products like David Bar, which is a high-protein, low-calorie option that retails for around $3 a bar.
So The big need we're addressing with our product is to deliver as much protein with the least amount of caloric impact. How do you basically be a vehicle for protein without having a lot of consequences on both sugar and calories?
What is the sugar content?
0 grams of sugar.
And how much protein?
28 grams. I think one of the biggest problems with protein is affordability. If you're having a high protein diet, it's very expensive. Turns out carbohydrates and fats are much less expensive. As other protein options get more expensive, I think it makes our product's position more valuable.
You mentioned that steak can be expensive. It's particularly expensive right now. The price of beef is really going up. Do you see that as affecting your marketplace position?
Yeah, I think it helps us because one of the ways we drive consumer surplus is if you just look at what it costs to get 28 grams of protein, in a steak or a salad, it's $20, $30. In our product, it's $3.25. So it's a tremendous value. And then there's no preparation. You can just eat it.
Our thanks to Cornell's Joeva Barrow, Butterball CEO Jay Jandren, and David Protein CEO Peter Rahal. Coming up, US presidential envoy Steve Witkoff will lead a delegation for talks in Russia next week as President Trump pushes for a deal to end the war in Ukraine. We'll bring you the latest. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Markets. Let's check in, of course, on the equity space to kick things off. Pretty tepid session in Europe so far, largely unchanged on the benchmark Stock 600. On a sector-by-sector breakdown, top of the list, financial services coming through with gains of 0.8%. On the bottom of the list, basic resources down 0.4 as a sector. Weaker copper prices and pretty tepid oil prices, part of the mix there within that sector. In terms of the FTSE 100 here in the UK, down 0.1% right now, but still above that 9,600 level. S&P E-mini stateside, flat as a pancake as we look, of course, to a closed market on Thanksgiving, and traders will be back at their desks for half a day on Friday. Thin liquidity, of course, is a key factor in the session today. Nasdaq 100 futures pointing to very modest gains of just 2 points. Let's flip the board and have a look what's happening across the currency space, a check on gold and a check on Bitcoin as well. We'll start with the UK benchmark 10-year. 446. There is a bit of selling pressure of sovereign debt here in the UK. You're seeing a similar picture, actually, in our European counterparts as well. But giving up some of the gains that came through for gilts yesterday with yields up 4 basis points. 132 on the pound, a little softer, 0.1%. Bitcoin back above 91,000. And gold a little softer by 0.1% above 4,000 150. To geopolitics right now. U.S. presidential envoy Steve Witkoff will lead a delegation for talks in Russia next week. That is according to a Kremlin official, as President Trump pushes, of course, for a deal to end the war in Ukraine. Bloomberg's Greg Sullivan joins me for the latest. Greg, what do we expect? It's not the first time, of course, that Witkoff has been in Moscow. It won't be the first time that he'll have met President Putin. Will the mood music be different? Can they move the dial, move the needle on these peace talks?
Well, that is the big question, and that is what everyone is watching. As you said, the Kremlin has confirmed that Steve Witkoff is expected in Moscow next week. We don't know the exact date that he'll be there, but we do know that he's expected to meet with President Putin yet again. Obviously, this comes amid President Trump's push on his proposals to end the war in Ukraine. There has been a lot of diplomatic flurry around this, and it's happening on both sides. Secretary of the Army Dan Driscoll was in Abu Dhabi meeting with Russian officials. The U.S. said that touched on the topic of ending the war in Ukraine, though the Kremlin said that while the meeting did happen, the peace proposals did not come up in that talk. The Kremlin also said that they've seen the peace proposals, but they haven't yet had time to discuss them thoroughly or review them. So this is what we expect the topics of discussion to be in Moscow. We also know that Secretary of the Army Dan Driscoll is expected to go to Ukraine as well. So there's a lot happening here. But as you said, will the music change? It's hard to know because there's some really big issues at stake, and it's really hard to see how those are bridged between the Ukrainian and the Russian positions.
And that challenge, Greg, brings us to the question as to where the Trump administration applies the pressure. And it's varied, that tactic, hasn't it? Where do you think the pressure will be if they don't get movement on this? Is the Trump administration ready to ratchet things up once again on Russia, or do they swing back to pressure on Kyiv and Ukraine?
You're right. We've seen both in recent months. Obviously, there's been that disastrous White House meeting between Zelensky and Trump. We've seen Trump accuse Ukraine of not being grateful for the aid. But we also saw the White House impose sanctions on Russia for the first time during Trump's second term. That hit, of course, the largest oil producers in Russia, which could inflict real economic pain on Russia. At hand right now are key issues around land, territory, what exactly will be in whose hands. Moscow is seeking land that it doesn't actually control militarily right now, that it hasn't been able to gain militarily, and also security guarantees. Ukraine wants viable security guarantees to make sure that Russia doesn't restart hostilities down the road, but Moscow wants to limit the size of Ukraine's army and prevent NATO from being stationed there. How they bridge that gap, where Trump applies the next round of pressure, those are key questions that we'll be watching for here and potentially out of this meeting with Witkoff.
Okay, we'll continue to watch what happens, of course, on the ground in Moscow, but with the latest and the context, always important. Greg Sullivan, thank you very much indeed for that update. Let's get back to the markets briefly. We've been checking in on the European picture, where you don't, on the top line, the European stock 600, see much interest. Below the hood, though, there are some stories to be told around gains coming through for financial services, autos and real estate are your leading sectors right now in Europe. On the downside, basic resources off by 0.4%. The futures picture, largely unchanged stateside. Thanksgiving, thin volumes, thin liquidity. Markets have been betting, though, on a more dovish Federal Reserve. Coming up, the latest on that deadly fire in Hong Kong. We'll bring you an update. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Bloomberg Markets. Let's check in on what's happening across equities right now. European stock 600 is flatlining, 3 days of gains. We'll see if we can eke out a 4th day of upside for the European equity space. US stocks notched 4 straight days of gains. Now, of course, Thanksgiving holiday, and happy Thanksgiving to all of those who celebrate, of course. No US trading today, then traders back at their desks for half a day tomorrow. FTSE 100 currently down 0.1% after the UK budget, still holding above 9,600 on the FTSE 100. S&P E-minis largely unchanged again after 4 straight days of upside. NASDAQ 100 futures pointing very modestly to a point higher. Let's flip the board and check in on some currencies, with the pound continuing to be in focus, and a bit of selling pressure coming through for UK gilts right now. So yields are up 4 basis points. Yields are up across the UK curve, but you're also seeing a bit of selling pressure, it's worth noting, in other sovereign debt within the European space. So the UK seeing a little bit more pressure than some of its counterparts on the continent, but still below 450 on the benchmark 10-year. 132 on the pound, a little softer by 1/10%. Bitcoin back above 91,000, and gold a little softer, just by 1/10%, and still above 4,150. We're going to switch focus now to the tragic story that continues to unfold in Hong Kong. At least 55 people have been killed. Hundreds are still missing in what is Hong Kong's worst residential fire in more than a century. 3 people have been arrested in connection with the fire at a high-rise complex. Min Min Lo, out of our Hong Kong bureau, sent us the latest.
I'm here at the scene of this fire in Tai Po that has been raging on for over 24 hours now, and we can still see fresh fire ablaze in certain apartment units, and it shows you just how challenging it has been to fully put out the fire. The fire department gave a press briefing earlier. They said they have the fire under control in at least 4 buildings. They have updated the death toll to 55, 51 dead on site, 4 more dead on arrival at the hospital. And as of this morning, hundreds more were still missing and unaccounted for. It's been a devastating night for these Hong Kong residents who are staying in these government-subsidized buildings. It's an estate that is over 40 years old, undergoing heavy renovation, and there were these bamboo scaffoldings, green mesh surrounding the buildings that help to spread the fire quicker than usual. And authorities said they found substandard materials, inflammable materials in some of the floors, including styrofoam boards sealing some of the windows, tarpaulin sheets, plastic cloth as well, materials that are not compliant with Hong Kong regulations. And so a criminal investigation is ongoing, and authorities have arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence. But for now, many of these residents are just overwhelmed and figuring out where are they going to stay, as they have lost all of their belongings and their homes. Min Min Lo, Bloomberg News, Hong Kong.
Bloomberg's China correspondent Min Min Lo in Hong Kong for us, and of course that is a story that continues to evolve and will keep you updated. Let's get back to the markets right now, bringing some analysis from Shamila Whelan of Westbourne Research. Shamila, there's not much to write home about when it comes to the markets today, but we have seen a bit of consolidation, if that's the way to frame it. Certainly some upside for US stocks. A lot of that, it seems, coming down to expectations around a more dovish Fed, expectations of a cut in December. What is the next catalyst for these markets?
What's the next catalyst?
Is it the Fed? Is it something else?
I think it's going to be the Fed and some stabilization in the labor market.
What gives you the idea, what makes you convinced, if you are convinced, of what is suggesting that you're going to see stabilization in a labour market where we have seen some fractures stateside?
No, we've certainly seen some fractures, but let's put the labour market there's no doubt that the labour market has softened, right? But let's put it in perspective. Unemployment is at about 4.4%. compared to 4% at the start of the year, but the pre-pandemic average is about 5.1. So the labour market has softened, but it isn't collapsing. The real problem is the cost of living, right? If you look at this household disposable income, it's in 2024 in 65% of states it was below the national average, and since 2019, household real spending has outpaced real income. So it's going to be about what Trump does going forward. And I think now he will be very much focused on delivering the domestic MAGA agenda, which will help the housing market. Sorry, not the housing market, the labor market and the consumption story.
And that happens in 2026, and the lead up and the midterms is a guiding point for the Trump administration on that?
I think so, absolutely. He has to be totally focused, looking at his approval
So as an
rating.
investor, how do you position around that?
So that is all the fluff around it. For me, as you know, Tom, it's my business cycle framework to investing, and I look at the 5 indicators, and they are, like this year, were signaling, no recession, no inflationary spike, and next year I'm looking for actually growth to pick up. And the most important leading indicator, which is the profit cycle, has strengthened through the first 3 quarters of this year in the US, Japan, Taiwan. Investment cycle is an upswing in the US, Japan, Europe.
So where are we in that investment cycle?
The US is still quite some time away from entering the boom stage. And I say that because although the corporate profit cycle and the investment cycle is in upswing, the credit cycle is still in downswing. And actually real lending rates are tight for where the economy is in the business cycle.
Do you have a level of concern? What's your level of concern around credit risks in the US right now? We have seen some high-profile blowouts in the auto sector, some vulnerability, some cautionary words from the likes of Jamie Dimon, of course. Is that a potential black swan for 2026?
I'm not seeing it right now because if of course there's blowouts, but the question is does it pose a systemic risk, and is it a big problem in the corporate sector? I don't see it. If you look at U.S. corporate balance sheets, are really, really strong. Corporate debt as a share of GDP, corporate debt has been trending down for years now. If anything, they're under leveraged. We just spoke briefly about the tech companies and the round dealing, and that is a concern. But with Oracle, they are meeting that out of balance sheet, right, rather than borrowing. Very different from .com, right?
So the rally continues. We have further upside for US stocks next year. Do you have a target in mind for the S&P 500 that you can point to? And if so, if that is your view, what derails that rally? What's the biggest risk at this point?
Okay, so I don't have a target, but what I am looking is for a broadening of the rally, because at the moment is, as we know, very much tech.
At the expense of Mag 7? As in, investors rotate out of the hyperscalers and into...
I think, with Mag 7, it's poised for a correction. We saw last week the markets take a hit.
Mag 7 is still poised for a correction.
Yeah, any correction would be a healthy correction, but the underlying trend, it's the AI wave. So it's a healthy correction to buy, but I just see the rally broadening into industrials and consumption discretionaries as well. Because also remember, thanks to Trump's one big beautiful folly, as I like to say, call it, there's 3.1 trillion being transferred to households in federal tax cuts and transfers between 2026 and
Do you think investors are underestimating the fiscal impulse that we're going to be getting, not just from the US, but Japan, possibly China, and Europe as well next year?
I don't think they're really talking about it. And when everyone talks about fiscal impulse, they talk about China. But actually, if you look at it, China's spending the least, right? The big fiscal impulse is from the US, which we know well, but also Europe, right? And when you put the numbers in perspective in Europe, they're pretty close to the US in terms of Biden's now defunct Inflation Reduction Act and the Science and Chips Act. And then there's the 800 billion rearm Europe plan. There's a lot of fiscal stimulus coming here through both, and then we've got Takaichi with 134 billion.
The new Japanese Prime Minister. How do you play the European stimulus story then, the defence story, the infrastructure story? What is the best play around that from a stocks perspective?
From the start of this year, I've been overweight European defence as well as US defence, and I would stick with those. I would be overweight European industrials. Right? I think the consumer story will lag the US, while in the US I would be broadening across sectors.
Would a peace deal between Ukraine and Russia lead you to sell those defence stocks in Europe?
No, absolutely not, because
we've seen them taking a knock this week on any headlines around progress in talks between Ukraine and Russia, and big tech names like Rheinmetall have taken a knock.
I would say that is an opportunity to buy, because, and not only just European, US defense stocks, because as much as Europe is going, okay, it's all for European companies, the reality is the European defense sector is, besides one or two big names, is very, very fragmented. They can't produce at scale. And more than that, there are, for the software technology, including navigational and missile defense, they're totally dependent on US for technology. So I would say, I'm overweight both US defense as well as European defense, and especially given the NATO commitments. So Ukraine, you get a peace deal, but the pressure is on Europe, and especially if we get the kind of deal that is being discussed, there's even more pressure on Europe, because Trump just wants a deal and wants to start focusing on the domestic agenda.
What sectors or what names are you steering clear of right now?
You know me, Tom. I'm not a stock picker.
No, but okay, right. Sectors or regions that are looking less attractive or overvalued.
What am I steering clear of? For sure, China consumer discretionary, China property, Japan as well. I prefer industrials and even export cyclicals to consumer discretionary, even despite this week's fiscal stimulus package. The shine has come off India a bit for me.
Have we felt the full impact of tariffs now? Is that a story that's behind us? Have the industrials, you talk about industrials, have they absorbed and adjusted around tariffs?
The tariff war is over. The war was over in May, and I think I was in earlier at the beginning of the year where I said, like, by the second half of the year, the tariff war would be over. All major trading partners would have either renegotiated trade deals with the US or would be at the negotiation table, and that's what has come to pass. And I think the thing to mention about the tariff war is how modest the impact has been, right? If you look at global exports, and in particular Asian exports, they've continued to rise through the tariff war. You look at what's happened to global exports, they fell by about 7% between December and February, and since then they rebounded 17%. And you compare it with GFC, it fell 47%, peak to trough. Compare it with the pandemic lockdown, 33%. Latest data shows Asian exports are up 15% year on year in October.
Okay, relative resilience in the face of that trade tension. Shamila,
they've absorbed it.
Thank you very much indeed for that perspective. Shamila Whelan of Westbourne Research with those views, of course. Turning to a top story now that we are following, and Shamila was talking about the defence space, so we turn our attention now to the Pentagon, which has found that Alibaba, Baidu and BYD should be added to a list of companies that aid the Chinese military. That is according to a letter to Congress. The Deputy Defense Secretary informing lawmakers that the three companies, along with 5 others, merit inclusion on the list, which identifies businesses connected to the Chinese military operating in the US. Alibaba said there was, quote, no basis for the move and that it would not affect its ability to conduct business in the US or anywhere in the world. Switching gears to retail now, Gap delivering stronger than expected sales, defying the slowdown that's hit much of the consumer space. CEO Richard Dixon spoke with Bloomberg's Lisa Abranovich about the holiday shopping season.
Look, holidays come every year. We're off to a great start. We have great activations that are planned this holiday. In particular, I'm very excited about certain categories: denim, sleepwear, fleece. These look really strong. Our value proposition, our marketing executions. Hopefully you've seen some of the creative. When you go online to our sites, we're well positioned to serve our customers wherever and however they choose to shop. We just, for example, Old Navy did a partnership with DoorDash, which provides convenience for tens of millions of users. Our stores are ready, our teams are fired up, and we're looking to a strong finish to the year.
So, Richard, I expect you actually coming on and dancing to Milkshake in the background, because I hear you talking about some of the cultural relevance, and I wonder how much the battle for cultural relevance has been front and center for you about that viral ad. How much are you looking to new partnerships, new types of advertising as a way to really drive Gap strategy?
Cultural relevance is a very important part of our playbook, and we talk about relevance with revenue. You can have relevance, but not revenue, and so the key to success is when you have relevance that drives revenue. And collaborations do help brand relevance. Now, it has to be the right collaboration and a win-win methodology, but it does do a really good job broadening its consumer base when it's done well, and continue the drumbeat between bigger and larger releases. So to stay in the cultural conversation, Gap brand has launched over 13 collaborations that continue to just drive excitement and surprise. But what I will say is that these are very precise. And as I said, need to be win-win and authentic to the customer. They do attract different audiences, and in the Cat's Eye case, we did an extraordinary job continuing to introduce and discover Gap to Gen Z, which has been a really exciting segment for us. We got 8 billion impressions, 500 million views for the Better in Denim campaign. It was literally a global takeover, and it's become one of the brand's most successful campaigns to date.
Yeah.
We drove incredible traffic and, of course, double-digit growth in denim.
I have to ask, Richard, was this a direct response to American Eagle's Sydney Sweeney ad?
Look, I think the fashion industry is proving creativity. And competitively, we love the fact that there's lots of different conversations around fashion, and particularly denim. We are front and center with our strategies. We did a Better in Denim campaign that was specific to Gap, expressing our originality. And, you know, to some extent, sometimes it's convenience and sometimes it's ironic. But I think in the context of the denim dialogue, we certainly had our fair share of goodwill.
Well, that was, of course, Gap CEO and President Richard Dixon. Coming up, a conversation with the UK Chancellor, Rachel Reeves, following the latest budget decision. That's coming up. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to Bloomberg Markets. UK Chancellor Rachel Reeves catching up with Bloomberg's Lizzie Burden following the latest budget decision. Take a listen.
And the OBR have confirmed that they have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
The leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets. But what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
When you talk about cutting borrowing, the Institute for Fiscal Studies says it's a spend now, pay later budget. What do you say to traders who are still concerned that this fiscal tightening is backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office for Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy. And indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecasts around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the forms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
That was UK Chancellor Rachel Reeves. Coming up in the next hour, we're going to hear from Ian Harnett of Absolute Strategy. We'll get his views on these markets. That's coming up. This is Bloomberg.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness has been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up to the minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back to Bloomberg Markets. Happy Thanksgiving, everyone. Global stocks coming close to erasing all of November's losses as traders are raising bets that the Fed will cut rates next month. The UK Chancellor delivering a budget that postpones most of the pain from tax hikes until the end of the decade. A Bank of England rate cut, though, next month is still all but locked in. And the Kremlin saying US presidential envoy Steve Witkoff will lead a delegation for Ukraine peace talks in Russia next week. European stocks still searching for direction, but slightly brighter than at the start of the session. The Stoxx 600 is now up 0.1%. We're seeing you showing you a cross-asset board there with UK gilts in focus, and of course that is relevant in light of the market reaction to the budget that dropped yesterday. In fact, gilts rallied yesterday. Today, a bit of a sell-off, nothing too dramatic, but yields, as you can see, are up around 4 basis points on the benchmark UK 10-year, 446, still below that 450 level. You have seen a run in terms of the gains that come through at the front end. The back end of the yield curve has faced a little bit more pressure year to date. 132 on the pound, marginally softer, 91,000 on Bitcoin, up 0.9%, just above that 91,000 level. A bit of a reprieve for crypto, at least in the last 24 hours or so. And gold, just above 4,150, a little softer though, by 0.2%. Let's get more details in terms of the market moves and adjustments around the UK budget and bring in Bloomberg's Moena Coniam, who had, of course, a frantic day along with the team yesterday with the OBR release coming 1 hour before the Chancellor was meant to release and detail the budget. The investor community still adjusting to the detail because it was complicated and, in your lines, a little messy. I'm quoting from the last time we spoke to you, Moena. Where do things stand right now? Have the markets settled around this budget? What is the level of comfort right now from investors when it comes to UK PLC?
Well, we're certainly not seeing any major reaction today. And of course, the big caveat is that it is Thanksgiving holiday in the US, so there is limited liquidity, but that could have exacerbated some moves. What we're seeing is things fairly steady. Bond yields, which went down considerably yesterday, actually, with the Chancellor having reassured the markets to an extent, having extended her headroom, they have come back a bit today. But we're not seeing any extreme moves. And I think there's just a little bit of uncertainty, a little bit of lack of excitement, lack of energy in the markets. And people are probably sifting through what was announced yesterday, a lot of details, and just trying to work out exactly what it means sort of longer term for growth, for businesses, you know, all of those things, the inflationary measures, or sorry, deflationary measures that she announced, you know, how much impact they will really have. And of course, a lot of these measures being quite sort of backdated, you know, back end, not coming into effect immediately, means that perhaps some of the initial reaction is, you know, fizzling away a bit.
Morwenna, thank you very much indeed. Morwenna Graham on the market reaction, of course, to that budget. And as Morwenna was saying, a little bit of selling pressure coming through on gilts today, but nothing too dramatic. Let's get another voice, another perspective right now, bringing Ian Harnett, Absolute Strategy Research, Chief Investment Strategist, joining us around the desk as well. Ian, your take on the budget, the market reaction, and whether, to Morwenna's point, we are now looking at a market that's maybe positioning ahead and starting to think about what growth prospects are for this UK economy.
I think the key thing is to recognise the UK has actually had this big valuation discount in terms of equity markets.
Deservedly so?
And deservedly. And, you know, what this budget does is nothing to solve that problem. You know, you haven't energised either the corporate sector or the household sector to go out and spend. And historically, that's been what you've needed to do to get government deficits down. You can't tax your way into a better position.
The gilt markets have not sold off aggressively. There is relative calm. That clearly presumably is a positive when we're thinking about the read across to rates.
Yeah, I think that it's a positive to some extent, but you know what that also tells you is that you're not actually seeing anything that's really generating growth here. And one of the things that we've pointed out in a note to our clients recently is that you're actually looking at a very unusual situation for the UK economy. We are looking at the household sector, the corporate sector, and the government sector all reducing their debt levels at the same time. It's called deleveraging, and that happened in Japan, it happened in 1930s US, and it doesn't end very well. So unless you actually try and get some leverage going back into the household sector, growth into the corporate sector, you know, what you find is that we're going to be stuck in this situation for a long time. And, you know, I think that the government's hoping for a few positive windfalls between now and those tax impacts. It looks pretty dangerous.
The BOE doesn't run to the rescue with lower rates. That could help on the leveraging side.
It can help a little bit. But, you know, what you actually really need is much more supply-side dynamism. You're right that if they manage to cut rates, if they manage to get collateral, you know, flowing again, and that means getting the housing market moving again, then you start to see something more dynamic happen. But as a small business owner and as a consumer, I'm afraid that yesterday didn't do very much for me.
What do you do with UK stocks then? Because the FTSE 100 has outperformed year to date. We know it has that international exposure. Yep. FTSE 250 challenge, gains of about 4%. What do you do with UK equities?
So at the moment, we're still underweight on UK equities. I think we're looking at an environment where, you know, the kind of stealth taxes that we've seen yesterday in terms of thresholds, in terms of pensions, together with this idea of trying to meet complex tax systems with more complexity. 88 measures, the most complex, you know, budget that we've seen, I think.
Was it 88 measures?
Yeah, 88 measures.
Okay.
And that is just not something that's going to really energise this market. And, you know, we've got a lovely chart for clients really showing you that since the 1970s, UK's performance relative to the US has just been all about relative earnings growth. Until you start to generate more profits in the UK relative to the US, structurally, we're going to deserve that discount, I'm afraid, Tom.
So that discount continues for UK stocks. I mean, you see that really pronounced in the banks, you see it pronounced in the energy space as well. Where does that take you in the US then? How much exposure do you want in the US and where? What sectors, what categories?
We're still overweight the US. You know, to break that US exceptionalism, you need three things. You need strong global growth, you need weaker dollar, and you need the US to disappoint. So you need that AI bubble to burst. So tactically, in a world where you've got strong earnings growth and you've got the Fed likely to cut, you know, it's very difficult to get too bearish. Now, that's about shorter-term investing. But longer-term investing, we are at very high valuation levels. And, you know, we just put out a note saying that you could be looking at a lost decade for proper investing rather than just trading.
The AI bubble does not burst in 2026. Is that your view?
You know, we've written about this being the AI endgame. So we're close to the point where you do want to get very nervous about it. At some point in 2026, I suspect there will be challenges to it. We are in a bubble. We've got exponential prices. We've got companies buying each other with their stock. We've got them buying each other's goods. And we've got vendor financing. And finally, this massive capex spend. So when you add into that the type of debt increases that we're seeing as well, all of those things suggest that this is a very fragile rally now that we're reaching the end of. But, when it ends, I think no one can tell you that.
What expectations are you making around the Federal Reserve in 2026?
So yeah, we'd expect them to see probably a rate cut either this meeting or the next meeting, and then probably one more. But that's going to be about
just one more in 2026.
Because all of our models are actually looking quite positive for 2026 for US growth, for global growth. They're not looking that bad. Again, that may be something that bails out a number of treasuries around the world.
Yeah.
But and remember, we're getting a big benefit from lower oil prices as well. So that's going to be the positive dynamism that you could generate is going to limit probably the rate cuts both in the US but also probably here.
What does that mean for the breadth story then? If you have rates, you're suggesting rates are at around the 350 level in the US at some point next year, and they stay around that level.
So you start to see
does that constrain breadth?
No, I think it starts to broaden out to some degree because if you're seeing this convergence as we see a downward revision to those earnings coming from the AI hyperscalers, they're still growing strongly.
Still double digits?
Yeah, oh, absolutely.
Okay.
But we're still looking at the moment at 11, 12% EPS growth for the US. And, that is, cutting rates against that background has never been done in the last 40 years. And the closest that you came to it was 1996 and 1998.
Yeah.
And, both of those provided 20, 30% gains for investors.
Is there a risk of overlooking the power that President Trump brings to bear on the Fed with the new Fed chair?
So, one of the things that you will see is that, 2026 is all going to be about the midterms. And so, both Secretary Bessent and President Trump are going to recognize that they need to do things that do exactly what I was talking about for the UK. They recognize in the United States that the only way that you can get the deficit down is to re-leverage the private sector and to get consumer spending and corporates investing. And that's really the narrative that we will see them. And they will do innovative things around housing, I'm sure. We're already hearing, suggestions of a 50-year mortgage, which I think is not going to work. But also things like assumable mortgages as well in the States. So much more dynamism and more interesting policies, I suspect, coming out from the States than the UK.
You're the second guest who has come on in the last couple of hours to say that the midterm election and the focus from the Trump administration there should be something to factor in for investors, and the focus on cost of living as well.
Oh, yes, affordability.
Yeah.
And, we've written about this for clients as well. But this applies for the Bank of England as well. Unfortunately, only central bankers are interested in core inflation. In fact, most of us aren't interested in inflation at all. We're interested in price levels.
Yes.
And that's the thing that needs to be tackled. And the Americans will do that.
Ian Harnett, thank you very much indeed of Absolute Strategy. That's a good note to end on, isn't it? The Americans will do that on the day of Thanksgiving. Ian, thank you very much indeed with the analysis across these markets here in the UK and stateside as well. Coming up, we're going to give you behind-the-scenes look at how Nike is once again putting its best shoe forward. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Markets. Let's briefly check in on the markets then. Momentum, of course, on a day of thin volumes with the Thanksgiving holiday, of course, stateside. European stocks eking out very modest gains of just shy of 0.1% so far. Following 3 straight days of gains, we'll see if we notch up a fourth today. Here in the UK, FTSE 100 down 13 points. S&P E-mini stateside currently flat. Nasdaq 100 futures in similar territory. 4 straight days of gains for US stocks, and trading will resume for half a day, of course, on Friday. Let's flip the board and have a look what's happening in the currency space with an eye also on Bitcoin and gold. 446 right now on your benchmark UK 10-year, with yields up close to 4 basis points. A little bit of selling pressure coming through for the sovereign debt of the UK after a rally yesterday on that UK budget. 132 on the pound, largely unchanged, and you're back below 91,000 for Bitcoin now, 90,788, still up by 7 tenths, but giving up some of the earlier gains for that biggest cryptocurrency by market value. Gold at 4,152, just a little softer by 0.3%. Let's check in on one of today's top movers now. Shares of Puma are soaring after Chinese sports apparel company Anta is among first exploring a potential takeover of the company. Sources telling Bloomberg that Anta may team up with a private equity firm if it decides to move forward with an offer. You can see the shares spiking 15%. So from Puma to Nike now, because it's been over 1 year since Nike's CEO Elliott Hill took the helm of the world's largest sportswear company, with a one-time intern helping blunt a long-time sales slump. Bloomberg TV's Romain Bostic sits down with 3 key players in Hill's offensive strategy for a behind-the-scenes look at how the retailer is putting its best shoe forward once again.
In the heart of Western Oregon lies a 750,000 square foot plus complex. So secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
Hundreds of motion picture cameras surrounding an indoor soccer pitch. Speed sensors encircling an Olympic racetrack. Electronic pressure plates embedded in a basketball court. Biometric hookups to assess a runner's gait and posture. A hermetically sealed room that mimics the brutal heat and humidity of a Tokyo summer. All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab. An evolution from the company's experimental kitchen counter roots and a nod to its future of putting the athlete first.
This is our Nike Sports Research Lab in our Innovation Center, and this is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete, right? Phil's point, we're in this amazing building where we have dreamers building the future and work with not only elite athletes, but the everyday athlete to take those insights and understanding and build not only for the elite, what you've seen being here today, but then are able to translate those innovations through every price point.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new chief innovation, design, and product officer, overseeing ideas across the company's 3 units, Nike, Jordan, and Converse. They are 2 of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. Under Donahoe, it was a tenure that saw annual sales begin to drop in 2024 as demand waned for the brand's lifestyle sneakers like the Nike Dunks, and as relationships with retail partners soured. Elliott Hill is now trying to plug the hole with a refocus on athletic performance.
We're going to obsess sports. I think that's been since Elliott returned. That's been a key part of our charge as a leadership team. And we're already starting to see the fruits. You know, we spend a huge amount of time bringing athletes here. We text with Faith Kipyegon, Elliot Kipchoge, LeBron James. We bring them to our home and then we go to their homes. So the origination for ideas is always the athlete. That's at the core of everything we do. And then we start to think about how do we apply those insights broadly to the 8 billion people who we're trying to invite into sport every single day.
So when it does actually go to market, are you going to target it towards the athlete, or are you going to try to maybe just target it towards the casual wearer?
Everything that we do and the focus on performance is listening to the elite athlete and capturing that data and information to help lead this amazing innovation. So we will for sure be connecting this story exactly to our athletes, which or who helped give us those insights, who we tested with, and that will be how we determine how we tell that story going forward. So it's very much about the insights from the athletes, the data we captured, the innovation we're delivering, and helping communicate that to consumers all over the world.
The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. I even got a glimpse into the retailer's future with Project Amplify, a footwear system with lightweight motors and rechargeable cuff batteries that aims to help you move faster with less effort. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. You know, there's plenty of opportunities where technology, we have to sort of burn the candle from both ends and figure out where the best opportunity is.
The ethos of the company, and particularly since Elliot has taken over, is put more a focus back on the athlete. I mean, what's the difference now between what you're doing in this building and say what Bowerman was doing, you know, decades ago and, you know, whatever shack he was working out of?
Honestly, today it's just a more modern, sophisticated incarnation of what Bill Bowerman was doing in his lab. You know, this notion of having an idea on how you might improve an athlete performance or protection, actually building it, you know, Bill Bowerman pouring into a waffle iron, modifying a shoe. That's what this building is designed to do, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka. In its latest earnings release, Nike sprinting forward, driving over 20% sales growth in the category thanks to a redesign of its 3 big running franchises, Vomero, Structure, and Pegasus. The Converse brand, however, a problem area. Sales there, they're declining 28% in the most recent quarter. Do you worry at all about some of the recent upstarts that have come into this space, particularly on the performance side, Hoka, On Running, Norda, etc.?
Well, we have 3 incredible brands here at the company. We have Converse, we have Jordan, and we have Nike. So I think a lot of the work that we're doing in this new multi-brand offense that we're in is making sure that we intentionally shape the 3 amazing brands that we have. That allows us to, at certain times, come together to go after an opportunity in the market, but also to be more specific about what each brand represents and the growth potential of each. I think when we think about that, I think it's true. It's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
And we look at innovation not just in product, like Phil's talked about, but how we tell our stories and how we deliver experiences in the marketplace for consumers. And when you think of some of maybe our latest, most innovative marketing concepts, I think back to the last Super Bowl, a male sport at a really important time around the world. And we told the story of So Win through our female athletes, right? We listened to their voice. We're deeply connected to where they were at that moment. And we're able to tell the story of the support of those athletes and what they are doing in the world of sport today. So I think that's one amazing example as we continue to innovate by listening to them where they are, where the world of sport is and sport culture, and then are able to deliver something like So Win.
Amy, I'll give you the last answer here, and this is really on what you want the Nike brand to be, beyond what it already is today.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking them somewhere new. And when we do that, there is all the opportunity in the world for our future.
Bloomberg TV's Romain Bostic catching up there with some of Nike's top executives. Turning to a top story that we're following in the security space, with the Pentagon finding that Alibaba, Baidu and BYD should be added to a list of companies that aid the Chinese military. That's according to a letter to Congress. The Deputy Defense Secretary informing lawmakers that the three companies, along with 5 others, merit inclusion on the list, which identifies businesses connected to the Chinese military operating in the US. Alibaba said there was, quote, no basis for the move and that it would not affect its ability to conduct business in the US or anywhere in the world. Switching focus now to an update on a tragic story that we have been following in Hong Kong. At least 55 people have been killed, hundreds still missing in what is Hong Kong's worst residential fire in more than a century. Our China correspondent Min Min Lo has the latest from the scene.
I'm here at the scene of this fire in Tai Po that has been raging on for over 24 hours now, and we can still see fresh fire ablaze in certain apartment units, and it shows you just how challenging it has been to fully put out the fire. The fire department gave a press briefing earlier. They said they have the fire under control in at least 4 buildings. They have updated the death toll to 55, 51 dead on site, 4 more dead on arrival at the hospital. And as of this morning, hundreds more were still missing and unaccounted for. It's been a devastating night for these Hong Kong residents who are staying in these government-subsidized buildings. It's an estate that is over 40 years old, undergoing heavy renovation, and there were these bamboo scaffoldings, green mesh surrounding the buildings that help to spread the fire quicker than usual, and authorities said they found substandard materials, inflammable materials in some of the floors, including styrofoam boards sealing some of the windows, tarpaulin sheets, plastic cloth as well, materials that are not compliant with Hong Kong regulations. And so a criminal investigation is ongoing, and authorities have arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence. But for now, many of these residents are just overwhelmed and figuring out where are they going to stay, as they have lost all of their belongings and their homes. Min Min Lo, Bloomberg News, Hong Kong.
Okay, Bloomberg's China correspondent Min Min Lo with the latest from Hong Kong. Let's get back to the markets right now. European Stoxx 600 is currently up 0.1%, so still on track for 4 straight days of gains, but it's a largely unconvincing session so far. US stocks flatlining, of course. Markets closed for Thanksgiving. FTSE 100 futures here, FTSE 100, in fact, here in the UK, currently down 12 points at 9,600. Still ahead, Eugene Rem, the co-founder and partner of Catch Hospitality Group. We'll get some details there. Stay with us. This is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You said they ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. Let's check in on European equities. We've got a view on US futures as well. Thanksgiving holiday, of course, very thin volumes. European markets eking out gains of 0.1%, so we're still on track for 4 straight days of upside for European stocks. Across your sectors, financials at the top of the list, gaining 1%. Auto's also doing pretty well here in Europe, gaining around 1% as well. On the downside, healthcare taking a bit of a knock on sector basis, down 0.4%. Here in the UK, the FTSE 100 is down 0.1%. S&P E-mini stateside, flat, as are Nasdaq 100 futures. Traders will back at their desks, of course, for half a day of trading tomorrow. Let's check in on some of the currency space, but we'll start with the UK 10-year gilt as well. We did see a rally for UK sovereign debt yesterday on that budget announcement from the Chancellor, Rachel Reeves, giving up some of the gains today. 446 right now, yields up close to 4 basis points on the benchmark 10-year, but you're also seeing selling, it's worth noting, in European sovereign debt as well. 132 on the pound, below 91,000 now on Bitcoin, so giving up some of the gains of the earlier session for the cryptocurrency at 90,600, but still gaining 0.6%. And gold, alongside some other commodities, under pressure in the session, down 0.2%. You're seeing pressure on iron ore, copper as well, and oil prices largely flat in the session. Let's turn to retail right now. Consumers showing signs of caution ahead of the US's largest shopping day of the year. Drum roll, of course, to Black Friday. Well, Auchincloss of EY writing, it's clear that consumers are losing some of the momentum we saw over the summer. As we look ahead to 2026, brands should be ready for a more cautious consumer mindset. Will joins us now. Will, thank you for your time. Let's extrapolate that on that then. There's a view, or at least there's some evidence, you're getting a K-shaped recovery, at least a K-shaped theme right now in terms of the health of the US consumer. Those on the high end doing quite well, those on the bottom end under pressure. Is that what you're saying? How do you see the consumer story evolving in the days and weeks ahead?
Yeah, that's exactly right, Tom. We do see sort of that K-shaped phenomenon that people are referring to. If consumers are wealthier or older in age, they tend to be weathering this better over here in the United States. If they're at the lower income spectrums, the pressure on inflation and softening wages have really put a dampening on their spending as they go into the holiday season. So that's something that retailers are having to grapple with, and it really starts to see and manifests itself in how the retailers are performing across, all the different segments that they serve.
How challenging then do you think the holiday season will be for those retailers, Will? And are they in a position where they can give chunky discounts to get consumers into stores and spending heavily, or is the margin pressure too acute for that, given the tariff cost?
Yeah, I mean, on the one hand, we're going to see a record number in holiday sales. I think we're going to cross the $1 trillion threshold for the first time, which is great news. But when you peel that back, it's only about a 2% we're forecasting increase year over year, and 2/3 of that is coming from price increases, not units. So it's sort of a tale of two cities, if you will, on holiday spending. And you're right, retailers have generally been holding on to margin throughout this period because they do face sort of a softening demand curve, and then also they're facing rising input costs. And you're not really seeing blanket discounting. Our channel checks and research show in food, promotional levels are about the same year over year. In the apparel side, the discounts aren't too steep as they try and really manage to better volume overall and better margins to kind of keep their shareholders happy.
Yeah, sounds like a challenging balancing act then for retailers. Well, on the tariff question, we had a guest earlier on the show saying the trade war story is over. It was done by May. Move on. Is that what you're saying in retail? How much more cost is going to be absorbed by retailers who had been pretty successful in bringing forward inventory at the start of this year?
Yeah, I don't think we're quite out of the woods on that yet, Tom. I think you know, I think retailers have adjusted to the new normal, we call it. But you know, retailers operate on seasons, and they can't always push through price increases immediately. Certainly in the online channels, they have more flexibility, but in store, it's a little trickier to roll out prices. And some of the ones that maybe under forecasted the impact of tariffs or haven't quite realized all the margin benefits they were expecting this year in anticipation of price increases, I think you are going to see in 2026 more price increases coming through in certain spots of the economy. And also, I think the tariffs, just at the general level that they are going to continue to put pressure on consumers and mute spending as we go into 2026.
Interesting that you see further price increases potentially in 2026. Well, when we think about the top end of that K-shaped dynamic that we're seeing across the U.S. consumer right now, which parts of the retail space benefit? I mean, it's clearly luxury. What else is benefiting from the top end of that K-shape?
Luxury experiences, restaurants are doing well at that higher end of the market. You know, when we talk to consumers, one of the key things they say they expect to cut back on actually is dining, because they're trying to muscle through this environment in general and buy the same basket they've always purchased in the face of rising inflation. So at the top end of that K curve, consumers don't feel that as much, and so they're still sort of treating themselves. They're buying perks and trips and experiences and things like that. At the lower end, though, they really are struggling to kind of make ends meet and hold that basket together. And you're seeing that, which is a concern, show up in the overall borrowing levels that consumers are taking on to kind of weather the storm. And that's something that retailers need to keep an eye out as well, and why we're more cautious going into 2026 because of the rising debt levels that consumers have taken on.
Is job insecurity a factor as well, Will?
It's a huge factor. You know, consumers are not great macroeconomists, but when we talk to them, they tell us they expect a recession in the next 2 years. They're seeing kind of the political and policy challenges out of Washington as a headwind. They are worried about AI and what that's going to do, and they're certainly seeing muted hiring, I think mostly because of the economy so far, but all that's weighing on their mind, and so they're trying to, as best they can, navigate all that uncertainty and maybe pull back a little bit to kind of weather this as they go forward.
Well, what else are you looking at category by category in terms of some kind of interesting dynamics that may come out of the wash through this holiday season?
Yeah, we keep a close eye on the restaurants. They are really under the gun. Firms that have done well in that space have really had a value message, and/or they've had kind of a very strong, unique value proposition in the market. But we expect with the continued inflation and pricing pressures that dining out is going to be under pressure. You're going to see discounters do incredibly well in this market, or better than average. Firms that haven't really reimagined their experience and haven't really leaned into a good value story are also going to struggle. So it's interesting to see as we get into January kind of how the holiday performance shaked out retailer by retailer, and we're going to keep a close eye on that.
Really smart insights on this holiday season and looking out to 2026. Will Auchincloss of EY Parthenon Americas, thank you for that take and that analysis. Let's bring you some lines that are crossing the terminal right now. We're going to switch focus to geopolitics, because Vladimir Putin of Russia has been commenting on this peace plan that, of course, continues to be negotiated between the US and Russian parties, with the involvement, of course, of Ukraine. Vladimir Putin saying that the US peace plan takes into account some of Russia's concerns. Putin saying that Russia is ready to discuss Europe's security concerns, and confirming that a US delegation will be visiting Moscow next week. Putin saying that Russia and Ukraine special services maintain contacts. So there appears to be some contact between Russia and Ukraine. We know that the two sides met in the UAE. Putin confirming that Russia and Ukraine officials met in the United Arab Emirates. Again, the top line is that Vladimir Putin saying that there are some elements in this peace plan that align with their policy priorities. Putin saying US peace plan takes into account some of Russia's concerns, confirming that visit by Witkoff and team next week in Moscow. We'll continue to bring the insights on that and the up-to-date lines, what it means, of course, as President Trump continues to push for that deal between Russia and Ukraine. Let's get to the market reaction right now. European stocks across the benchmark Stocks 600 just up shy of 0.2%, so slightly brighter, a bit of a move higher, possibly on the back of this news. We'll see how that, of course, washes out towards the end of the session. But you are now on track for 4 straight days of gains for European stocks. Here in the UK, FTSE 100 pairing some of its earlier losses, down just 6 points right now. S&P evenly stateside currently flat. There are thin volumes, of course, because of the Thanksgiving holiday. Nasdaq 100 futures also largely unchanged, pointing higher just by 3 points. And we'll have a look on a sector-by-sector basis as well. Again, financials still at the top of the list. On the downside, healthcare, energy and basic resources. Auto's getting a bit of a lift, up 1%. Here in the UK, 4.45 right now on the benchmark UK 10-year yields, currently up 3 basis points. So a little bit of selling pressure as we've been discussing across UK sovereign debt, but not making that much of a difference in terms of the gains that we saw yesterday for the UK sovereign debt picture. 132 on the pound, you're seeing 90,700 on Bitcoin, gaining 0.6%, and gold a little softer by 0.1% on the yellow metal at 4,157. Now, Bloomberg's Romain Bostic and Katie Greifeld, meanwhile, have been catching up with Eugene Rem, the co-founder and partner of Catch Hospitality Group, to discuss New York's cocktail culture, the impact of GLP-1 use on restaurants, and the group's new concept, the 86.
In the heart of the West Village, nestled between the brownstones on historic Bedford Street, is one of New York's hottest new restaurants, the 86.
It's the brainchild of Eugene Rem, the owner of the Catch NYC mega restaurant, and his partner Tillman Fertitta, the owner of the Landry's chain.
Their new project, though, couldn't be more different. An intimate steakhouse with just 10 tables, but enough star power to fill 100.
Where New York is going, and I think actually where the markets are going, is a simple situation of supply and demand. The only way, in my opinion, moving forward is to shrink the supply to increase the demand. And that's why we thought about these places. So when we look at restaurants in New York now, we look for iconic locations that are small in size so that we can create that intimate experience. That kitchen is about 15 feet from here. So this is almost like having dinner in a house with really nice furniture and 10 tables and a set of staff, but it's almost like bringing something so intimate into the restaurant setting.
How many square feet is this?
The entire space is 1,800 square feet. That's between both floors, but the actual footprint of what you see as a customer is only 900 square feet.
It's not Rem's first attempt at a small-scale, high-end, soon-to-be New York classic.
Just a little more than a year ago, he opened the Corner Store, an around 80-seat restaurant just a 15-minute walk from the 86 that has since become, hands down, one of the city's most coveted reservations.
This has been the best opening I've ever been a part of. The Corner Store was more nerve-wracking because it was a fully new concept with a fully new team. Now we've taken team members from there and brought them over here, so there's a much greater rhythm.
While the 86 undoubtedly draws aesthetic inspiration from the Corner Store, Rem sees it as a new endeavor in and of itself.
Even the building it's housed in, 86 Bedford Street, is oozing with history. The site of a legendary Prohibition-era speakeasy turned counterculture literary haunt, frequented by the likes of Hemingway, Fitzgerald, and Steinbeck.
The name 86 comes from the term 86, which during the 1920s, during Prohibition, when people wanted to sneak out the entrance, this was the back entrance at 86 Bedford Street. So when people were in there, they had a code called 86, and everyone knew to run out here.
Rem used the building's exterior as inspiration for its layout and decor.
This is a 1920s Art Deco design, and we're trying to think of how we pay homage to this space and its history, but give it its own feel. And I was sitting at home talking to my wife about what that should look like, and she was like, you should look at the Orient Express. And when we saw it, it really defined what that was.
And the Prohibition inspiration flows throughout the menu, with the restaurant's beverage program taking cues from 1920s tipples, precise martinis, and inventive cocktails.
When it comes to cocktails, though, are people still drinking cocktails and paying up for cocktails?
Cocktail culture is a big part of what's happening here in New York City. We are at the forefront of cocktail culture, the Corner Store specifically, the martini program, the idea of just not having a generic martini and making everything special. So everything we do is from scratch. We have an entire team that comes at 5 in the morning and they work on batching and creating the martini program, and that also translates to this space. So you're not getting anything that's just a traditional drink.
The recipe for restaurant success, though, is not without challenges and has been shifting fast. Take sustaining a beverage program in this day and age. A tall order as more Americans are drinking less. Data from the UN's Food and Agriculture Organization goes so far to suggest alcohol use may be in permanent decline, with beer consumption peaking in 2016 and wine consumption that's been on a steady decline since the 1970s.
People are drinking less. So people used to drink a bottle, now they may have a glass. They maybe used to have a glass, now they'll have a non-alcoholic beverage. So wine is a huge part of what we do, but in order to get the big wine sales, you have to provide all of the theater that comes around it.
Lower levels of drinking, along with the rise of GLP-1 weight loss drugs, means that restaurateurs have had to rethink traditional business models.
I have not come up with like the flat seating model yet, or the dynamic pricing model where if you want a table at 5 o'clock, it's going to be $300. If you want the table at 7:30, just like when you go on a flight, if you want to go at 8 a.m. on Friday for a weekend to Miami, the flight is 3x what it is at Tuesday at 4 p.m. Restaurants don't have that yet, and I think it's coming.
Rem's long-running career in the restaurant business means he's had to navigate changing landscapes.
Catch was born in 2011, so the idea was always to create singular experience that connected nightlife with restaurants. So we were a nightlife group that did a little bit of restaurant, and somewhere around 2015, 2014, we pivoted to a restaurant group with a little bit of nightlife DNA. And from there, we expanded Catch from New York to Los Angeles to Las Vegas, then to our second concept, Catch Steak, which opened during the pandemic, and then we went on a spree.
And for Rem and Catch Hospitality, that spree continues.
Something that's very important for, I think, a business model is to cluster. So since we already have an amazing location in Las Vegas, we're planning on doing another one next year with the MGM group, because that's a big brand and it's a big team and we like it there. I think Dallas has also been incredibly successful for us, so we've been excited about the opportunity to expand that footprint. Scottsdale, again, only 6 weeks old, but it has just been received really well.
But it's tough to stay put in an industry that's seen peaks and pits. In the 6 months following the COVID-19 pandemic shutdown, nearly 1 in 6 eateries had long-term closures or shut down permanently, according to the National Restaurant Association. It's been a rocky recovery since, with restaurants facing higher labor costs, inflated food prices, and still disrupted supply chains. In the last year, eating out costs have risen 3.7%, according to the latest CPI data.
Up to 2019, every restaurant, didn't matter the size, it was packed, everything pre-COVID. COVID hit, disaster, 6-12 months, then you get the influx of all the free money and everything that comes with it. So you have the blowback of that. Welcome 2023, the hangover sets in, reality sets in that people have limited resources, that people don't want to be able to eat out as much. So then now you get into 23, 24, and 25, and every year you are starting to see that people are spending less, going out less, and doing less.
But Rem's thoughtfulness has helped him persevere and create special places rooted in one core ideology that every restaurant he's put on the market embodies.
Number one, you have to feel good when you walk in, and that's the people who work here. So they set the tone and the standard of what we do. Then we have to back it up with amazing food, and then the vibe. And the vibe in this scenario is some of the design, the lighting, the music, and everything else. And the key is being able to do all of those things equally well at the same time.
Okay, in conversation there with the co-founder and partner, of course, of Catch Hospitality Group. Coming up, another check of the markets and a chat with Bridgewater's founder, Ray Dalio, on the pod shop hype. That conversation coming up. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Welcome back to Bloomberg Markets. Watch out, pod shops. Ray Dalio's not buying the hype. The billionaire Bridgewater founder talking to the team on Bloomberg's Odd Lots podcast.
There's different ways to play the game. That's a totally valid way to play the game. And maybe it's just a totally utilitarian way. In that way, is it effective? In making the investment decision can be very effective for lots of reasons I can digress into. Uncorrelated return streams, many observations, blah, 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 blah. That could be very effective. It may not be effective of creating the meaningful relationships and those types of things. Therefore, you're going to have a continuity and a competitiveness problem. In other words, people will go for a little bit more. Which is what we've seen. A little bit more, plenty of that, haven't we? A little bit more money, a little bit more. They're not in it together. They're not sharing their lives. They're not sharing their mission together, and so on. So maybe it's a totally fine way for the investment management, but it's not a fine way for building a 50-year-old. I did this. I built a 50-year-old organization while others have...
It is raised the question, like, in those environments, like, what is the franchise value? Because what happened, right, what seems to be this model which has produced extraordinary returns for some investors, you do get the situation in which everyone is sort of a mercenary. Everyone, you dangle these big paychecks and bonuses and
you're an independent contractor, basically.
Yeah, it's hard to imagine that environment building a 50-year franchise.
I think it's not going to last. And it's particularly in the area of an AI. Try to help it have AI-enabled ability to be an independent investment manager. Okay, like Uber.
Okay.
Uber's got a technology that they take the individual, they plug them into that technology and whatever, and everybody can do that in a sense. I think we're going to be moving more into that direction. So what is it? That's a path that we can go down, and that's a whole other path.
Well, you said you're going to try to help it. What does that mean? Are you working on something?
Well, I'm building my own ability, and I want to share how people can do certain things. That's it.
But you don't think this model, because it's been very hot, again, talk about things that have changed 10 years. 10 years ago, we were not talking about multi-strats.
Talking about fund of funds.
Yeah, fund of funds, much more back then. It sounds like you're skeptical that this model will endure.
Well, I think I'm just looking at mechanistic.
Yeah, talk about it.
Okay, so what creates cohesiveness? You have to have the need for cohesiveness. Okay, what is the cohesiveness? What is the commitment? okay? I think when we help each other, I believe in how people can help each other, okay? Are they helping each other? Can they be better? And that's the question, isn't it? Okay, so when we're thinking multi-strat, if everybody's there and you put it together as that could be done technologically very easily, right? So is that going to stick it together? Okay, what is a relationship like? Okay, to be on the mission together and to have relationships and so on is invaluable, not only in terms of effectiveness, in terms of doing job, because different people have different skills and you do that together, but it is also psychologically rewarding. The greatest source of happiness, okay, this is I think an important thing. Studies of happiness all around the world and so on shows that income past a certain level does not bring a higher level of happiness once you get the basics taken care of. That the greatest source of happiness is community.
Yeah.
Do I have a sense of community? Okay, people who are there for me and I can help and I work for that. That's a powerful force and it's very rewarding. Okay, those are my thoughts.
Okay, those are Ray Dalio's thoughts, and we are tuning in, of course, and listening in. Bridgewater founder, of course, Ray Dalio, speaking on Odd Lots. Let's get back to the markets right now. European stocks are currently up just 0.1%, with a particular lens on the UK, of course, after the budget that was announced yesterday. Let's bring in Bloomberg's Morwenna Coniam for one last take on this, and broadly, as we transition, of course, from the broader macro picture and the broader market picture to what's happening in the UK, and still digesting investors, but seeming to get to a point where they've kind of got to some level of comfort with all the caveats around yesterday's budget announcement. Gilt yields are up today, but we haven't seen dramatic moves to the downside for UK gilts.
Exactly. We haven't seen a huge amount of change the last few hours. Initially, we did see some increase in gilt yields coming off the back of that big drop that we saw yesterday. That's now sort of stabilized. We're seeing up about sort of 2-3 basis points across the curve. It's notable, but it's nothing dramatic. As we've said, there's very little liquidity today. We expected it to be quiet, but that could also, have exacerbated any big moves. So from that perspective, it seems to be relatively calm. We're not seeing any out of the ordinary moves there at all.
Morwenna, thank you very much indeed. Morwenna Coniam, of course. That is it. Happy Thanksgiving, everyone. Bloomberg Markets continues. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalise on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, you know, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome to Bloomberg Markets. I'm Lizzie Verdon in London. Coming up, global stocks come close to erasing all of November's losses. Traders raising bets that the Fed will cut rates next month. Meanwhile, the UK Chancellor delivers a budget that postpones most of the pain from tax hikes until the end of the decade. The Bank of England rate cut next month is now all but locked in. And we head into the all-important holiday shopping season for retailers, with consumers feeling anxiety about the economy. But let's get a check on these markets, shall we? Happy Thanksgiving, by the way. It does mean that US equity and bond markets are closed, and we've got lower volumes elsewhere as a result as well. But global stocks, as I say, holding steady, although they are close to erasing their November losses. You've got European stocks pretty much treading water here. The FTSE edging lower, a bit of a reality check for the UK assets after yesterday's post-budget relief. We've got gains of 0.2% already in the Asian session beforehand, and you're looking at US futures flat to the upside there. Now, flipped over to the cross-asset picture, we're monitoring gilt yields, of course. We have had the UK budget, as I say, yesterday, and it's low liquidity because of Thanksgiving today. The 10-year yield there at 4.45%, so giving back a bit of yesterday's rally. The pound pretty steady right now, $1.32 is where we're trading. Oil flat at $63 a barrel ahead of that OPEC Plus meeting this weekend. And Bitcoin continuing to claw back some ground after a more than month-long sell-off, but still just shy of $91,000 a token as things stand. Well, we have been talking lots about that budget all day today. It came yesterday, Chancellor of the Exchequer Rachel Reeves announcing £26 billion of tax increases in a budget that really sought to balance the demands of both bond traders and the left of her Labour Party. She spoke exclusively to me about that budget yesterday.
I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
Well, joining me now for analysis is BNPP Asset Management Portfolio Manager Sophie Huhn. Really good to see you, Sophie. Welcome to the programme. Thanks for coming on Thanksgiving in particular. I wonder what you made of that UK budget. Yes, we've got doubled headroom against the Chancellor's fiscal rules, but are you convinced about the backloaded fiscal consolidation?
I think there was a lot of expectation around, like, potentially some kind of like drama, potentially higher bond yield, like the pound crushing. Didn't really happen. So ahead of it, we were already long gilts, and we were somewhat expecting the pound to continue going lower. I think putting that aside, what's going to be much more important for UK assets going forward is the fact that we still expect the Bank of England to cut lower and more than what the market is really pricing at this point, which is going to continue driving gilts lower as well as cable lower in this environment.
Really interesting. So how many BOE cuts are you seeing now next year?
So we're expecting, so if you look at the forward curve in terms of where the US is, where the UK is, we're really expecting at this point, like for the Bank of England, around 2.5. So that's the view of our UK economist. And we think it's going to continue in terms of interest rate differential to continue driving the pound lower versus the US dollar and US forward rates, where I think in terms of like what you see, what's really priced at this point, the Fed is expected to cut to 3% by September next year.
I find it somewhat amusing that the bar for success was there wasn't a gilt sell-off and the pound didn't crash, Sophie. Off the back of this budget, are you any more attracted to gilts?
So we're still holding onto it. I think it's more, if you think about it, like if you push aside the domestic idiosyncratic risk, I think what's going to matter at this point was a way to gear and to have some duration exposure in the portfolio out of treasuries. So it's a way to diversify out of the US markets. So at this point, we still like it as a trade, on top of the fact that for us, it's a positive carry position that we're still holding on.
Okay, well, in the global spirit and on Thanksgiving, just talk to me about what's worked for you in 2025, Sophie.
So if we look at our portfolio, we've been basically long the high beta names and indices within the equity complex, so diversifying out of the US. So we've been long semis, long Koreas, especially since May, which has been working quite well. So I think at this point we've been trying to gear to the structural themes, which have been working quite well at this point. Heading into next year, I think the story is really going to be about whether we're going to have a rotation a bit out of AI into the more cyclical names at a time where I think we're a bit underestimating the risk of a right tail scenario and a cyclical upswing, especially in the first half of next year.
Yeah, I mean, how much does the bottom half of the K-shaped economy worry you in the US, especially when you look more broadly across the S&P?
So I think the K-shape is broadly priced. At this point, everyone is talking about it from a macro, but also from a bottom-up standpoint. If you look at the PX Max 7 as well as the tech stocks, the P is actually lower. If you look at consumer confidence on top of consumer discretionary core weights versus the market, you see that there's somewhat some pricing of low-income cohorts struggling in this environment. So to some extent, I think the K-shape is already there and somewhat priced. The surprise could come from potentially next year, where the fiscal impulse overall, I think more broadly, is and in the US is expected to be positive. So what if the K-shape is actually gonna close down a bit rather than continue to widen further?
And what about the fiscal impulse here in Europe? Is there too much pessimism about European equities into 2026?
Yeah, definitely. If you look at the German side on the announcements, I think broadly people were super positive. A thematic basket really outperformed. I think at this point, broadly, if you talk to people around the table, but across the street, there's definitely a lot of pessimism on European equities. So apart from exporters, if you look at the more consumer-led names, they have clearly been underperforming, and the cyclical laggards are actually showing signs of pickup at a time where PMIs, but also on the soft data, but the hard data are starting to show signs of uptick. And we're starting to see it in Sweden, for example, where it's really the typical interest rate sensitive country where we're starting to see signs of green shoots. So if you look on the PMI side, if you look at the ratio of new orders versus inventories, what if we're going to have this broad repricing higher where the benefit of the 1.5 years of monetary easing starts to materialize?
Okay, and just finally, I want to take you on our world tour to China, because it's interesting that you're still constructive. Why?
So I think for us, if you look at terms of correlation with the rest of the equity complex, the correlation is still low, so it's bringing diversification. I think they have a clear path in terms of what they want to do, in terms of technology innovation, as well as boosting consumer demand. So it could be more or less with export and the fear of how there could be exporting overcapacity abroad. But overall, for me, the path is quite clear on where they're going, and it allows also to get exposure to AI out of the US. So we're long across A, H, and China Tech. And for this year, so we've been long since, I think, end 2024, October 2024. So it's been really a good trade for us, and we're still keeping it for now.
All right, fascinating. Sophie, thank you so much for your analysis, especially on Thanksgiving. That's Sophie Hoon, BNPP Asset Management Portfolio Manager. Good to see you. Well, coming up, we're going to dive right back into that UK budget and what it means for the economy. Stay with us. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You said they ask interesting questions.
Bloomberg Television. Top experts, great questions.
I was always clear that I would never play fast and loose with the public finances because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
That was UK Chancellor Rachel Reeves defending her autumn budget in a conversation with me yesterday, a budget that has cleared the path for the Bank of England to resume cutting interest rates as soon as next month. Well, joining me now for more analysis is our Bloomberg economics economist, Anna Andrade. Good to see you, Anna. I've been waiting to get into this with you. So the market reacted pretty positively yesterday to the budget, but then today we've got yields up and the pound down, modestly, I should add. Has it been a success?
I think what we saw yesterday in the market was a bit of a relief rally because I think the reports that we've been getting prior to the budget were kind of giving the signs that Rachel Reeves maybe was not willing to do whatever it was needed to do to fix public finances. And I think when that budget landed, the thing that markets were focused on was the increase in the headroom. And I would say that sort of doubling the headroom, she has taken it closer to the 28 billion that has been the average historically. So I think that's sort of a significant step.
But are they too focused on the headroom? Like the first headline we got leaked from the Office for Budget Responsibility, and not focused enough on what analysts are emphasising, which is the backloading of the fiscal consolidation.
Yes, I think that's the other side of it. And I think that's why we didn't see a bigger rally, if you want, and that's why today we're sort of seeing mixed signs, is that the bad news of the budget is not only that, well, first of all, she decided to spend in the near term, and she decided to sort of get the fiscal savings only later on. And I guess what markets are questioning is about how big is the implementation risk associated with this budget, because those savings are only going to come in sort of in the election year. And of course, there's concerns about whether, the government will follow through with those or not.
But you heard her there. She isn't saying she won't do any more tax rises down the line. She's already broken that promise and come back with more tax rises. Is that going to become this sort of autumn tradition now, especially when the OBR is saying this budget basically does nothing to grow the economy?
Yeah, I mean, I think definitely the public finances have not been structurally fixed. I think her increasing the headroom to 22 billion, I think gives her more policy room. So I don't think we'll need to see as big as we saw 40 billion of tax rises in October last year. We now saw 26 billion of tax rises. I think the bar for seeing another scale of tax rises like that is lower. It's higher. Like, I don't think we'll be seeing that sort of in a year from now.
What would trigger that? Like, what scale of event has to happen?
Exactly. So the 22 billion headroom is sort of an okay headroom if you consider sort of the normal moves in markets and interest rates, normal surprises. Of course, if we're dealt with a shock like we've seen, like the pandemic shock, the energy crisis, then that headroom obviously doesn't prove enough. But if the economy continues to perform in line with expectations, then I think at least the scale of the tax rises that we've seen, I think the bar to get that at least next year is higher.
Okay, Anna, really good to talk to you. I've been waiting for that conversation all day. Anna Andrade of Bloomberg Economics, thank you so much. Well, sticking with the UK economic landscape, the chair of Europe's largest digital bank, Revolut, says that getting fintechs to list here in the UK rather than on the NASDAQ is a big issue. Martin Gilbert spoke to our colleagues as part of a special UK budget special, but we're going to just hold your horses on that. We will come to that interview in just a moment. I just want to bring you some breaking news. We have an update on the situation in Washington, D.C., an update from officials about the shooting of those two National Guardsmen outside of the White House. Let's listen in.
To my left, we have the director of the FBI. We have General Leland Blanchard of the National Guard. Mayor Bowser is here as well. We have Frank Saldana of the DEA, Chris Hecht of DHS, Executive Assistant Chief Jeffrey Carroll of the MPD, Darren Cox of the Washington FBI Field Office, and a Special Agent in Charge, Samuel Ward of the ATF in Washington. Now, I want to provide you with an update on the tragic shooting that occurred on two brave members of the West Virginia National Guard as they served in Washington, D.C. Unfortunately, today, as most families join together to give thanks for the blessings that have been bestowed upon them, two families are shattered and destroyed and torn apart as a result of the actions of one man. First and foremost, our hearts go out to the victims and their families. These are dedicated service members who were performing their duties in service to our nation, and they are currently in critical condition. They have undergone surgery. We pray for their well-being as they continue to be cared for in the best possible way. We have been in constant contact with their families and have provided them with every resource needed during this difficult time. The two National Guards men that we're talking about are Sarah Beckstrom, who's 20 years old, and Andrew Wolf, who is 24 years old. They were uniformed members of the West Virginia National Guard, and they were in D.C. to keep D.C. safe, pursuant to President Trump's executive order to make D.C. safe and beautiful. They answered the call. They took the charge, they volunteered, they put their lives on the line for people they don't even know. And that, unfortunately, is becoming a reality more and more for the members of law enforcement. Yesterday on Thanksgiving Eve at approximately 2:15, near 17th and I Streets in the northwest section of the district, near the Farragut West Metro Station, 2 uniformed guardsmen were ambushed in a brazen and targeted attack. A lone gunman opened fire without provocation, ambush style, armed with a .357 Smith & Wesson revolver. One guardsman is struck, goes down, and then the shooter leans over and strikes the guardsman again. Another guardsman is struck several times. Fellow guardsmen who were there responded immediately, engaging the suspect, neutralizing the threat, and subduing him at the scene. He was transported to a local hospital where he remains, as we speak, under heavy guard. Thanks to the swift and coordinated response of the National Guard and the Metropolitan Police Department, no additional victims were harmed, and the scene was secured within minutes. The suspect, he has been identified as Ramanullah Lakanwal, a 29-year-old Afghan who entered the United States under Biden's Operation Allies Welcome, a program following the disastrous withdrawal from Afghanistan. He resided in Bellingham, Washington, with his wife and, we believe, 5 children. And we're working very closely with our federal partners, especially DHS and the FBI, to review his immigration history and the vetting process itself. What we know about him is that he drove his vehicle across country from the state of Washington with the intended target of coming to our nation's capital. As we stand here today, the charges that are appropriate right now are 3 counts of assault with intent to kill while armed, a violation of D.C. Code 22-401 and D.C. Code 22-4502. He will also be charged with possession of a firearm during a crime of violence. He faces 15 years under the assault with the intent to kill. We intend to continue monitoring what the charges will be, depending upon the well-being of the guardsmen. We are praying that they survive and that the highest charge will not have to be murder in the first degree. But make no mistake, if they do not, that will certainly be the charge, murder in the first degree. The Department of Justice, under Attorney General Pam Bondi, is committed to a thorough and an impartial investigation where we will hold this perpetrator accountable under the full weight of the law. Now, Sarah and Andrew volunteered. They came here to protect the people of the district, pursuant to a crime emergency that President Trump rightly declared in this city and in other cities across the country. Our nation's capital should not and must not be a place where evil comes to commit violence, whatever their cause or motive may be. We should not have to live in fear in the nation's capital, especially by one who came here from a foreign country. Through a process that was so absurd that he came through and released into this country, as many were, knowing virtually nothing about his vetting. This is what happens in this country when people are allowed in who are not properly vetted. These guardsmen and all who are here to protect the district are the line that separates a civilized society from a barbaric one. They are the ones who stand for law and order. This was not just an attack. It was a direct challenge to law and order in our nation's capital. And the individual will be made fully accountable. And though it seems that we have been here before under President Trump, make no mistake, and the Attorney General, We will not allow this to be normalized. It will be confronted, condemned, and prosecuted to the full extent of the law. Now, my message to the individual who committed these acts is you picked the wrong target, the wrong city, and the wrong country, and you will be sorry for the violence and the evil that you perpetrated in our nation's capital. And now I call upon the Director of the FBI, Kash Patel.
Thanks, Judge. I'll begin my remarks and my remarks the same way, with prayer for our fallen soldiers, prayer for our law enforcement community, prayer for our National Guardsmen and women, prayer for our brave prosecutors at the Department of Justice and the offices of the D.C. United States Attorney. We must come together as a nation, especially on this Thanksgiving Day, and remember the sacrifices that so many are making around the world and around this country to secure our freedoms under President Trump's brilliant leadership and administration. I'll provide an update on the case as follows. It is an ongoing investigation of terrorism. Make no mistake about it. The FBI is leading out on these federal assault on a federal law enforcement officer investigation on many fronts. We immediately, with our law enforcement partners in the Metropolitan Police Department and the interagency, secured the scene, seized the weapon, sent in our evidence response team immediately to collect evidence and started doing block-by-block canvasses. We are looking for and interviewing witnesses. The firearm and other materials have been sent to our Quantico laboratory already yesterday for immediate analysis. That work is ongoing. Partnering with the D.C. United States Attorney's Office, we have also executed multiple search warrants around the country to include the subject's last known residence, which is in the state of Washington. The search warrant was executed on that house last night or early this morning, and it is an ongoing process. All the individuals found in the house have been interviewed, and some interviews remain ongoing. We will not stop until we interview anyone and everyone associated with the subject, the house, and every piece of his life. There's also subject interviews, relations conducted in San Diego, pursuant to our ongoing investigation. So, as the judge noted, this is a coast-to-coast investigation being led right here in Washington, D.C., and this subject definitely did pick the wrong country. And we will rise together as a nation to show the world what we do here. And we are thankful that we have the Attorney General's brave leadership and President Trump's brave leadership and priorities to safeguard our communities. I also spoke to Director of the CIA, John Ratcliffe, last night, and Secretary of War, Pete Hegseth. There is confirmation now that the subject had a relationship in Afghanistan with partner forces. We are fully investigating that aspect of his background as well, to include any known associates that are either overseas or here in the United States of America. That is what a broad-based international terrorism investigation looks like. We will provide continuous details to the American public while at the same time not jeopardizing the ongoing prosecution to ultimately hold this perpetrator accountable in our courts of law. We will provide as much transparency as possible, but as you can see, the breadth and scope of this investigation will continue. We will continue to hit the streets and hit every town and every house and talk to every witness. The men and women of the FBI and the Metropolitan Police Department and the interagency, to include the Department of Homeland Security, DEA, and ATF, are working tirelessly on this Thanksgiving Day. And I know just by talking to the leaders behind me that instead of going on and being with their families, everyone rogered up and showed up to work today. And none of them want to go home. That's the resolve that we have together as a team to bring to you justice for this heinous act of terrorism here in our nation's capital. And as the judge said, we will ensure that our law enforcement partners are out there in full force to make sure the world can enjoy our nation's capital. We will not let this heinous act of violence prevent people from visiting our beautiful nation's capital. And we will also continue to highlight any evidence that we can publicly. And as the judge said, this individual is in this country for one reason and one reason alone, because of the disastrous withdrawal from the Biden administration and the failure to vet in any way, shape, or form, this individual and countless others, and this administration has taken the rightful step to stop any further allowance of people with this similar background into the country, and we're thankful for that. And as I said, this investigation remains ongoing, and I think I'll turn it over to General Blanchard of the National Guard now. Thank you.
Thank you, Director.
All across America this morning, families are waking up. They'll spend the day with their children, their brothers, sisters, husbands, wives, friends from across the community. There will be the smell of turkey, all the fixings. They'll watch parades, football games. They'll pray together. They'll talk about what they're grateful for. This morning, there are two families that will not have that opportunity. Andy and Sarah's families, they're spending the day reflecting on the past. And in the days coming, they'll reflect on and think about what could have been, what might be. Because regardless of the outcome, we know that their lives, their families' lives are all changed forever. Because one person decided to do this horrific and evil thing. And all across America, we are also reminded that there are many law enforcement agents, first responders, soldiers, service members all around the world who at best will come home, eat some cold turkey, open up Tupperware, eat what's left over, because they spent the day defending the American ideals, getting out there and getting after it on every American citizen's behalf. I will say that the District of Columbia National Guard, this task force, is more committed this morning to the president's directive to make DC safe and beautiful. Our resolve will be tested. It is being tested, but make no mistake, each and every one of these soldiers and airmen will meet and exceed the expectation that we have for them. They are, in fact, America's best. I'm proud of each and every one of them. I pray for each and every one of them today, and in particular, for these two young service members who are willing to go above and beyond and pay whatever price our nation asks of them. I ask every American today to keep them in their thoughts and prayers as you go about your day. Thank you.
Thank you, General. Mayor, where's Mayor Bowser? Yeah.
Thank you, Judge. I'm Muriel Bowser. I'm the mayor of Washington, D.C., and I want to associate myself with the remarks of our Adjutant General from the D.C. National Guard. I want to be very clear what the judge and everyone has reported here. Somebody drove across the country, came to Washington, D.C. to attack America. And that person will be prosecuted to the fullest extent of the law. These young people should be at home in West Virginia with their families.
ATF, anybody? DHS? Anyone? Okay. I also want to say that both Sarah and Andrew, I believe, were sworn in less than 24 hours before they were shot on the street in Washington. Any questions?
Could you drill down on a possible motive? Have you got any information, any intelligence on a possible motive?
You know, as the directors indicated, this is a fluid investigation. People are working around the clock. It's too soon to say what the motive is, but there are definitely areas that we're looking into, but not ready to say.
Can you characterize a little bit about how the assailant was taken down after he opened fire?
Yeah, he got shot.
By another guard?
By another guardsman, yeah.
You mentioned earlier that he had the shooter had initially shot one of the guardsmen, then leaned over as they were on the
shot him again.
Shot again.
Yep.
How many shots are we?
Well, the specific number. Look, he had a .357 Smith & Wesson revolver. Okay, so I believe that's a six-shooter. Yeah. So, you know, that kind of tells us how many shots he had. Yes.
Judge, you mentioned we've been here before because we have. It was May when we were last here.
Yeah.
I want to ask if you could please comment to, obviously, we understand that you're saying this is under the Biden administration, and the words are that it was a failed withdrawal, and what happened there. There are people who are also upset with the president believing that the National Guard members should not even have been there if it were not for the executive order.
I don't even want to talk about whether they should have been there. We ought to kiss the ground and thank God that the president said it's time to bring in more law enforcement to make sure that a city that had the fourth highest homicide rate in the country was that violence was quelled. I'm not even going to go there.
A question for Director Patel. Was the suspect granted asylum? And if so, when did that happen? Under which administration? And did authorities miss any signs, either in the asylum process or even back when before he worked for the CIA? If you could talk about that.
Well, you miss all the signs when you do absolutely zero vetting. And that's exactly what happened in this case. When you, in the prior administration, made the decision to allow thousands of people into this country without doing a single piece of background checking or vetting, that's how you miss every single sign. And Secretary Kristi Noem has put out details specifically related to your other questions, so I'll let that speak for themselves.
If or when he was granted asylum, if you could just clarify that timeline. And
Yes, I believe Kristi Noem put that out, and that's a DHS matter, and I'll refer it to them.
Could you elaborate on the investigative steps that were taken in
Sure.
San Diego? You mentioned Bellingham, Washington,
Sure.
where you live, but could you explain the San Diego connection?
So what happened was, thanks to the quick investigation by the interagency and the FBI, we were able to track down his last known residence, working with the United States Attorney's offices here and at the Department of Justice and prosecutors across the country. We were able to serve search warrants literally overnight and through the night.
All night.
And we were able to hit the house in Washington State. During that process, we seized numerous electronic devices to include cell phones, laptops, iPads, and other material that is being analyzed as we speak. Pursuant to that investigation and any known associates of the subject and of that house is how we ended up in San Diego, where interviews were conducted and are going to be continued to be conducted. And we will go anywhere in the country or the world where the evidence leads us.
Are there accomplices, relationships in San Diego you can talk about?
All of that is an ongoing investigation.
Can anyone give an update as far as Sarah and Andrew who were injured? You said critical condition. Can you give anything beyond that? Are they expected to make it? Is it touch and go? Can you tell us a little more about how they're doing?
And the full spelling of their names, please.
It is Sarah Beckstrom, Beckstrom, and Andrew Wolfe with an E, Wolfe. Okay, and Sarah Beckstrom, S with an H. Okay, now with respect to their medical condition, as I said, they are receiving the finest medical care. Their families are with them now. They are critical. I think you understand the meaning of that. It's not clear, you know, how this is going to end up. But let me be perfectly clear about how it will end up in this office. If one of them is to pass, and God forbid that happens, this is a murder one, period, end of the story. We are praying on a day like today when families come together in America and they hold hands around the Thanksgiving table. I beg you, I beseech you to pray for these two young people that they survive. Okay, I think that's it. Yeah.
Gabbard said that
Thank you, everybody.
Radical Islamist Afghan terrorist.
Yeah, we're not going there.
Do you have
We're not going there.
information on how he might have gotten radical?
No, no. Thank you.
So a poignant and heated press conference on Thanksgiving. That was the U.S. Attorney for the District of Columbia, Jeanine Pirro, briefing the media on the shooting of two National Guardsmen in Washington, D.C. Well, before Pirro, we heard from the U.S. FBI Director Kash Patel briefing that the terrorism investigation is ongoing. We also heard from Brigadier General Leyland Blanchard and Muriel Bowser, the D.C. mayor. And Pirro really laying out the facts there of the shooting. The two National Guard members who were shot are in a critical condition. She named the suspect as 29-year-old Afghan national Rahmanullah Lakanwal, underscored that he entered the US from Afghanistan under President Joe Biden, and saying that he will face first-degree murder charges if either of those victims die. Well, joining me now for analysis is Bloomberg News Director Will Kennedy, who's been with me listening to that press conference. Will, that was a deeply political speech from Pirro. I wonder what stood out for you and how much it really inflames the already very politicized debate about immigration in the US.
Yeah, we learned a few interesting things there, that clearly they consider this to be a planned and targeted attack. She described it as an ambush. And the suspect drove all the way from Washington State, which was his last known address on the West Coast, to D.C., so suggests a degree of premeditation, so hence the interpretation of terrorism. Both Kash Patel and the U.S. attorney were keen to point out that he came to the U.S. as part of Operation Allied Freedom, a program under the Biden administration whereby Afghans who had helped the forces in Afghanistan could come for a limited time to the United States. Kash Patel there made reference to the fact that he had worked with partner forces. The New York Times and others have reported that he actually worked with the CIA units in Kandahar province in southern Afghanistan. So he had that relationship with US forces in Afghanistan. This makes it a very difficult situation. I think what clearly the Trump officials are saying is that, of course, they're using it as an excuse to point to what they see as the failure of Biden's withdrawal from Afghanistan, and these people were allowed to come to the country with what Kash Patel described as zero vetting. So they're really turning the spotlight on what happened under the Biden administration that allowed this person to enter the United States. So they're politicizing it there. There is, of course, the wider political background of the fact that these National Guardsmen were in D.C. because Donald Trump had taken a very controversial decision to deploy the National Guard in American cities to deal with what he describes as a violent crime problem that's disputed, and many in the administration and beyond will see this as vindication for that decision.
And just walk us through then how this impacts policy and international relations, because as you mentioned, Kash Patel there citing that he's spoken to Pete Hegseth, the War Secretary, and that Patel saying that the suspect had ties with those partner forces in Afghanistan. I also read on X that the US Citizenship and Immigration Services agencies made processing of all immigration requests relating to Afghan nationals, well, it's ended them.
Yeah, that's right.
So where does it leave international relations then?
No, I mean, clearly that's one aspect, is that they were not going to process any immigration requests from Afghanistan. How much movement there is with the Taliban regime now in Afghanistan, I'm not sure, but any movement from Afghanistan to the US is now going to be foreclosed for the time being, and it will really draw a lot of scrutiny on the US action in Afghanistan and its relationship with local Afghan forces and what local Afghan forces did for the US. And of course, that community of people, this program helped tens of thousands of people to come to the United States. There's going to be a lot of scrutiny on those Afghans who came from Afghanistan and are now living in the US. And, you know, in many ways, they deserved the US support because they helped US forces there. So it's going to be very controversial, one thinks, and continue to be political.
Okay, we really appreciate you taking us through the context there, Will. A deeply political speech, as we heard there, that press conference with the US Attorney for the District of Columbia. International consequences and policy impacts as well. We'll be right back. This is Bloomberg.
The phone is
what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Now, the UK Chancellor Rachel Reeves announced yesterday £26 billion of tax increases in a budget that aimed to balance the demands of both bond traders and Labour backbenchers. I sat down with the Chancellor for an exclusive interview yesterday about that budget and its early leak.
Richard Hughes and the OBR have confirmed that they are have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
The leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets. But what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
When you talk about cutting borrowing, the Institute for Fiscal Studies says it's a spend now, pay later budget. What do you say to traders who are still concerned that this fiscal tightening is backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also we want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now with better balance sheet management, government, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office of Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy. Well, and indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecasts around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do, more than ever, is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
So that was my exclusive conversation with the UK Chancellor Rachel Reeves after her budget yesterday. Let's get some analysis now from Capital Economics Chief Global Economist Jennifer McEwen. Good to see you on Thanksgiving, Jennifer. I feel like we always see each other on Thanksgiving. Look, Reeves didn't crash the pound. She didn't crash the gilt market. But is that really the bar for success on a UK budget?
Well, it's a relief, isn't it? After last year, really, and after the U-turns we've had and all the uncertainty, I think probably the overwhelming sense in the UK is that thank goodness it wasn't worse. Thank goodness markets aren't responding worse. And there are two really sources of relief. One is the fact that the public finances appear to be on a reasonable trajectory, that markets seem to be relatively happy with that. Also, on the other hand, that tax hikes have not been as large as was feared. Most people were forecasting 30 to 40 billion pounds of tax rises, and we've ended up with about 26 billion, so better than it could have been.
Well, that relief rally is somewhat reversing today. You've got the 10-year gilt yields up, the pound down against the dollar. Do you think that perhaps traders are having another think about this and focusing less on the headroom and more on the back-loading of the fiscal consolidation?
Maybe, yes. I mean, this kind of volatility isn't unusual, and I don't think there's anything to be overly concerned about at the moment. It's just a bit of payback after yesterday. But it is true that all of really the consolidation that's to come is dependent on future governments, whether or not it's the Labour government or a different one, sticking to these pledges around freezing of thresholds and the higher taxes that are to come. So that's a little bit concerning, given that we've got the spending coming in sooner.
Yeah, fair enough. I did warn yesterday about the low liquidity in these markets, that we might see a bit more of a reaction today. But, you know, the OBR says that this budget is going to do pretty much nothing for growth. I put that to the Chancellor. Does that, Jennifer, mean that actually more tax rises are inevitable, even if she doesn't want to admit it?
I'm not sure. It depends on a number of things. I think one of the key points, and it's worth pointing out first, that we at Capital Economics haven't changed our economic forecast on the back of this budget, so we would agree that there's no real impact. We had anticipated that we would need to downgrade on the basis of larger tax hikes. So, you know, while it's not a great reflection on the government that people aren't revising up their forecasts, at least, and they're not being revised down. I think what might be key now going forwards, and one thing that's causing us to expect some acceleration in growth in the UK, is whether or not the Bank of England can cut interest rates and how far it can do so. Now, we think that inflation in the UK is going to fall back much faster than most people assume, and for that reason, we think that the Bank of England will be able to cut interest rates all the way to 3% next year, and that should offer the economy something of a boost and bring down borrowing costs for the government too, so it should be a positive for Rachel Reeves.
Really interesting, given that, you know, this was less inflation battling than perhaps some had expected. You had that national minimum wage rise. Just before I let you go, Jennifer, are you expecting a December Fed cut?
Oh, crikey, it's really, really close call. One of the closest I can remember, actually. We are still penciling in a cut, but there's a possibility that we get a complete 6-6 split and that we end up with no change purely on that basis. So I think it's going to be a really interesting one. And perhaps a more interesting question from markets' perspective is, if we do see that cut in December, do we see another one in January? I think it's likely that if they cut in December, there's some relatively hawkish tone and a cautious tone that means that we don't then get another one in January.
All right, a one or the other situation. Jennifer McEwen, we appreciate your analysis as always. That's the Chief Global Economist over at Capital Economics, Jennifer McEwen. We'll bring you more on Bloomberg Markets after the break, as we're looking at gilt yields now up 3 basis points on the 10-year at 4.45. Stay with us. This is Bloomberg.
North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling. But when we started to work for David, his one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line, pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg Markets. I'm Lizzie Verdon in London. Coming up, global stocks come close to erasing all of November's losses. Traders raising bets that the Fed will cut rates next month. Here in the UK, the Chancellor delivers a budget that postpones most of the pain from tax hikes until the end of the decade. A Bank of England rate cut next month is all but locked in. And we head into the all-important holiday shopping season for retailers, with consumers feeling anxious about the economy. Checking in on these markets, and of course it is Thanksgiving. Happy Thanksgiving to those who celebrate. It means that US equity and bond markets are closed, and it means lower volumes elsewhere. But as we look to global stocks, they are inching out some ever so slight gains. We have European stocks up about 0.1% on the benchmark stock 600. The FTSE 100 flat to the downside after yesterday's budget. And as we look to Asia, we did see gains, I should say, of 0.2% on the MSCI Pacific Index, and S&P E-mini futures flat to the downside as well. So as we flip over to the cross-asset picture, we keep an eye on 10-year gilt yields, of course, monitoring where the budget leaves this market. We are low liquidity, mind you, so the cross-currents really hampering perhaps the state of the gilt market. We're at 3 basis points on the 10-year at the moment. The pound is at $1.32, so pretty steady but lower at this point. Bitcoin below that 91K mark at the moment, but still continuing to claw back ground after that more than month-long sell-off. And we've got Brent at $63 a barrel, so steady ahead of that OPEC Plus meeting this weekend, and as investors await next steps on Ukraine. But let's get some more analysis on these markets. Joining me now is Oscar Deshkaya, market analyst at Swissquote. Really good to have you with us this morning. This afternoon, I should say, here in London. I want to start with where we were leaving off with Jennifer McKeown from Capital Economics. She kind of says that when you look to the Fed, it's a choice between a December cut and a January cut. Is that your view, and which one do you think they'll pick?
Well, it's very difficult at this moment to really know what the Fed is going to do, because we have been lacking the economic data, critical economic data, to understand and to guess what the Fed should do. So in this situation, I think it's very interesting to look at the risk to reward ratios. And we think that cutting in the interest rates in January, so skipping the December rate cut, would be the less risky scenario, so that we could have the data in hand and data dependency, and the data could justify another 25 basis point cut, because the other option option would be the Fed cutting the interest rates, and a week after we see a hotter than expected inflation report that would then vanish the expectations of a 2026 rate cuts altogether, and that would be worse for the market sentiment than the contrary.
Are you saying, Ipek, that if Powell pivots at this point on so little data, it would undermine his credibility?
Well, the credibility of the Fed has been quite undermined throughout this year. So we think that the data dependency is one thing that the Fed should really put the accent on, because even when we are talking with our clients, what we generally hear is people are not even sure about the accuracy of the data anymore. So the Fed credibility waning and the data accuracy is no longer being, holding confidence. But we think that the situation is quite critical for the Fed. So what the Fed needs to do is to maintain its credibility. Now, I think that a data-dependent, fact-based approach would be one of the best things to increase the credibility level at this point in time.
And let's say that the Fed cuts and the Bank of England cuts, as is expected. What's your outlook for cable in that scenario? Because we've had Morgan Stanley closing its bullish pound recommendation today.
Well, we have been quite bearish on pounds since a month at least, and that was basically backed by the bleak outlook for the UK economy, and also by the expectation that the Bank of England would start cutting the interest rates once the budget is over. And now that the budget looked quite disinflationary, I think that the Bank of England has got the green light to cut the interest rates in order to give the UK economy a little bit of relief. So in that situation, the softening expectations regarding what the Bank of England could do from here actually does make the pound sterling look a little bit weaker in the coming weeks. So that was our call as well. We think that there will be higher pressure on sterling moving forward, especially due to the expected Bank of England cuts.
And to be clear, does the budget change how many cuts you see from the BOE beyond December next year?
Well, we think that the Bank of England will still have to look into the inflation data. So now the expectation is that this budget is going to be disinflationary for the UK. But then the facts will determine, the data will determine whether the Bank of England could go full blast in and cut a few times next year. So we are mostly willing to sit back and look at the inflation data to understand and to gauge whether more rate cuts will be necessary for the Bank of England. For now, the UK is still struggling with inflation.
And just coming back to the Fed, if Fed cuts are priced in, what drives the tech rally further? Are we going to see a Santa rally, Ipek?
Well, that's the thing. I mean, the Fed cut is one thing. It's just one part of the equation. The other part is whether the rate cut is going to be the right thing to do and is going to be justified and backed by the economic data. So if the Fed cuts the interest rates and the inflation report a week after it comes in soft enough to keep the Fed doves in place, then we could eventually finish this year on a positive note and with a Santa rally that would obviously back the technology stocks. But if the Fed cuts the interest rates in December and the week after we find ourselves with a hotter than expected inflation report, then the vanishing Fed cut expectations for next year will probably have a negative impact on sentiment, and we could eventually see some heightened volatility into next year and maybe not that strong rally in technology stocks.
I also want to talk to you about oil, of course, a key component in the inflation story. We've got Brent trading slightly higher at $63 a barrel, but of course we mind the potential peace in Ukraine. We're looking ahead to this OPEC Plus meeting this weekend. Do you see supply cuts next year?
Well, I think that the OPEC supplies have been one of the reasons we haven't seen oil prices being able to sustainably recover. And that's interesting because in an environment where you have interest rate cuts from the major central banks and softer US dollar, we would have expected crude oil to recover. So that is something that did not happen, and that was basically because of ample supply from OPEC and non-OPEC countries. So I think that in order to throw a floor under this year's oil sell-off, OPEC has got just one option, and that's to, well, find a solution to their ample supply and maybe start restricting the output again, because the global glut is signaling that if OPEC countries and the US continue pumping at the current speed, well, we will probably see the prices go further down.
Okay, so is $60 as a floor for oil prices under threat into 2026?
Well, we think that the floor would be more around $50 to $55 per barrel, talking about WTI. But looking at the way the market is trading, the oil supply and the rising oil supply in the global markets, even the geopolitical risks have not been able to pull the prices higher. So I think that OPEC is just one part of the equation that could eventually reverse the weakening in the US and the global oil prices. But on the other hand, we still are facing the US pumping higher than expected in other non-OPEC countries. So the OPEC's proportionality in the oil market has diminished. OPEC can maybe throw a floor under the oil sell-off, but that won't be the only factor that will reverse the oil, the lower oil prices that we have been seeing since a couple of months now.
Okay, well, we'll listen to the commentary from that meeting this weekend. Ipek, before I let you go, we've got to ask you, it's Thanksgiving. What's the biggest risk for 2026?
Well, I think that the biggest risk for the 2026 is inflation picking up momentum due to the tariff-led costs that would finally start showing in the inflation data. If that happens, actually, the U.S. will find itself in a situation where the labor market would be weakening and the inflation heating up again. And that's going to be a very difficult challenge to do for the Federal Reserve in an environment where the confidence and appetite for the U.S. assets are also diminishing. So I think that the biggest risk for 2026 for the global economies is seeing the inflation pick up momentum again.
Not what the president wants either, heading into the midterms. Ipek, good to see you as always. Thanks for pulling the Thanksgiving shift for us. The Swissquote market analyst, Ipek Oskar-Deshkaya there. We thank you as always. Well, coming up on the program, we're going to turn to tech. We'll be hearing from the NVIDIA CEO, Jensen Huang, as he discusses strong demand for the company's Blackwell chips in a recent exclusive interview. This is Bloomberg.
Why would you want to be chairman of the Fed? Are you sure you want that job?
If the president asks me to be Fed chair, then I'll do it. If I'm not Fed chair, don't be disappointed for me because I love the job that I have.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Some people travel to see the world. I travel to question the forces that shape entire nations. Wow, was it possible? My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Well, shares of Nvidia are up more than 34% year to date. And while questions about an AI bubble and rising competition loom, demand for Nvidia's chips remains strong. The company's CEO, Jensen Huang, spoke to Bloomberg tech host Ed Ludlow about that following its record-breaking third-quarter earnings release.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world, but we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start, that's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the U.S. Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the U.S. has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the U.S. government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
That was Bloomberg Tech's Ed Ludlow speaking to the CEO of NVIDIA, Jensen Huang, and we can break it all down with Bloomberg intelligence analyst Matthew Bloxham now. Matt, you've heard from the NVIDIA CEO there, but Wall Street is getting a bit sceptical. It doesn't seem to be too convinced about NVIDIA's trajectory. I wonder whether that skepticism about NVIDIA's hold on the AI chips market is actually warranted.
Yeah, I mean, I think people have to assume over the midterm that they're not going to be this completely dominant player in the AI market. You know, look at any other big tech market. There's at least 2 big strong players, maybe if not normally kind of 3 or 4. There's nothing to suggest that they're not going to remain the leader, but their market share isn't going to remain at, I don't know what it is, but 90% plus that it is right now, for all sorts of reasons. So we'll see kind of new players that see the big opportunity like AMD and others like Google that are perhaps a bit more motivated by controlling the full stack of the technology and software. So inevitably, there's going to be competition there. In some ways, that may well be good for them because maybe kind of bigger volumes kind of help bring down kind of input prices and also kind of spurs them to continue to innovate and evolve. So, yeah, I think obviously that the share prices run up substantially. So it's not surprising to kind of see people kind kind of take their foot off the pedal a little bit. Obviously, the bigger issues, we're still in the early stage of enterprise deployment of AI. I think that's where perhaps some of the bigger question marks are. Is it really going to take off the way that the likes of NVIDIA and OpenAI are investing for, or saying they're investing for? And that's something where I don't think the evidence is really going to become clearer for maybe another year or so. And so I think that would be the kind of biggest concern. It's not so much whether they're going to remain a dominant chip provider, it's whether the market's going to be big enough in the midterm to justify the kind of valuations we've got right now. On paper, it doesn't look that expensive, 26 times earnings. I think the Magnificent Seven average is 30 times earnings. But I think there is a question mark about whether we're just kind of seeing an unsustainable kind of bump in their revenue because of this kind of big race to invest in AI by all the big hyperscalers, and whether the kind of normalized revenue ends up being kind of somewhat tempered.
Really fascinating to get your thoughts, Matt. Thank you so much. Matthew Bloxham there of Bloomberg Intelligence. Well, the chair of Europe's largest digital bank, Revolut, says that getting fintechs to list in the UK rather than on the NASDAQ is a big issue. Martin Gilbert spoke to our colleagues on the opening trade as part of their UK budget special. Take a listen.
The listing here is a big issue. Now, we're heading in the right direction with the stamp duty holiday for 3 years. So that has helped because the automatic place you go to list as a fintech is NASDAQ, because it's deeper liquidity and they don't have the stamp duty. So at least one of the things has been taken away, that. But it's still a big problem getting companies to come here, because this is traditionally, traditional markets, sort of dividends. As you said, housing stocks, mining stocks, traditional industries market, whereas NASDAQ is very much fintech.
Does growth equal stock market performance?
Yeah, I think so.
Where's the growth?
Yeah, it does. I mean, I think you can invest in the FTSE 250, and even if you don't get growth, you're going to get a company a week being taken out by private equity. So you don't even need growth in the FTSE 250. But I think growth does equal stock market performance.
So this morning, not exactly a kind of a great day for the UK stock market. The growth story is getting worse, not better.
Yeah.
Why am I being encouraged to invest in the UK at the moment?
Because it's cheap. It's so cheap. I mean, it's...
Why is it cheap?
Because of the flood of money over the last 20 years out of equities into bonds. I mean, I'm bemused by the fact anyone wants their pension in bonds, but you can see why the finance directors of PLCs de-risk their balance sheet. So that's what's happened.
What kind of mood music does it create, Martin, when you look at taxes on dividends going up, savings income going up? I mean, the Labour Party says it's about making that tax take fairer versus other sources of income.
Yeah, I think I would have been more worried if capital gains tax had gone up, because you really want to be making capital gains, don't you, rather than extracting dividends out of companies, because. And that's part of the problem with the UK market, isn't it? We pressurize the companies to pay us dividends, whereas rather than reinvest in the business and grow the business.
We've had this kind of overhang over the UK economy, over UK financial markets, kind of post-Liz Truss. Are we in any world where that is dissipating, that there is a sense of trust back into this economy? Like, the bond market was becalmed because of this budget, but it largely knew what was going on. How fragile? You have seen confidence, you have seen fragility. Kind of where are we on the spectrum of that right now?
Well, as governments borrow more and more money, the bond markets become more important to them, which is why the budget was so slanted towards that particular audience. So I don't see the bond market's importance diminishing at all.
There is a question here of not just an exodus of investors, an exodus of money, but an exodus of British residents to other financial capitals in the world, famously Dubai.
Yeah.
Does this budget encourage more of that?
It hasn't stopped it, that's for sure. I don't think it encourages it. But I think the worrying thing is we're losing not the non-DOMs, we're losing a layer below the non-DOMs to the Middle East. And I suppose, 20 years ago, if someone had asked my advice where to go, I'd have said go to Asia. Now I would say go to the Middle East. I mean, that's where the growth is, that's where...
So what would stop the exodus? You said it hasn't encouraged it, but it hasn't stopped it. What would stop it?
Look, I mean, we've always been exporter of talent in this country. I mean, to Americas before and then Asia over the last sort of 20 years. I think what we want to do is get them back, encourage them to come back once they've made their money, you know, or got some money by that stage.
All in their scarves, aren't we? They brave. We make up tough here in London. Still ahead, JP Morgan plans to build a new tower in London's Canary Wharf. Updates on that story and more next. This is Bloomberg.
Regions are home to some of the biggest deals and fastest growth in the world. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
You do see opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day, now at our new time. Only on Bloomberg.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
You missed it on Bloomberg Open Interest. Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Tyler Kendall in Seoul, South Korea, and this is Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Now, to a look at what's making headlines around the world. 2 National Guard troops on patrol just blocks from the White House were shot and critically wounded yesterday. FBI Director Kash Patel says that the government is conducting a terrorism investigation into a suspect.
It is an ongoing investigation of terrorism. Make no mistake about it. There is confirmation now that the subject had a relationship in Afghanistan with partner forces. We are fully investigating that aspect of his background as well, to include any known associates that are either overseas or here in the United States of America.
Elsewhere, Vladimir Putin says that Donald Trump's proposals for ending the war in Ukraine could be the basis for future agreements, but no final version exists yet. Putin also says Russia and the US need to discuss specific issues, and he's ready to start talks anytime. Plenty more to come.
cidade estava sitiada.
Isso, ao começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. It's just 3:29 here in the city. And let's get a check on these markets. We're looking at the FTSE 100 now in the green. We're up 1 basis point after that budget yesterday. The Stock 600 more broadly in Europe up 0.2%. Of course, it is Thanksgiving, and happy Thanksgiving if you're stateside and celebrating. It does mean that US equity and bond markets are closed. It also means we have lower volumes elsewhere. We did see Asian stocks on the MSCI Asia Pacific Index up 0.2% earlier, and we've got S&P E-mini futures now flat as a pancake. But let's flip over to the cross-asset picture and see what's happening there, because we do keep an eye on gilt yields after that budget yesterday. The 10-year up 3 basis points at 4.44 at the moment, so that relief after the budget yesterday reversing somewhat. Bit of a reality check now for Rachel Reeves, you might say, although we have got, as I say, low liquidity. We've got the pound there at 132, so pretty steady as things stand. Oil flat at $63 a barrel ahead of that OPEC Plus meeting tomorrow, and Bitcoin continuing to claw back ground after that more than month-long sell-off, but still just shy of the 91k a token mark. Now, this week, OpenAI rolled out a new shopping research feature ahead of Black Friday, further integrating AI into the $30 trillion global retail market. I'm pleased to say we can discuss with Resolve AI CEO Daniel Wagner, his company which helps retailers and brands target customers and boost efficiency. So really good to have you with us, Daniel, on the program. For our international audience who, if anyone isn't familiar with how the company works and what it does, just talk us through what your vision is for Resolve AI.
Yes, so my view is that e-commerce as we know it today is end of life. The whole navigation of, meandering through an e-commerce site to find the products you're looking for is, really finished. And the new way to do it is very similar to the way in which we experience a very good in-store experience. So, for example, if you go into a great retail store that has a great salesperson in front of you, that person will guide you through a purchase process with knowledge about the products, knowledge about how to use those products and so on. And when we go online, it's very much a sort of directional inquiry about a specific item and trying to find that item and then checking out. And the difference between these two channels is quite vast. 7 out of 10 people who go into physical stores end up buying a product, and 7 out of 10 people who go into digital stores do not. So we're changing that. We've created a virtual salesperson, probably a good way to describe it, where you can have a conversation with what we believe is the best salesman on the planet, representing that specific store. And as you go through the process of interrogating the product and finding out everything about it, you end up buying a product more likely than not.
But Daniel, as a consumer, what's different about that than asking ChatGPT what to buy my mum for Christmas?
Well, it's different in that, when you're dealing with a physical retailer, when you're dealing with the retailer itself, when you're dealing with ChatGPT, you're talking to ChatGPT that's looking across everything. It's like just searching the internet. And when you're interacting with Boots or Marks & Spencer or ASOS or whatever, you're dealing directly with that retailer. And those experiences are very poor today.
So what trends are you seeing this holiday season then? What are people asking AI about their shopping for the holidays?
Well, we're at the very beginning of this revolution. Where we are right now in the current holiday season is that AI is being used to help identify where products are and what's available, rather than interrogating, in the way I've just described it, the stores themselves. Next holiday season and throughout 2026, you'll see a vast change in the way in which you interact with digital channels. So instead of going to a website and navigating through the different categories, instead what you're going to do is you're going to say, hey, I'm looking for a pair of trainers. I'm a size 10. I want them in blue. What have you got? And the site will answer you. Yeah, we've got these different, styles for you. Do you want something with a good control for the ankle? Or, that you'll have a conversation which will result in a much better purchase decision than a purchase flow.
So how much do you think that agentic AI will add to revenue?
So first of all, I think that there are two channels in which this new wave of interaction with digital and e-commerce sites will transpire, will present themselves. The first is that I go www somewhere and start a conversation with the best salesman of that store, as represented by an AI interface, which are the things that we do. And the second thing that will happen is I'll talk to an agent. Maybe it's Siri on my mobile phone, maybe it's ChatGPT, maybe it's something else, Perplexity, whatever, and I'll be engaging with that third party, who will then interrogate lots of different sites using agents. These are programmable elements of programs that go out into the internet and start doing the searching and the interrogating of the different sites on your behalf. Now, the problem with that, there's an opportunity there, of course. It means that the retailers get exposed to consumers who may not know that their products exist. But on the downside of it, these programs will run amok within the retailer's site and take control of the relationship between that retailer and the consumer. So we provide technology that sits in between that our agents sit on the customer's retail site and interact with ChatGPT and Siri and other agents that will come and talk to them. So there's two ways that this new AI generation is going to change.
Yeah, so lots of opportunities. But Daniel, you're one of the few AI companies that's been the subject of a short report recently. It was by Fuzzy Panda Research. Why was that report wrong?
Oh, that's just a load of rubbish. In America, these things are quite common, especially with volatile stocks and with, emerging technologies like ours, where the market is yet to really understand how much value we're going to bring. That will come, very much apparent as we go into 2026, because we started this year with no revenue, and we're exiting this year with 150 million of contracted revenue and over 100 major enterprise accounts, as you've just shown. So as the market is going through this process of evaluating us, this extraordinary growth we're going through, it's a great opportunity for short sellers to try to undermine the confidence in our stock, write a lot of rubbish, put it up in a post on the internet, completely unvalidated and completely anonymous, to try to put fear into some of the retail investors. And it worked very well. The stock dropped on the day that report came out by about 10%, and it's bounced back since. But that kind of thing, is quite common with emerging technologies like ours. I mean, the truth will out as time goes on.
All right, well, you got your rebuttal. Daniel, good to see you. Daniel Wagner, Resolve AI's CEO. Thanks for making time for us on Thanksgiving. Well, sticking with tech, billions of dollars are being invested today in turning what was once a theory into reality. That's quantum computing, of course. Wall Street Week's David Weston took a look at this revolution in computing that could be even larger than generative AI.
Companies like Google, Microsoft, and Intel are all exploring the potential of quantum computing. But there's also a new group of contenders, startups, that are betting it all on the hope that quantum tech will one day become profitable. One of those firms is Maryland-based IonQ. Its CEO is Niccolo De Masi, who believes he has the best horse in the race.
We supply quantum computers to our both federal, state, and commercial customer partners. We also provide quantum key distribution, and we do that both on the ground and up in the heavens. Quantum key distribution is effectively quantum cyber security. And we're very focused on this not being just proof points in the lab, but doing useful quantum advantage examples for our customers and embedding ourselves into their workflows on an ongoing basis.
So what will it look like as we go beyond showing so-called quantum advantage in the lab and embedding it into real-world workflows? One place people look to first is in the life sciences, work like Dr. Garcia is doing at the Cleveland Clinic.
An example of something that we've done is we've taken some of the algorithms that we've worked on for chemistry, and alongside Cleveland Clinic, we've started looking at different chemical processes that they really care about. So you can think about this in the larger context of, therapeutics design, drug discovery, that kind of thing. And really what we're doing with Cleveland Clinic is pushing the boundaries of algorithm development, methodology, of using quantum computers, again, in concert with classical computers to come up with solutions to problems that they care about. Protein folding is definitely one area, mRNA, secondary structure understanding, how things like come together and how they look in sort of 3D is a very interesting area, as you can imagine, as you're trying to understand how these things fit together in a biological system.
It isn't just life sciences that could be revolutionized by the addition of quantum computing. Financial markets are another target of opportunity. IBM scored an early advantage this year when HSBC said it used the tech company's Heron quantum processor to make a 34% improvement in predicting how likely a bond will trade at a given price.
I think there's a lot of excitement in the market space as well, right? Especially because optimization is certainly in another area which we know is a classically difficult problem. And from the point of view of actually using a quantum computer to address optimization, there are many threads there in terms of leveraging this kind of large exponentially computational space to handle problems such as portfolio optimization, right, or risk management, right? So there's a lot of interesting ideas there that are being looked at by various financial institutions.
That was David Weston, and you can check out the full episode of Wall Street Week online at Bloomberg.com. Well, coming up, dust off your credit card. Retailers are gearing up for a busy holiday shopping season. We'll chat that next. This is Bloomberg Markets.
You missed it on the close.
You put a lot of emphasis on service, obviously, with the Green Apron Project. What does that look like in terms of staffing, though? I mean, you obviously have to hire more people, but more importantly, you have to retrain a lot of your existing staff as well. How, I guess, receptive have they been to that?
I got to give our partners a lot of credit. They really have embraced both the Back to Starbucks strategy and the Green Apron service standard. And so the fact that we've staffed the stores up and we've added more people, we've added more hours, it actually has set them up to be able to do their job, I think, with excellence.
You're trying to make the interiors a little bit more accommodating. You're also looking to sort of create more, I guess, lower cost models for building and operating some of these locations. Are those two in conflict with each other, those strategies?
No, actually, they can work really well together. You can have great design, you can have a great seat, you can have a great atmosphere, and then also be very cost conscious. And that's what we're doing here.
Don't miss the close live every weekday.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's
biggest tech news and innovation.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Annabelle Drulers in Hong Kong.
I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Well, retailers are heading into this holiday season looking to attract budget-conscious shoppers amid continuing inflation and tariff pressures. Bloomberg's Romain Bostick sat down with two executives to get their expectations ahead of the retail rush.
Tis the season for holiday shopping, and despite U.S. inflation holding above historical averages for 4 years, and tariff tumult upending global supply chains for the past 5, the CEO of Bloomingdale's, he says consumers are ready to spend.
Actually cautiously optimistic. The trend over the past few months has been amazing at Bloomingdale's. We feel pretty strong about our customers' feedbacks, about our partner feedback, about the current trend that we're experiencing, and we're building such a great event for this holiday season that we're convinced that it will resonate very, very well with the customer.
And he's not kidding. Bloomingdale's is betting big on the holiday season, from personalized stockings to a Labubu tree, and even a visit from a very familiar face. All in an effort to reinvigorate the department store shopping experience with emphasis on experience.
This is what we're refocusing on right now, is bringing experiences. Not only great products, but really bringing experiences that create the conditions of relationship. People want to connect, and we want them to connect at Bloomingdale's.
The Bloomingdale's flagship store on the east side of Manhattan has for decades been one of the crown jewels of New York City retail. But behind that grand facade was a company struggling to adapt to the times. Now, after years of sales declines, Bloomingdale's, a division of parent company Macy's, has found its stride, posting 4 consecutive quarters of same-store sales growth heading into this holiday season. And Bloomingdale's has reason to be bullish. The National Retail Federation estimates that 44% of consumers will do their holiday shopping at department stores this year. And Olivier Braun, he's confident it will extend his company's rebound.
It's really about rebuilding the next golden age of Bloomingdale's. We heard a lot about Bloomingdale's in the 70s, in the 80s, where it was really the place to go. And actually, right now what we're trying to build is really recreating this destination, Bloomingdale's. And we're an icon, but we have to reinvent ourselves. It's also what Josh is doing with Burberry. This is what we're aiming to do at Bloomingdale's, with one key focus is actually bringing back customer experience, customer delight in our stores, and really based on building relationship, connections, etc. This is what is making us different.
The New York retail giant joining forces with the iconic brand and plaid, a relationship that goes back decades.
This is a relationship that Burberry and Bloomingdale's have had for over 70 years. So it's the perfect place to bring our timeless British luxury brand expression to all of Burberry customers and all of Bloomingdale's customers, and frankly, to all of New York City.
To celebrate that partnership in the spirit of the holiday season, Bloomingdale's has literally wrapped their flagship store in a giant Burberry scarf.
It was a little bit emotional, I have to say, seeing this uniquely British, uniquely Burberry, uniquely Bloomingdale's story come to life on the streets of New York City. There's only one New York. We are really thrilled to open our arms and wrap a scarf around New York City and bring a little bit of warmth and joy for this holiday season.
And since Joshua Schulman took over the helm of Burberry in July 2024, shares of the London-based brand, well, they've rallied 50%
as the American-born CEO leans into the brand's Britishness.
There are many luxury brands that have wonderful, beautiful heritages, and they celebrate their heritage, whether it's Italian or French. But Burberry is unique because we are the only luxury brand of scale that has a uniquely British heritage.
Burberry, remaining true to its roots, is highlighting the products that cemented its status in the luxury space, while also branching into new directions.
Everyone knows and loves a Burberry scarf, which is the perfect gift for anyone in the family, around $520. But we have a range of products. You know, you can buy a candle for $130 to one of our iconic Made in England trench coats for $3,000. Burberry has always been at its best when it is a luxury brand with broad universal appeal. What we love about Bloomingdale's is they really share our values. And this is a brand that also has broad universal appeal.
A recent report by J.P. Morgan shows that consumer demand for luxury goods in the U.S. is largely held up despite the economic headwinds. The S&P's Global Luxury Index, which tracks 80 of the biggest names in that space, including Burberry, Prada, Dior, LVMH, that is showing no sign of slowing down.
The momentum that we're seeing didn't start for holiday. It started, months and years ago, and we just keep the pace right now. So we have new events, we have new marketing activation that are coming, we have new brands coming in the store right now, we have new ideas, so I think it's just a kickoff of what's coming.
And though Bloomingdale's has only just unveiled their 2025 holiday display, they're already looking ahead toward the future.
We already know what's going to happen in 2026. We're already working on what's going to happen in 2027.
It's got me in the mood for a bit of shopping, that. That's the Bloomingdale's CEO, Olivier Braun, and the Burberry CEO, Joshua Schulman, speaking to Bloomberg's Romain Bostic ahead of the holiday shopping season. And joining us for more on that is Bloomberg's markets correspondent, Nora Melinda. Nora, Black Friday coming up, one of the biggest shopping days of the year. But of course, we've got the tariff pressures. So what are the expectations on both sides going into this day?
Well, Lizzie, we had Black Friday once maybe just being a one-day event, but we're clearly seeing it now transforming into about a 5-day event and sometimes longer. So you see a stretch between Black Friday and then also all the way through Cyber Monday here. And we're seeing the National Retail Federation having expectations for about 187 million shoppers coming through this 5-day stretch. That's a record. We're really seeing that as topping many of the expectations and the estimates that we did have in the past. But in the midst of all of this is what you called out, Lizzie, the landscape of the economy right now. We're hearing a lot of economists talking about this K-shaped economy, where essentially you're seeing a bifurcation between the higher income individuals and the lower income individuals. And so you're seeing a lot of pricing power. You're seeing wage growth when you look at the top sector of the economy. But when you think about the lower income consumer, you're continuing to see pressure. And of course, tariffs still remain a concern for both of these groups.
So when it comes to the bottom part of that K, are people using more credit and buy now, pay later options to just afford these purchases?
Absolutely, and that's what I'm hearing from a lot of my sources, analysts and economists. They're really expecting for this Black Friday holiday and this 5-day stretch to really see an increase in buy now, pay later options. And you're seeing the consumer stretched beyond belief, and they're trying to find ways to spread out their payments, finding a way to make things more affordable during this time period, while still trying to get the gifts that are necessary or exciting to do right now during this holiday time period as we're heading into year end.
And so back on Wall Street, Nora, how important is Black Friday to retailers' share prices?
It's really important. And of course, this is a time period where you're seeing a lot of sales happening. It's really a critical time period for the retail space. But if you look at an index of retailers in the S&P 500, the retail sector is only up about 4% year to date. So when you look at that index and you really think about what it looks like as we're heading into year end, of course, we do see this as falling behind the S&P 500 substantially. So this is going to be a really critical time period, almost a litmus test, if you will, as we look at the retail space more broadly and the economy.
Okay, Nora, great reporting. We thank you so much. That's Nora Melinda, our markets correspondent ahead of Black Friday. We thank you so much. Well, we've got plenty more ahead, so stay with us. This is Bloomberg Markets.
fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Verdon in London. Now, a look at what's making headlines around the world. The death toll from Hong Kong's deadliest fire in decades is climbing. At least 75 people are dead from a fire that destroyed hundreds of homes. Police have arrested 3 senior figures from an engineering company on suspicion of manslaughter, with a criminal investigation to follow. Elsewhere, the IMF has announced an agreement with Ukraine on a new financing program, sending a positive signal to the nation's international allies. The 2 sides have agreed to a new 48-month arrangement under the Extended Fund Facility, with potential access to around $8 billion. And JP Morgan plans to build a new tower in London's Canary Wharf that would serve as its principal UK headquarters and contribute nearly £10 billion to the local economy over 6 years. The bank says that the new site would accommodate up to 12,000 people. Well, those are some of our top stories around the world. Still ahead, we'll be joined by Janet Mui from RBC Brewin Dolphin for her read on today's global market trends. We're looking at futures pretty flat stateside, flat to the downside. The Stock 600 up 0.2% as we inch towards the close, and the FTSE 100 has dipped back into the red, flat to the downside on the FTSE. We're looking at gains, though, for the 250 up 0.8%, the CAC 40 in Paris up 0.1%, and the DAX in Frankfurt up 0.25%. Stay with us for more. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Welcome back to Bloomberg Markets. I'm Lizzie Verdon in London. Coming up, global stocks come close to erasing all of November's losses. Traders raising bets that the Fed will cut rates next month. And the UK Chancellor delivers a budget that postpones most of the pain from tax hikes until the end of the decade. A Bank of England rate cut next month is all but locked in. And we head into the all-important holiday shopping season for retailers, with consumers anxious about the economy. It's just gone 4 p.m. here in London. Let's check in on these markets. Of course, it is Thanksgiving stateside, so happy Thanksgiving if you're celebrating. It means that US equity and bond markets are closed, and it means lower volumes elsewhere. But we have got global stocks in the green this morning, ever so slightly. The Stock 600 up 0.2%. The FTSE 100 now in the red, and we're looking at US futures flat to the downside. But flip the board over to the cross-asset picture, because we've got a keen eye on the gilt market after yesterday's UK budget. The 10-year yield is now up 3 basis points at 4.45, so a bit of a reality check perhaps for UK assets after yesterday's relief. You've got the pound at $1.32, so pretty steady there. Brent at $63 a barrel as we head towards that OPEC Plus meeting this weekend. And Bitcoin still clawing back ground after that more than month-long sell-off, but we're still shy of $91 a token there. Well, I mentioned that budget. The UK Chancellor Rachel Reeves announced £26 billion of tax increases yesterday in a budget that was aiming to balance the demands of both the bond traders and Labour backbenchers. I got to sit down with the Chancellor yesterday for an exclusive interview about that budget and its early leak.
Richard Hughes and the OBR have confirmed that they have launched an investigation into what happened. It obviously was a serious breach. They've apologised for that and put out a full statement.
So, leak aside, are you happy with the market reaction today?
I think it's best for chancellors not to comment on what's going on in the markets, but what I was determined to deliver today, as well as cuts to the cost of living and cuts to NHS waiting lists, was cutting borrowing and the debt. And you can see in the budget today the increase in headroom, more than doubling the headroom to £21.7 billion, and indeed meeting that target on the stability rule a year early.
When you talk about cutting borrowing, the Institute for Fiscal Studies says it's a spend now, pay later budget. What do you say to traders who are still concerned that this fiscal tightening's backloaded?
Well, listen to the IMF, and the IMF say that there is a faster rate of consolidation in the UK than in any G7 economy, and we see that that borrowing as a share of GDP falling right through the forecast period. After hovering around 5% for many years, we are actually getting that down.
Well, the Resolution Foundation says this budget leaves much of the fiscal repair job to 2028 and beyond.
Well, some tax reforms, like the high-value council tax surcharge, take a while to introduce, and also want to make sure that we get these things right. And similarly, the changes with the further freeze in the tax allowances, they're being frozen after they were already frozen for 7 years from 2028. But there are also real savings in spending right now, with better balance sheet management, cracking down on some of the waste and inefficiencies, and indeed introducing a further efficiency drive within our public services. So this is not all about tax. We've also taken taken measures on the spending side as well.
You mentioned the freeze on income tax thresholds for 3 years. It's going to create millions of new taxpayers. Do you accept that breaches the spirit of your manifesto?
Well, the manifesto was clear that we wouldn't increase the rates of income tax, national insurance or VAT, but I do recognise, and I said this clearly in the House of Commons today, that freezing the thresholds for a further 3 years after they were already frozen for 7 years under the previous government does mean that I'm asking ordinary people to contribute more. I think that is a fair thing to do in the wake of the productivity downgrade from the Office of Budget Responsibility, which will see £16 billion less come in terms of tax revenue. But I've kept that cost on ordinary working people as low as possible by closing loopholes in the tax system and by introducing some taxes, for example, on EV charging, which the previous government ducked, even though it's been a ticking time bomb for some time.
But do you accept the OBR's conclusion that this stealth tax rise is going to reduce economic output because of the financial incentive against working in order to fund spending on benefits?
I think the OBR have been pretty clear that no measures in this budget impact their growth forecast. Indeed, they point to things like the India deal, the planning and infrastructure bill, as being positive for the economy. And indeed, our changes to universal credit will result in an additional 15,000 people in the workforce in the next few years.
Well, overall, the OBR says none of your policy measures boost growth. What does that say about the government's growth ambitions?
Well, in the spring, you'll remember that they scored £6.8 billion, the biggest ever non-fiscal scoring that their OBR have ever done for our planning reforms. Just a couple of days ago, the planning and infrastructure bill was in the House of Lords. That is now almost complete, just one more return to the House of Commons, and then that bill will get royal assent. And the OBR haven't scored the India deal, the EU deal, or the US deal. And that's why I'm confident we can beat these forecasts on growth. We've beaten them this year with 1.5% growth now forecast, not the 1% they forecast in the spring. And I'm confident that we can beat those forecasts again.
So finally, Chancellor, you've effectively just broken your promise made after the last budget not to raise taxes again. Will you now rule out more tax rises, whether directly or by stealth, this Parliament?
So last year I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecast around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the forms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor?
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
That was my exclusive conversation with the UK Chancellor Rachel Reeves after her budget. We can get analysis now with Janet Mui for the impact on wider markets. She's head, of course, of market analysis at RBC Brewin Dolphin here in London. Happy Thanksgiving, Janet. Thanks for joining us. I'm looking at the market reaction today. It was pretty positive yesterday, but today we've got gilt yields up 4 basis points on the 10-year. The pound's been whipsawing. Is this market's having second thoughts about Rachel Reeves' budget, or is it just the Thanksgiving effect?
Well, Lizzie, thanks for having me. I think overall the positive is that now the fiscal headroom is almost doubled, so that gives Rachel Reeves some cushion. And I think the markets buy that the government is fiscally disciplined, so that's great. But at the same time, the thing is, this is ultimately a contractionary fiscal budget, and we know that a lot of those pain is going to be backloaded. And there's no certainty whether Rachel Reeves will come back and ask for more borrowing, right? And also the thing is, it's very hard to model human behavior. You mentioned the incentive part. With higher taxes, I mean, it could alter that incentive. And, productivity is already dire in the UK. And I think markets are just worried, where is that growth coming from?
So do you think that more tax rises are inevitable, even if the Chancellor wouldn't admit it to me?
It's hard to say, to be honest. I think one function of that is growth, and we already know that the growth is very subdued in the UK. And I think one risk and vulnerability is that a lot of that growth could be exposed to international factors. We saw that, for example, the US growth is already slowing down, and that could have a knock-on effect on the rest of the world. And that is extremely hard to predict. So I guess there are parts of vulnerability, and it's really, really hard to say. I think even for the Chancellor, she can't really commit to not having to raise taxes again, isn't it? And as I said, the borrowing is really backloaded, and if there is any more, near-term funding needs, then ultimately it's either tax rises or borrowing.
Well, that's a pretty ugly outlook, Janet. I was speaking to a couple of billionaires in South Africa last week at the Bloomberg Africa Business Summit. They used the word uninvestable to describe the UK. They said they'd rather put their money in Africa. Do you think that it's a bit hyperbolic, though, to be comparing the UK to an emerging market at this point?
Yeah, I think that's a bit of a stretch, that kind of comment. After all, I think many UK businesses still think that it is a great place to invest. I think Bloomberg had a great coverage on how JP Morgan is going to invest in the European headquarters in Canary Wharf, and that's a huge long-term commitment. And also, if you look at UK, the FTSE is near record highs and actually outperforming the US market, right? So I think there are still elements that are attractive for global business. We, after all, have a very high knowledge-based workforce, very strong services sector, which very, very attractive from a business perspective.
Well, what's your outlook for the pound? We've had Morgan Stanley closing its bullish pound recommendation. It looks like we'll get cuts from both the Fed and the BOE. Is there any more upside for sterling against the dollar?
Yeah, I think the near-term interest rate outlook could be determinant. I think, in our view, the economic outlook is subdued, and the Bank of England may actually have to cut more interest rates than market currently expects. Meanwhile, maybe there won't be as many rate cuts in the US. So on that front, the pound may have potential to weaken versus the dollar.
Okay, interesting. More from the Bank of England. How many more? And fewer from the Fed. How many fewer?
Yeah, it's difficult to say. I think for the December rate cut, I think is pretty much likely in the UK. I mean, it's still doubtful in the US, to be honest. And for next year, it really depends on the inflation trajectory and growth dynamics. For the UK, we think inflation has peaked, and we know that Andrew Bailey, he's the swing voter, and after the budget and the recent inflation data, probably there is room to cut maybe, I think markets currently expect about 2 rate cuts. We could see more in the UK, but it is difficult to say how many. And in the US, I think the economic situation is slowing, but ultimately we're still seeing pretty decent growth. And the labor market is certainly not going downhill that much. So I guess that indeed is potential for UK to cut more than the US next year.
But if you get fewer Fed cuts because of a good economy, where does that leave US stocks?
Yeah, that's a very interesting question. I think, honestly, I think it really depends on how AI is playing out. I think if the economy stays expansionary, I think markets are okay with a few, fewer rate cuts in the US. I think ultimately the thesis has to be a US economy that continues to expand and the AI theme continues to play out. I think that would be more crucial than exactly how many rate cuts we are going to get.
And of course, what we really want to know is when all that AI capex is going to translate into productivity, Janet.
To be honest, I think we're already seeing fruits of that, and I think there's still a lot of potential for that to play out. I think one very important observation is that despite so much AI capex going in, there's still so much demand that is being unmet. And we already heard from a lot of cloud providers, hyperscaler, that the cloud demand is still super strong and not being met. So I think there is visibility on the amount of capex that is being needed. I think one of the concerns would be about, later on, once that AI asset is being built up, what is that rate of depreciation? I think it is very hard to actually predict at the moment. But I think from the demand side of things, certainly is still very strong. And that's why I doubt that the enthusiasm over AI would falter apart in the near to medium term.
And is that a global story, Janet, or is that limited to the Magnificent Seven?
I think it's more still going to be in the AI infrastructure build out. The companies that are in that semiconductor ecosystem is still going to benefit. I think a lot is still the picks and shovels play. And of course, you're going to see more in the applications layer, but there's just so much uncertainty on which company is going to dominate. I think, for example, Alphabet, markets are assigning a high success rate to that after Gemini 3, and of course, it's huge AI ecosystem. But in terms of the other companies, it's still very hard to say. So I think the more clarity is still likely to be in the semiconductor picks and shovels play. And otherwise, I think ultimately to succeed in AI, you need a lot of data, you need the ecosystem, and you need the chips. And I think so far, if you have visibility on that, probably the big tech, the hyperscaler, are still more likely to win in this AI race.
All right, Janet, good to see you. Janet Murray of RBC Brewin Dolphin, we thank you so much for joining us on Thanksgiving. Coming up, we're going to stay talking about tech. Alibaba making a rare foray into consumer hardware with brand new AI glasses. We'll bring you the details next. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Verdon in London. Now a look at what's making headlines around the world. Chinese sports apparel company Anta Sports is said to be among firms exploring a potential takeover of Puma. Sources say that Hong Kong-listed Anta, which owns brands including Fila, has been working with an advisor to evaluate a bid for Puma. Elsewhere, a risk gauge for Oracle debt has reached a 3-year high as it continues its borrowing binge to fund AI products. That's according to Morgan Stanley. The credit analysts say that the situation will worsen as Oracle faces a funding gap, a swelling balance sheet, and obsolescence risk. The price on the 5-year credit default swaps is at risk of topping a record set in 2008. And Alibaba began sales of its first smart glasses powered by its Qwen AI models, marking a rare foray into consumer hardware. The glasses include built-in translucent displays that superimpose contextual information on the user's view of surroundings and are equipped with cameras. Well, those are some of our top tech stories today. I want to dive into it all with Bloomberg intelligence analyst Matthew Bloxham. Matt, let's start with those glasses. Is this just Alibaba's version of Meta's Ray-Ban smart glasses?
Yeah, I think it pretty much is a straight kind of, I want to say, copy.
Really?
Yeah.
Are they going to take off?
Well, they could do. I mean, obviously, the Meta glasses have been very popular. They sold well over 2 million units. They're planning to scale production to at least 10 million units a year next year. So it's something that's landed well with consumers, much better than the kind of VR kind of glasses.
Why? Why would one do better than the other?
Oh, I think they just kind of, it's just more natural kind of evolution. And lots of people wear glasses anyway, so having a pair of glasses with some additional functionalities that connects to your phone, I think is a much easier transition for me to make. And you can walk around the street with a pair of regular glasses. You can't walk around the streets.
Yeah.
Well, maybe you can, but not that safely with VR glasses.
I was just thinking I could replace the teleprompter with a pair of these glasses and then I'd never have to worry about my eyesight.
Yeah, exactly. And obviously you can't buy the Meta glasses in China. And so there's a homegrown opportunity. Obviously the Chinese consumer really into their tech. So I think they're kind of optimistic this is going to be a kind of good extension for them out of services and into hardware.
We were also talking about competition earlier. We were talking about that in the NVIDIA context. But I want to talk about competition with TSMC. So they're suing a former exec. They've left for Intel. TSMC saying that maybe they leaked trade secrets. I wonder, this stuff is surely going to be rife in the chip war, the talent wars, and whether it's just going to be a cost that these companies have to start building in.
I think so. Every industry, has kind of competitive issues, and that's why you have notice periods and potentially non-compete clauses. So it does seem a little bit surprising that, even if it sounds like there was some confusion or lack of clarity about where this particular employee was headed and hadn't declared Intel, but you would think that just by default you build into the contracts a long notice period or a non-complete clause, just so that there's enough time passes that anything you do know becomes kind of not valuable anymore to a kind of competitor, because you go to a rival and you obviously have experience built up and you have to be
behind the curtain.
Yeah, exactly. You have to be mindful, but one of the reasons you're being employed by the competitors because that experience you built up. And so I think there is a difficult line to be drawn between what's you just applying the experience you built up and what's you sharing a trade secret, if you like, or something protected by copyright that you have special insight into. But this is the risk you take by kind of being in a high-tech industry, and I'm sure this kind of stuff goes back and forward in both directions. But obviously Intel, I think it's sensitive because Intel obviously trying to kind of re-establish its place in the chips market, which to some degree TSMC has stolen from them, and so I think there is that kind of greater sensitivity that these kind of employee moves can potentially help Intel more to the risk of TMC than perhaps kind of normal course of business.
We'll just talk about that competition in the AI chips market. We played the NVIDIA interview earlier, of course, Ed Ludlow speaking to Jensen Huang. How sceptical are you about NVIDIA's hold on that AI chips market if it's slipping?
I don't think it's slipping. I think what we're seeing is a natural evolution of the market that, that there's too much demand out there to be delivered by one supplier. Generally, customers don't want single source supply; they want some competitive tension. And the NVIDIA chip is a kind of multi-purpose, kind of very flexible product. Things like the TPU from Google, much more specific, kind of focused chips. So they're going to have different use cases. And so I think the natural evolution is going to be seeing more competition in the space. But I'm not worried that NVIDIA is losing its hold anytime soon.
Horses for courses, room for everyone.
Yeah,
all right, Matt Bloxham, thank you so much. Matt Bloxham of Bloomberg Intelligence with that analysis. Well, still ahead, we're going to break down the disruptions to expect from Thanksgiving travel and much more. Stay with us, this is Bloomberg.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Now a look at what's making headlines around the world. 2 National Guard troops on patrol just blocks from the White House were shot and critically wounded on Wednesday afternoon. FBI Director Kash Patel says the government is conducting a terrorism investigation into a suspect.
It is an ongoing investigation of terrorism. Make no mistake about it. There is confirmation now that the subject had a relationship in Afghanistan with partner forces. We are fully investigating that aspect of his background as well, to include any known associates that are either overseas or here in the United States of America.
The U.S. Attorney for D.C. said that the suspect, a 29-year-old Afghan national, drove across the country to carry out the attack. Elsewhere, Thanksgiving travel kicked off with some U.S. airports facing disruptions as ground stops at LaGuardia, Newark and JFK caused delays. Stay with us. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Tyler Kendall in Seoul, South Korea, and this is Bloomberg.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Happy Thanksgiving if you're celebrating. And we are, of course, looking forward to Black Friday. Retailers and shoppers alike gearing up for the event and the holiday shopping season more broadly. Bloomberg TV Markets correspondent Nora Melinda joins me now for more. Nora, we've got Black Friday coming up. It's the biggest or one of the biggest shopping days of the year. But, of course, this year we've got tariff pressures squeezing both sides of the checkout counter. What are the expectations heading into tomorrow?
Well, we did hear from the National Retail Federation. They're saying that they expect this to be a record year. At least that's the case for the 5-day stretch that we see in terms of shopping on Black Friday itself, all the way through Cyber Monday. And of course, we know that we do see a lot of activity online. So there should be strong demand this year. But of course, the backdrop of all of this is the economy. We've been talking about this K-shaped economy over and over again. Of course, that's the bifurcation that we're seeing on the upper end of the market versus the lower income consumer. So we are hearing from economists over at Wells Fargo. They're saying that they expect essentially the upper end of the consumer base to really be propelling a lot of the holiday sales this season. They expect a lot of the lower income consumer to be a bit critical of what and cautious of what they're spending their money on during this time period.
Well, in that sense, how much pressure are retailers under to deliver strong sales this season?
Well, they're under a lot of pressure right now. Of course, as you mentioned, we are seeing pressures from tariffs on both sides of the checkout counter. So if you think about the retailer during this time period, we've been hearing from earnings from Target. We heard from TJ Maxx in the previous weeks here. And a lot of them are just pointing toward the idea of discount being what sells. So it's really going to be about the strategy that we see from a lot of these companies. If these firms are able to really entice consumers during this time period, especially when you think about the fact that there's limited money that's being spent right now from a lot of households here. If you think about the lower income range, a lot of them starting to think about ways that they can finance this over the long term.
And does that mean buy now, pay later?
Yes, that's what we're hearing from a lot of people on the street. They're expecting to see an uptick in activity in terms of buy now, play later platforms. You're seeing a lot of consumers thinking about this as a way to really spread out their payments to make things more affordable here. But of course, if you think about that, that also just translates into more debt. And we are seeing a time period where you're still seeing credit card statements at record high levels. So it is really going to be interesting to see how much debt actually happens as we think about the wrap up of the holiday season.
And of course, Nora, you look at this from the market's perspective as well. Trading volume tends to broadly taper during holiday shortened weeks. So what are market strategists expecting in terms of Black Friday trading activity tomorrow?
While strategists are generally expecting to see limited liquidity in the market, as you mentioned, this is typical when we think about a holiday shortened week. But of course, we're also going to be thinking about geopolitical pressures right now. Of course, the Ukraine-Russia war still remains in focus. So I was talking to some strategists and analysts that are expecting potentially to see some activity in the energy sector as we look at the trading day tomorrow. But of course, we still should continue to see a bid into the retail space, which we know has not performed too well this year. We've been seeing a bit of a mixed picture in terms of the retail sector. But if you look at an index in the S&P 500 that captures this group, they're only up about less than 4%, much, of course, lower than what we saw in terms of the gains in the S&P 500 for that year-to-date time frame.
All right, Nora Melinda, wish you a happy Black Friday when we get there. I wonder if you'll be doing lots of shopping. Nora, good to see you. We thank you, Nora Melinda. Well, let's bring into the conversation Josh Ketter. He's the global CEO of Spreetail, an e-commerce accelerator that specializes in oversized products. Good to see you, Josh. Happy Thanksgiving. I know that you've got a lovely meal awaiting you, so appreciate you taking the time. We were just talking to Nora there about the K-shaped economy in the US, and I wonder how that's playing out from where you're sat and your read on the strength of the US consumer.
Yeah, it's a really interesting backdrop. You look at consumer, sentiment, and it's near all-time lows. And then you look at, in October, we had over 150,000 jobs eliminated, which is a near record in the last 20 years. And so between that and then tariffs, there's a lot of signs that the consumer should be shaky. However, we're actually seeing consumer continue to spend with their wallet. So there's almost a cognitive dissonance there. For us, as we think about, and Nora shared this a little bit, but we actually expect over $1 trillion, which is a record for the U.S. in this holiday season to be spent, which is about a 3 to 4% growth rate. And online, the sector where I play, closer to 7 to 10%. And I'm really seeing that in the data so far. I look at three things. One, I look at our company. We're up 20 to 30%. We don't represent the market entirely, though we do have do well over $1 billion online. And then the second thing I look at is what am I hearing from my channel partners? Amazon, Target, Walmart, et cetera. And they're generally happy with what they're seeing. They're seeing growth, but they're not seeing the amount of growth that they're expecting or hoping right now. And so the third thing I monitor is consumer search, which really generates intent. And I see the consumer searches in a lot of categories up over 10% right now. So the consumer's out there looking for deals, but it looks like they're holding off right now. And so we're going to see how that shows up as we go into Black Friday, Cyber Monday.
It's interesting you mentioned the online data. I was speaking to Daniel Wagner, the Resolve AI founder, earlier on. Have you seen much of a change in the way people are shopping because of AI?
Yeah, it's hard to say whether it's AI or it's just general consumer shift. But we expect about 18% of purchases online this holiday season to have either be AI enabled or assisted in some way, shape, or form. So it's definitely impacting. When I look at the search data, what I found to be unique is I do see some shift, and I see shift in a few ways. We see certainly consumers trading down, which you see show up in some of the earnings reports and some of the things we heard from Home Depot, TJ Maxx, and Walmart. And then the second thing I see is I see some category shift. In particular, I've noticed that the categories that are up right now for me, I'm seeing Christmas decor, particularly Christmas trees, up over 50% searches year over year the same time last year. Second thing that I see is it's a unique product, but hair perfume up over 1,400%, over 1 million searches a week. It's a new thing. I had to look it up myself, but apparently it's all the rave. People are giving it to themselves and to others. And then the third thing in terms of loser that I'm seeing is really the travel category. So luggage in particular, down double digits year over year, whether that's a hangover effect from some of the things we saw with the government shutdown and FAA and some travel uncertainty, or folks just bought their luggage last year. Hard to say, but I definitely see some shift in the data that I'm looking at.
Really interesting. You said that people are trading down, Josh. I'm sure the discounts aren't this generous this year. Is that right?
I think that's fair to say. I've seen two things on that front. First, you see similar deals in terms of percent off, right? For the big items, the doorbusters, the electronics, kind of the core items that most consumers think about. However, a lot of those prices have gone up due to tariffs. And so the bottom line discount is not what it is in terms of final price paid. And then the second thing that I'm seeing is it's really a more narrowly focused promotions. There's less promotional dollars to go around due to tariffs. A lot of the brands we work with have been heavily impacted by it. Retailers are being squeezed, and so they're really being more choosy with their promotional dollars. And last year we saw a lot of items on sale. This year we're seeing more focused, where they really think they can drive halo impact and traffic to their stores.
Well, if it's a bad Black Friday for retailers, does that mean it's a good Black January for shoppers?
Usually, if retailers carry over a lot of inventory, they got to move through it because they can only have so much room on the shelf. So we're certainly going to wait and find out. My prediction is it'll be a good Black Friday. Where that lands, we'll have to wait and see. But we'll know in the next week.
And Josh, you talked about the tariff impact. Are you seeing any impact of the US government shutdown, or do you expect to?
Yeah, I think the closest thing that I saw was the luggage category that I mentioned in terms of just travel interest. I've not seen too much beyond that. We've actually seen even through that process, sales were pretty steady across a lot of the categories and the channels, whether it's Amazon, Target, or Walmart. So the marketplace space that we play, we saw be pretty consistent over that time period.
And is there much difference from previous quarters when it comes to the bricks and mortar shopping versus online?
Yeah, so we expect, especially tomorrow for Black Friday, we'll have more consumers shopping online from home than physically in the stores. But that doesn't mean that there's not going to be a lot of people in stores. We expect about 80 million. So depending on what city you live in or where you're headed, there's going to definitely be congestion. Or if you're like me and you're going to be shopping from your couch on your computer, I think the majority of America will most likely be doing that from the data we see.
All right, well, I won't keep you from your Thanksgiving meal. Josh Ketter, Global CEO of Spreetail, we thank you so much for making time for us. Well, the markets have closed here in Europe, so let's get a check-in on how they fared. We have the Stock 600 up 0.1%, the FTSE 100 ending in the green, up just 2 basis points, but green's green, and we have the CAC 40 also just flat to the upside, the DAX in Frankfurt up 0.2%. Of course, it is Thanksgiving, so you've got equity and bond markets closed stateside, but US futures flat as a pancake on S&P E-minis. Nasdaq futures flat to the downside. And as we look to the bond space, a keen eye on the 10-year Treasury gilt yield, I should say, up 3 basis points to 4.45%. Of course, markets digesting the impact of that UK budget yesterday. Seems like a little bit of a reality check, perhaps, for the Chancellor and UK assets after the post-budget relief yesterday, or maybe it's just the Thanksgiving effect because it's low liquidity. But you're looking at the pound there at $1.32, so flat. Brent at $63 a barrel ahead of that OPEC Plus meeting this weekend, and must be said as investors await next steps on Ukraine. And then Bitcoin back above the $91,000 a token level, so continuing to win back ground after that more than month-long sell-off. Well, coming up, we're going to dive deeper into that UK budget and how it's impacting these markets. So stay with us. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives and laying the foundation for the future, from finance to defense, AI, entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Rulers in Hong Kong. I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
In case you missed it on Bloomberg Insight.
From a Bank of Korea's perspective, we don't believe that monetary policy alone can control the housing prices. But on the other hand, we are mindful that ample liquidity wouldn't throw the fire to the real estate market. Our official position is that you will maintain the easing monetary cycle, but the magnitude and timing of the cut or even the change of direction will depend on the new data.
Countries around the world are pulling away from U.S. assets. Do you see debasement happening?
No, actually. I think we have discussed this quite a lot. But actually, if you look at the actual capital flows in the last 6 months, I don't see that there's a lot of talk, but there's no real movement away from dollar.
Don't miss Bloomberg Insight live weekdays.
Why would you want to be chairman of the Fed? Are you sure you want that job?
If the president asks me to be Fed chair, then I'll do it. If I'm not Fed chair, don't be disappointed for me because I love the job that I have.
I was always clear that I would never play fast and loose with the public finances because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I face. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services.
So that was part of my exclusive interview with the UK Chancellor Rachel Reeves. And joining me now for more is our Bloomberg Markets Today co-editor, Morwenna Coliam. Morwenna, I've saved you to the end of the day because I wanted to let the market digest the budget properly. What's the verdict?
Well, to be honest, today it's been pretty subdued. Yeah. We've had a bit of pullback in gilts, which had been a bit exuberant at the end of yesterday with that extended fiscal headroom. Today, we've seen gilt yields rising slightly, but nothing too dramatic. I mean, the FTSE 100 has just closed flat, so I think the verdict there is perhaps a bit more uncertainty, waiting to see how some of these measures. It was a very, very complicated budget.
Yeah, so you don't think they've changed their mind because of the backloading of the fiscal consolidation?
It doesn't really seem like it. I think there's maybe be a bit more excitement if it wasn't so backloaded. That's perhaps keeping a lid on some of the gains that we saw yesterday, and that's why we've seen a bit of pullback today. And there's people are starting to look and say, well, hang on, what's she actually doing for growth? Will these inflation forecasts actually play out? Because we've seen this year inflation was much higher than the OBR said it was going to be, and so I think people are really starting to look at all of the individual measures, the impact it will have on businesses, the impact it will have on individuals, and when the Treasury will actually see the benefit of the measures that it's put into.
Well, yeah, you mentioned the impact on inflation. Has it changed BOE bets through the course of the day?
Yeah, they've been moving around a little bit. Actually, we saw them solidifying towards a sort of cut in December, and then also moving more through next year as well. But they pulled back a little bit later in the day. I think there is some uncertainty there, particularly with shorter end gilt yields actually not following those bets today, suggesting there's a little bit of uncertainty about whether the inflation picture will satisfy the central bank, because that has been one of the main focal points.
And you've been making mischief, Morwenna. You've had a poll on the Markets Today blog about whether Chancellor Reeves will still be Chancellor in a year's time.
Yes, well, we hosted an event in the office today, and so it was just a poll of the audience there, but people from a range of industries, particularly financial services, technology, legal professionals, and we asked them, do you think the Chancellor will still be here for the next budget, next autumn? And just over half of them did say yes. But it was a fairly tightly balanced survey. I think the more prominent result, if we asked them a few questions, was actually that the vast majority of people do think that the tax burden on people in the UK is too high. And, a resounding, over 90% of them said that she should have done more to rein back welfare spending.
And you've also been talking to CEOs about the budget. I mean, what's it doing to investment decisions? concerns?
Well, as we've talked about a lot this year, there's been so much uncertainty that ahead of the budget, that a lot of the time people have been waiting for the budget before making investment decisions. So we may see a bit of relief now, at least people know what's there. But because it is so complicated, I think there is going to be a bit of working through still to do there. We have had concerns again about the implication of a higher minimum wage, on costs. We already saw that coming through from last year's budget where they raised the minimum wage, as well as those employer national insurance contributions. This time, it's been a little bit more of a mixed picture. But the changes to the salary sacrifice that can be made for pensions also could impact employers' costs if they choose to, keep allowing employees to make those contributions to their own benefit package. That will cost them more money. So there is some concern and anxiety there, and of course that could be inflationary in itself.
Yeah, so you might see people earning more, but fewer people earning at all if we get more unemployment. Just talk us through the latest migration numbers, because we got some more data today. Actually, they look like a bit of relief for the Chancellor.
Yeah, quite a big, decrease in migration this year. This is a 70%, really quite striking. That presumably will provide a little bit of political relief there, because there's just been so much pressure from the sort of right-wing parties, particularly affecting the Conservatives, I think, with reform sort of breathing down their neck with concerns that they hadn't had a lid on migration. So from that perspective, it's obviously probably quite positive. Of course, the flip side of the coin is actually what the country relies on migration for. We are sometimes talking about people who actually pay taxes. We're talking about people who come and fill essential services jobs. And so it's not necessarily, one way or the other in terms of what that means, but certainly policies to reduce migration would seem to be working, or disincentives for people to stay in the UK on the other side might also be having some impact too.
Yeah, the economic side of a very political debate. Morwenna, good to see you. That's Morwenna Coney and Bloomberg Markets Today co-editor. We thank you. Well, coming up, going California sober is no longer taboo for many families on Turkey Day. That's next. This is Bloomberg.
issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Bloomberg brings you breaking news 24 hours a day, powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Some people travel to see the world. I travel to question the forces that shape entire nations. How is it possible? My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell. And dig up the peculiar and wonderful treasures that reveal what a country is made of.
Yeah, Lars.
Welcome back to Bloomberg Markets. I'm Lizzie Burden in London. Well, happy Thanksgiving if you're just joining us. Americans are replacing booze, apparently, this holiday season for something a little greener. And the plant is finding its way into everything from appetizers to after-dinner cousin walks. I have no idea what they are, so Bloomberg's Charles Gorovan is going to tell us.
More Americans are opting for a different kind of buzz this holiday season. As state laws around cannabis and other drugs have eased up, it's spread into everything, including the holiday dinner table.
It's more accepted. It is becoming more normalized.
Cannabis's newfound place at family functions speaks to how far the category has come. The move fits the lifestyle of people who describe themselves as California sober, abstaining from or barely touching alcohol, but open to substances like cannabis or psilocybin. Alcohol consumption has fallen to its lowest level in decades, according to a recent Gallup poll. Over half of respondents to a recent Bloomberg Intelligence survey said they now substitute cannabis for alcohol at least weekly. That might take the form of gummies, extracts, and even infused seltzers. Cannabis on Thanksgiving is a quiet tradition for some. The day before Thanksgiving is the second biggest sales day of the year for the U.S. legal cannabis industry, behind only April 20th, or 4/20, which is the de facto holiday for cannabis celebration. The industry was valued at just over $30 billion last year, according to industry estimates. The cannabis market tracker BDSA forecasts growth in the total market this year of 4% to $31.6 billion. It expects the market to reach $39.1 billion by 2029. For the big Thanksgiving meal, some chefs are getting experimental. Miguel Trinidad, a New York-based chef and founder of the cannabis dining club 99th Floor, is infusing THC into his Thanksgiving menu.
Our mission statement at 99th Floor is to destigmatize cannabis through the language of food. The way I do that is by micro-infusions. What I'm making today is going to be a rack of lamb.
Trinidad infuses lamb fat in clarified butter with cannabis flour before sealing and cooking the lamb sous vide, a slow water bath method that keeps the meat tender and evenly cooked. He then finishes it off in a scalding hot pan.
So here you have it, the infused rack of lamb. It's 5 milligrams of THC. Over the course of the time that I've been doing 99th Floor, things have changed. There's a lot of people that are coming out of the cannabis closet. It's something that's becoming normalized, and people are starting to understand and respect it more.
While a few dozen states have legalized cannabis, it's still considered a Schedule I drug, putting it in the same category as heroin and LSD. Uncertainty at the federal level looms large, limiting access to banking, investment, and broader legitimacy. In August, President Donald Trump said he was considering reclassifying cannabis as a less dangerous drug, but no announcement has followed. The divide between state legalization and federal prohibition remains one of the biggest hurdles for an industry still finding its footing. In the meantime, the cultural shift is making its way into some holiday dinners.
That was enlightening. Bloomberg's Charles Gorovan there. We thank you for that report. Well, before I let you go, let's get a check on these markets. We've got global stocks inching higher, close to erasing their November losses. This is thanks to their revived bets on Fed cuts, offsetting the AI bubble worries. Futures pointing lower stateside, however. The pound steady, oil flat, Bitcoin back above the 91K a token mark. Cautious optimism out there, I would say, this Thanksgiving. It's a pleasure to have been with you for the past 3 hours. We thank you for joining us this holiday. Happy Thanksgiving, everyone in the US. This is Bloomberg. Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on the close.
You've put a lot of emphasis on service, obviously, with the Green Apron Project. What does that look like in terms of staffing, though? I mean, you obviously have to hire more people, but more importantly, you have to retrain a lot of your existing staff as well. How, I guess, receptive have they been to that?
I got to give our partners a lot of credit. They really have embraced both the Back to Starbucks strategy and the Green Apron service standard. And so the fact that we've staffed the stores up and we've added more people, we've added more hours, it actually has set them up to be able to do their job, I think, with excellence.
You're trying to make the interiors a little bit more accommodating. You're also looking to sort of create more, I guess, lower cost models for building and operating some of these locations. Are those two in conflict with each other, those strategies?
No, actually, they can work really well together. You can have great design, you can have a great seat, you can have a great atmosphere, and then also be very cost conscious. And that's what we're doing here.
Don't miss the close live every weekday.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day, now at our new time. Only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Welcome back to The Deal. I'm Jason Kelly.
I'm Alex Rodriguez.
All right, today we've got a banger of an episode. Robin Arzon, she is not only a top Peloton instructor, she's a top executive at the company, plus she's building this whole empire outside of Peloton.
Jason, she's a force of nature. I mean, she went from being a corporate litigator to being one of the top influencers in the country, and I'm really interested to know how she's transferred some of those skills from being a corporate litigator to being one of the most influential people in sports.
Absolutely. She's talking about investing in teams. There is nothing she can't do, and she is full of energy. Coming up, Robin Arzon. Robin Arzon, we are so happy to see you. Welcome to The Deal. I mean, I've known you a little bit. I feel like I know you really well, which is part of the reason that we're going to get into this amazing brand you built and this connection you have with people. But I have to say, Alex, we've been talking about the fact our phones have been blowing up about the fact that we're sitting here with you, right?
Yes. Well, first of all, no one's more excited than Jason. and as a result, I'm also very excited because my phone's been blowing up. My girlfriend, Jack, my daughters who love Peloton, but they love you. But like, I thought we were interviewing like Taylor Swift today. I mean, it's really exciting.
Yeah.
But you're also like a corporate lawyer. First of all, I do want to know, like, how'd you go from being a lawyer to where you are now?
Well, I was a corporate litigator, and my dad was a lawyer growing up. And I used to sit on his blue books. He was also a law professor, a real estate law professor in Philadelphia. He taught at Temple, went to and taught at Temple. And so I kind of grew up with the law. When I was 10 years old, you asked me, back to school, what am I going to be? It was a lawyer. So I did practice law for 8 years. I was a corporate litigator, and I was underwhelmed. If you asked me if I hated it, I didn't hate it. It was a malaise that I think is pretty pervasive, frankly, in a lot of industries, but especially law. And I fell in love with running. So I started running when I was in law school. I really started running to run through a really traumatic incident that happened when I was in college. And I wrote about that in my first book, Shut Up and Run. And that actually used to be my mantra. It was like, stop the chatter, let's shut it up. Let's lace up and run. And I started doing marathons and ultra marathons while I was still practicing law. And I had this moment where I thought, I can't count down to only like 20 minutes in Central Park that were my release throughout the week. And I had such admiration for athletes who made this their lives. And I thought, how can I pay my rent with something that I love? I quit law 2 weeks before the London Olympic Games. And with a cracked iPhone, I went and slept on my friend's couch and just, quote, reported from the games. And so this is kind of when influencer marketing was like just becoming a thing. And I kind of hit lightning in a bottle, like at that time, really recording and documenting my athletic experience as a person who's not a professional athlete.
I have a quick follow-up on that because you worked at one of the most respected law firms. So explain to me, like, when is the moment that you look in the mirror and say, I'm at a great law firm, I have a great career, great trajectory, young lawyer, doing well, I want to go do something else?
Yeah.
'Cause most people would think that's crazy.
Well, especially like, I don't know, I come from a refugee immigrant family. My dad, grew up in the Bronx and was born in Puerto Rico. My mom is a Cuban refugee. And to think that I would leave something that was so secure to do question mark, question mark, question. I didn't even know. I was like building the rocket ship as it was leaving the station. The fact that they supported me was amazing. Not supported me financially, but emotionally, right? I told my mom and my dad, you are never going to have to pay a dime. I'm going to figure this out myself. And I lived well below my means when I was a lawyer, and I just saved. And it was actually at a crossroads of buying an apartment or leaving law. It was like, am I going to be all in? Or am I going to give myself like financial freedom? And thank goodness that I did, because I was able to take really big bets on myself that if I were tethered to, a mortgage, trying to aspire to, live like the Joneses in New York City, like that's a pretty high bar.
Do you remember the moment you made the decision when you're like, this is happening?
I think it's iterative, right? That there are lots of different inflection points. So it was probably a 2-year slow burn where I was like, I really love this other thing. This thing is just okay. And I would come home. I was still working like 80-hour weeks. I still had billable hour requirements and partners that I really respected, actually, and learned a lot from. But it was this malaise that I mentioned. So I remember coming home one night from the office, Seamless, it was called Seamless Web at the time, was like my best friend, ordering whatever on the client's time, but like still working right through dinner. And I got home at 11:19, and I opened up the notes app on my phone, and I just made a list of the things that I thought I was good at and that I wanted to be able to showcase in the world. There was no wrong answer. And it was literally be able to show my tattoos, be able to use my oral advocacy skills on a wider scale, be able to, talk about sports as somebody who was not an athlete historically. And, literally it was like be able to run, be able to sweat. And it's what my job is now at Peloton and beyond, to the letter.
Yeah.
You could call it business planning, manifestation, mumbo jumbo. It worked because I was able to clarify with specificity how I wanted to feel in this new life. And then it was like, okay, I got to marry skill set with opportunity. And now I at least know what to look for. And that was probably 6 months before I quit. And then 2 weeks before the London Olympic Games, I just pulled off the Band-Aid. And I was like, I just need to be around these athletes. I need to be around the people who are talking about sport and living it. And I just wanted to be in their orbit, like breathe the same air. Not obviously as a fan, but as somebody who could like engage in conversation with these people. And that was the objective. And I remember going to one of the track practices and talking to the USATF PR person. And like, I was like, I just want to ask Alison Felix one question. And, now, we're, she's my friend.
She's your girl.
Yeah. So it's just amazing how, you peel the layers of the onion and like there's always more there.
I think about being a Yankee for a long time and playing baseball for over 25 years. Some of the virtues and characteristics that I've taken from sports to bring to the boardroom. I'm curious, talk about lawyer. You have to be buttoned up. You can't show your tattoos. You can't really show any emotion, opposite of what you're doing now. But was there anything you took that you learned in law that's helped you be such a great communicator and a connector to people?
For sure, as a storyteller, I think if you can make a legal brief interesting, you can do a lot with more interesting topics. But the billable hours model that I lifted from my law career directly impacted my ability to see movement and my ideas around storytelling within the wellness umbrella as a business. Because during the beginning of these influencer marketing days, it was a lot of gifted products and like PR packages, which are still obviously relevant now. But back then, it wasn't really you pay an influencer for a campaign. It was like, I'm going to give you shoes, and you're just going to be so grateful that I gave you shoes that you're not really going to know the value, the marketing dollars of what you just gave me. And obviously, we're so deeply grateful to receive product. I still am, but that's not going to pay my rent. Like my landlord was not going to be like, thanks for these Nikes, you know? And so I adopted a billable hours model, and I just said, no, you can't pick my brain. I'm a consultant. And some brands said no, but enough said yes. And then I was being booked not only as talent, but also as a consultant for these marketing agencies.
Right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
How do you discover Peloton? So 2012, you're talking about. Peloton is what?
Peloton was probably its like co-founders plus a few initial leadership folks. They hadn't opened the studio yet. And I read about Peloton in an article, and then I reached out to the company cold.
Cold email.
Cold email. Yeah. So during this time, I was teaching cycling at a local spin studio. I was working on my first book, and I was about to publish my first book when I started at Peloton. I was one of the first instructors hired, and we had our original studio on 23rd Street.
So, Robin, one of the great advantages to being a lawyer is being a supreme great writer like this guy, Jason. What did that email say?
Well, I wanted to sell the vision, the passion, and a little bit of the skill set. And I was a newer spin instructor, right? So I couldn't say, like, I've been in this industry X amount of years, but I told them that I saw how disruptive this technology could be, and I wanted to light fires. Like, I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses. It's got to light fires.
Yeah.
And they kind of believed the passion of the email, and then it was followed up 2 days later with an audition. And then you're seeing, like, can you walk the walk?
Yeah.
And thankfully they accepted.
And so how do you prepare for an audition? Like, you're teaching classes, so you know what you're doing, but I assume, you have to get used to it. As someone who has taken a lot of Peloton classes, you're speaking to a camera. I mean, you're speaking to me, but I'm in my basement. Like, how do you lock in to communicate like that? How do you develop that skill?
Well, for me, it definitely started as a lawyer. Like, I used to walk around my apartment and pretend that I was speaking to, really it was less courtroom stuff, a lot of deposition stuff. And I would practice that Q&A and kind of the mental gymnastics of like, if they say this, I'm going to say this. And obviously when you're presenting a class or a speech or something, it's different. It's not usually like a volley back and forth. I almost visualize it like I'm writing it on a board. And those are the things that end up coming into my notes.
Really?
Yeah.
Like when you're on the bike?
No, before.
Oh,
so I'm always prepping my class plan and my playlist beforehand.
Right.
And then I'm usually listening to the playlist as I'm going into the studio.
Okay.
And the things that I want to say in class are kind of embedded. Like I visually see it.
Wow.
Yeah. And sometimes it's from my self-talk, and then sometimes it's imagining Jason, across from, who is that red light?
Yeah.
There's enough of a feedback loop with our members, via social media, or sometimes obviously if they're in the studio, that I kind of have a sense of what the conversation is around certain types of movement, certain types of classes.
And Robin, when you get off, obviously in baseball, when you have a good game, the scoreboard will tell you if you have a good game or not, right? So it's very, very easy. When you get off that bike, do you know, was this a 10? Was it a 9? Was it a 5? Do you know if you had a great class and if you hit all your points?
Energy is currency, right? Like there's just a moment where whether you hit it and whether you were in a flow state, right? Like if I'm in a flow state in most of my classes. When I'm not, it's just life, it's distraction, it's my kid, it's whatever, it's life. And my job is to refocus myself, and I have tools and tactics to do that like any athlete would. But that is the interesting thing, is that we're maybe more like a TV network.
Yeah.
And that I'll get like the numbers and things like that with my producers later. And I'll be like, oh, this class was gangbusters. And I'm like, really? That 20-minute Tabata class was like this, right? But I really, and then this is what I say to the other instructors, like, we have the responsibility to walk into every class like it is an audition to be there. And if you do not have the appetite to treat every class like it's an audition to be there, then you don't belong on the team anymore.
Wow.
And that's truly the standard that I try to hold to myself. I'm not saying every class is a 10 out of 10, but I do approach the work ethic with that respect.
Well, and it's interesting too, because, pretty quickly you get to a point, because, you and I first met when I was anchoring the Bloomberg Business Week show. We came out to a homecoming event. Homecoming, is that?
Yeah, well, it was homecoming.
Oh, okay, yeah, back in the day.
It's evolved since then.
Right,
yeah.
back in the day. And at that point, this is 10 years ago, probably 8-10 years ago, you were already in a position where you were the lead instructor. So how does it get to the point where you're not just an instructor, but, John Foley, co-founder and then CEO, gives you the responsibility to essentially, to your point, sort of run the network in terms of the talent side?
Yeah, well, our chief content officer has the C-level role of quote, running the network, and I report to them. Our current CCO is Jen Cotter, and I've worked with her for a number of years. But when I was promoted, it was, pretty early days in Peloton. I do think that my law degree helped.
Yeah.
I was able to uniquely sit in meetings and kind of understand business KPIs and also understand the talent needs. Sometimes I'm wearing talent hats. Sometimes I'm wearing an executive hat.
Yeah.
And it could be one meeting. I might swap those hats many, many times. But it's, championing the instructor's points of view, because Peloton didn't go into the talent business, but it's now in the talent business.
Oh, yeah.
But that wasn't initially, that perspective wasn't always appreciated,
right.
Especially when group fitness was a lot more common back in those days with other competitors. It was like, yeah, I'm here to teach a cycling class, but I'm a business.
Right.
And it took some iterating on that concept.
So, Robin, when you think about wearing different hats, when you look at talent, what are the first 2 or 3 things you look? Obviously, when I look at a baseball player, I'm looking for speed, I'm looking for a great arm, I'm looking for a great body. Someone's going to age well. What are the things that you look for in a great talent?
I think at this point we're really proud of the diversity and the breadth that we have with our instructor team, and we scale, obviously, right? So we don't need 5 of the same exact type of instructor or musicality. I want a point of view, right? So there is a physicality, obviously, to what we do. You have to be an athlete. Clearly, you have to have certifications. You need to be a subject matter expert. But that's dime a dozen. I want somebody who has a point of view that can translate that to after thousands of hours of doing it. Because somebody can audition and BS something for 20 minutes.
Yeah.
You can't really do that when you're sprinting, when you're on your, 1,000th class.
Yeah.
There is just something that is very raw and real. And that is where you get to the kernel of somebody's point of view.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day, now at our new time. Only on Bloomberg.
Because you also, I mean, what's also clear, and, you know, you have an incredible following, and we want to talk about sort of how you build your brand, but like, as you look at, you know, who's resonating, numbers don't lie, you know, and like you see the views and you also see the, you know, to use a marketing term, you know, those classes or those instructors who have a long tail. So how do you think about, you know, growing your own community, but also sort of growing these complementary communities as you, again, create that right mix of instructors?
Right. I mean, we've always been a members first organization. So we want to meet our members where they are in their various life stages, right? And so from a content perspective, we're considering, you know, what are people doing? How are they moving? And how can we meet them there? Or even widen the aperture of like what it means to have wellness offerings, including non-class content. So we introduced nutrition content with some of our instructors. I'm coming up with a cookbook next year based on my plant-based philosophy and point of view on eating and those recipes. So it's important to meet members where they are, but also honor the life stage and the evolution. Like, I am not the same person that I was when, 12, 13 years ago when I joined the company. And so it included creating prenatal content. It's obviously entering the longevity conversation with something that is purposeful and having content that pairs with it, but also having a roster. Like, we do want younger instructors. Yeah, we want instructors that are going to meet growing demos as well as honoring our core. And then we do look at demos for certain instructors, and it's where's their crossover, where's their expansion opportunity, where's their business as usual, where we just know it's working and we don't want to mix the drinks too much. It's like some folks kind of have their core, and then some folks are more expansive to demos that we do want to explore.
It is funny, I mean, to think about, and Carolyn Tish-Blodgett, who you worked with, obviously, back in the day, she was on the show as well, and, obviously was a key voice in sort of a lot of the branding and sort of growing you guys as brands. One of the deals that you did early on is Adidas. You established a relationship. How does that come about? I mean, clearly you had your eye on the prize of, like, building your own brand. Tell us about Adidas.
So I started to understand that there were marketing dollars in these deals from initially working on the agency side, and Nike Women was my client. So I was doing their social media, and I started to get a little bit of visibility into like how these campaigns are kind of run and funded.
So you were consulting?
I was consulting. I was on the agency side with a agency called Team Epiphany, and Nike Women was their client. And this was literally 3 weeks after the London Olympic Games. It was like my first job out of law. I was like, heck yeah, I want to do this.
Yeah.
And then I realized 6 months later, I want to be the talent that they're booking. And it was kind of the Wild West too. Like, where marketing dollars was like, maybe we don't need $1 million commercial. We're going to splice it up this other way. That became my first foray into even the terminology. Like, I didn't know that world at all. And then in the early days of joining Peloton, my first book came out, and that book got me on the radar of an agent. So I joined WME. I was with WME for a number of years. I'm now more recently with UTA. But then I was like, I have an agent. This is a business. Like this, there are ways for me to structure these conversations, and of course lean on folks who know this stuff. And they were used to endorsement deals with the A-Rods of the world. And I was one of the first brand sponsored deals with Adidas for somebody who's not a professional athlete.
Wow.
And it was pretty purely based on like brand recognition of the regular person, and social media KPIs.
Yeah.
And then, of course, the services that were built in there, it was, event appearances and photo shoots. And I remember I had done some modeling before my Adidas deal, but I remember being on set for my very first huge, massive Adidas campaign. And they had like a body double for me. And they were like asking me is this okay? Would you wear this? And I'm like, oh, like my opinion is relevant here?
Yeah.
And then I realized, right, I'm representing myself as well as the brand in the marketplace. And that was when I was like, that synergy has to exist. And whenever there isn't that synergy, then I know that it's probably not the right place for me.
Yeah.
So then the light goes up, then you go, oh my gosh, so I'm a brand.
Yeah.
I also represent Peloton, and Adidas thinks I'm pretty cool. How'd you think about scaling that opportunity?
Well, I was with Adidas for, I think, almost 5 years. And then I started thinking, like, what do I already use and consume and experience that makes sense? I think I've worked with over 40 brands in, like, the 12 years since I've had these deals. And now I'm definitely at the place where it's like, I want to go deeper with fewer brands. Back then, I think it was very common for, like, oh, I'm just going to post this one social media thing. And it's a lot of, like, a lot of little like smaller stuff.
Sort of stuff. Yeah.
And that was very much part of the game back then, but I think it's now more curated for sure, at least from my perspective. It's much more curated. And I don't really do social media only deals ever anymore. It's usually a hybrid ownership stake or some kind of advisory thing that is more than just, a brand deal. It really opened my eyes to different categories, different verticals. So it wasn't just things that were adjacent to movement and athletics. It was, for example, when I had my first child, it was a toy line. And then that was, a royalty deal that it was a toy line, Bebe Fuerte, that was based on IP from my children's books that were, in Walmarts all across the country. These are things I could not even have imagined.
Yeah.
But by life stage and the opportunities met.
Yeah.
So as you're speaking, I'm thinking about the NBA and the WNBA. And I'm involved with the Minnesota Timberwolves and the Lynx, and I'm very passionate about this. And my background's baseball, so I come from a little bit different world, but some things cross over. And what I'm thinking about is the culture you've created inside the four walls. I'm thinking to myself as you're speaking, how do we create that culture and energy and light the fire inside the four walls at Target Center where both teams play?
Mm-hmm.
I know you're a consultant, but if you want to give me some free advice or I can pay you later, what kind of things will you be thinking about? When you have 20,000 people, there's a lot of heat in the room, teams are doing well. How would you think about it, high level?
I mean, I think it's storytelling and ritual. I think that's what's
ritual.
Ritual. I think that's what's so cool about fandom.
What do you mean by that?
So there's the story that we all understand, and is that like what the media is capturing, conversations like this. I think especially with social media, it's like user-generated content of the fandom. That is what I think is so interesting about seeing what members post. Because there's like things that you can't plan, like curiosities around yellow, for example. Like yellow became a thing because yellow's kind of my power color, and I would naturally wear that for tough classes, like Tabata classes, interval sprints, race day. And now that's a thing. Like people wear yellow for these classes, and it is associated, and now it's going to be incorporated into some products that I have coming out, athletic products, because there's a thing about that.
Right.
So that's what I mean about what's the story and then what's the ritual. Mm-hmm. And can you kind of pair those things, from a product perspective or even a storytelling perspective, before the games, after the games.
Yeah.
And then, of course, there's like the adjacent things like fashion and stuff where there's just little hooks.
Yeah.
That you kind of have to marry like the details with the larger story. Mm-hmm. And it's finding the right people who can like notice the details, like, oh, fans are kind of doing this weird thing. Mm-hmm. Whether they spot it in the venue or on social media, and then you make it a thing. And then that becomes a snowball.
Connecting the dots, connect the dots.
The ritual point is really interesting too, because the ritual of class, I mean, I've had my Peloton for 8 years. It is ritual based. It is like, it's a routine in the same way that like showing up to a game or watching a game, being connected. I mean, better than anyone the rituals of baseball.
Oh, yeah. And there's superstition. Like, fans wear the same colors if you win. If your favorite player, Anthony Edwards, scores 40, they'll post about it and, like, do something weird about it, or they drank a certain thing.
Mm-hmm.
Right.
And the idea is, how do we just connect those dots?
Yeah.
And spotting what's already naturally happening, and then communicating what the players and what the teams are doing, because people just love understanding, like, what's the morning routine, what's the ritual, what do you do pre-show, like, and unpacking that and like telling that story in a way that is appropriate for the brand. So I'm really curious, Alex, as how do you choose the teams? You entered sports teams ownership groups that are not baseball.
Mm-hmm.
So how did you do that? Because I just recently invested in a football club, a women's football club in Europe. I can't announce the team name yet, but I was a little trepidatious because I'm not like a soccer expert, but I'm so passionate, and this opportunity came across my desk, and it's like, how do you toe that line of like, I can offer something here? Because for me, it's not just the dollars. Yeah. It's like, I also want to be able to sit in seats like this and be like, I believe in this.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
You missed it on Bloomberg Open Interest. Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Robin, that's a great question. So for me, Magic Johnson was kind of like my North Star. He was one of my heroes, someone that I just loved so much, going back to the Laker days at Showtime with Pat Riley. And it's interesting, he went from the hardwood to the boardroom. He also went from the court to baseball ownership with the Dodgers. And I've gone from baseball to basketball. And when Magic and I talk, we often are advising each other, him on the Timberwolves and the Lynx, and me for the Dodgers. But in a weird way, I think 60% you have a crossover. You still want great character, well-conditioned athletes, create a great culture, create heat inside those 4 walls we spoke about. And I'm a firm believer of just go out and hire the best people in the world and get the hell out of the way.
Yep.
And I think not everyone does that. And because I don't know, I'm not an expert in basketball, I actually think that works in my favor. I don't know if I'll be such a great baseball owner, to be honest with you, because I maybe know too much and I will probably get more frustrated. But with basketball, I'm in all of all our players, the men and the women. And they're incredible and they're young. And I get to talk to them about all the mistakes that I've made, and hopefully they can avoid those mistakes. And I have a great partner, Mark Laurie. So I actually love it. And I love learning. I love planting seeds. Every day I study 5 or 6 hours every day about basketball, whether I'm asking Jason questions or I'm reading or I'm listening to podcasts. So I've enjoyed it, and I wish you the best of luck. And they're very lucky to have you because you bring something that I wish we had from a partner's point of view, because you see the world from a different lens than all of us do. So yellow's the color.
Well, I appreciate that. I'm inspired. I'm really inspired.
And so help us understand, and I know Alex has, sort of done this same balancing act. You're on a team, you work for a company, you run a team, and yet you're a brand in your own right. You're doing your own deals. How do you balance that? How does it work? How do you approach it? It seems like this was the plan from the beginning, but how has it evolved?
So there used to be one-off conversations. It was just like, hey, I'm publishing a book next week. Oh, okay, great.
Yeah.
Now there's an internal process, right? We have 50 plus instructors globally, and there are lots of conversations that are happening within the walls of Peloton and outside of it, but they have to run in parallel tracks. Whether the P on my chest is outside my clothing or underneath my clothing, it's always there. Just like the players are always, part of the organization.
Still a Yankee.
You're part of that organization, and so there are things that are wellness adjacent that are obviously we talk about that with much more specificity. And there's stuff, like my children's book or things that kind of were outside of the scope that I would never do within the Peloton walls anyway. And so usually that's a green light. But there are conversations for sure. And it's with our leadership team, and obviously our marketing team, has points of view on it. But our CCO is really integral to that conversation. And now we're at the place where our agents and our managers and our external teams have a relationship with the stakeholders at Peloton.
Right.
So it's really like one big conversation.
So following up right on that, I mean, kind of wearing two hats again, right? Like you're the team player for Peloton, one of the great leaders, and you're also running your own kind of family office.
Yeah.
So when you think about your family office, how does your team look, and how do you kind of vet deals, and where do you see yourself in 3 to 5 years?
I mean, hiring the team is the most crucial thing in the world, especially because I'm really at the juncture where I need to understand what scales beyond my physical presence. And now it's thinking of, for example, the short answer is I work with my husband, who serves as my manager, and he's also my business partner. He has a history in business, so he's a subject matter expert in a lot of this stuff. And then the deal details, we obviously lean on, my agent and our legal team. We have a PR team, so there's lots of spokes to the wheel. But the core of the strategy is my internal team, right? So we have, a chief strategy officer, and it's important that we all align, and they keep me kind of. I know I'm very, I think one of my superpowers is being incredibly decisive. So I know whether I want to do something, but 90% of the time the answer is no. And the no's usually come from leaning on, business advice from people who actually understand trends and dollars, right? So that's what we consider. 3 to 5 years. I want to continue to build in the lifestyle space. So whether that's food or beauty or fashion, I personally am still going to be continuing to compete and get strong. I want to continue to be strong and be an athlete and model that for women and girls, especially. So on a personal level, I will continue to be moving my body, but on a professional level, I want to widen the aperture of how I'm seen, right? So it's not just Robin who teaches Peloton classes. I also am, on the speaker circuit. I also, I published 5 books, and now I want to get into beauty and fashion as well.
Right. And so it feels like, you look at IP very closely in the deals that you're doing. And I mean, it's interesting, we started off talking about your history as a lawyer. You're still a lawyer. I mean, it feels like that still plays a really big part in sort of how you do your deal making. Is that fair?
Every day.
Yeah.
Yeah. There's a strategy. I think as a lawyer, there are puzzle pieces that you're always trying to fit. And the overarching thing is at least as a litigator, I think even as a corporate attorney, you're understanding narrative.
Yeah.
And that was when I understood narrative a little bit more specifically.
Yeah.
And narrative is a tool. And obviously now as a creator on social media, that's deeply relevant. But in creating Swagger Society with my husband, I initially co-founded Swagger Society in the Web3 days as a membership club. And then we were like, okay, well, clearly the landscape is changing there. And it migrated into a media company. So under the Swagger Society umbrella, we have a wholly owned podcast that will launch, a newsletter, and a production company.
Yeah.
And these are conversations that were like seeds. And I was like, oh, let's pull on that thread a little bit. Let's look at titans in the industry like Reese and Eva and Shonda and just learn from them. And they are my...
Reese Witherspoon, Eva Longoria, Shonda Rhimes. Okay.
Yes.
Just name checking.
You know, and they are obviously, I mean, iconic.
Yeah.
And I'm just learning and watching and understanding and then trying to see like, okay, if I took a literal, not even a page, if I just took a paragraph out of that book, what would it look like for me and what would infuse joy? And that is a threshold that I'm not willing to sacrifice on. Like if I'm not filled with joy, and I get joy from hard work, by the way, so it's not like it's all walking through lily pads. But if there's not joy in it for me, it's just a no.
Right.
In case you missed it, on the close.
You put a lot of emphasis on service, obviously, with the Green Apron Project. What does that look like in terms of staffing, though? I mean, you obviously have to hire more people, but more importantly, you have to retrain a lot of your existing staff as well. How, I guess, receptive have they been to that?
I got to give our partners a lot of credit. They really have embraced both the Back to Starbucks strategy and the Green Apron service standard. And so the fact that we've staffed the stores up and we've added more people, we've added more hours, it actually has set them up to be able to do their job, I think, with excellence.
You're trying to make the interiors a little bit more accommodating. You're also looking to sort of create more, I guess, lower cost models for building and operating some of these locations. Are those two in conflict with each other, those strategies?
No, actually, they can work really well together. You can have great design, you can have a great seat, you can have a great atmosphere, and then also be very cost conscious. And that's what we're doing here.
Don't miss The Close live every weekday.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Rulers in Hong Kong. I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Tyler Kendall in Seoul, South Korea, and this is Bloomberg.
I really like how you articulated earlier 90% no and being super disciplined about what you say yes to. I call it, I used to go wide and shallow. I know I go narrow and deep, and it's been a lot more productive for me. When it comes to deal flow, does your team go out and try to find deal flow? Or if you like a company that identifies to your soul, do you kind of cold call and say, hey, can we take a meeting? Or are you just inbounding and whatever comes in, you get the best of what's coming in?
It's both. I think now I'm at the point where I could be I want to be more strategic. Like I want to say like, I love this product or I love this vertical and let's go for it. Mm-hmm. That involves, strategic conversations like who do we know at this place and this place? What are the top 3? What would be the dream collab or licensing deal or whatever it is? Or what would the deal look like, right? Mm-hmm. So like, I think before I was so stuck in how many social posts, how many appearances, how many photo shoots? And now it's like, no, let's play the long game. Like, are we talking about, is this a board seat? Is that, you know what I mean? Like, these are different conversations now.
Yeah.
And that's exciting, but it's also really daunting.
Right.
Because it's like, it could be anything.
Yeah.
And it's not just about a liquid dollar amount. It's different now.
Yeah. We'd be remiss if we didn't talk a little bit about Peloton. Speaking of narratives, if we were sitting here in front of our respective Bloomberg terminals, we'd look and we'd be like, whoa, that was a big high. And now it is not where it was. It has been quite a journey, to say the least. You're still there. Like, you have stuck through it. Why?
Oh, gosh. I have always believed, I still believe. I think that I have the unique privilege of seeing, and I'm not exaggerating, millions of comments over the years of people whose lives are changed. And if you don't know, you don't know. And it's our job to widen the group of people who know how special the fitness experience is, the wellness experience is. And when that light bulb goes off and somebody understands the quality of fitness content that they have at their fingertips, there is nothing, it is unparalleled. And, we continue building, we continue iterating. And I'm willing to ride the wave because at my core, I mentioned that in recruiting instructors, they have to have a point of view. My point of view is that I will light fires globally in the tens of millions, and Peloton will be a key to doing that because we are going to move the needle and make people healthier. I want to add years to people's lives, but I also want to add life to their years, and we're doing that at Peloton every day to millions of folks.
I mean, you're a leader inside the company. How do you sort of galvanize the troops? Because I have to think, in the four walls of your company, people are looking to you for belief, for that sort of thing. And you laid out a very good case for what it's doing. How hard has it been at times, though, to be like, listen, guys, we're doing this. Like, it's happening. Like, I know we had this high, but now we're, we're grinding it out. We're doing the work. How do you keep people motivated? I mean, we're all in a position where we have to motivate people who work with us.
Right. I mean, leaders do that every day, right? It's interesting to be on a team where there's lots of public figures that you're dealing with, right?
Yeah.
And so, they have their ear to the ground too, right? Like, it's not just what the street is saying. It's like, what are you seeing in your inbox and your comments on social media? What conversations are you having in the marketplace? I think, I don't know. I don't ride really high highs or let the low lows. Like, I just have to have a really even keeled mentality. And it does come back to that, like, was the class I just filmed my audition tape? Like, what if it all boiled down to that one class? Would I be proud of it? And I think keeping it that granular and keeping myself that, like, checked, and then communicating that obviously to the team. And it's interesting because I have like executive function, but I'm also, the rules apply to me. I'm still doing the same job they're doing. So I think that there's a credibility there because it's like, we're just truly in this together. And we have successfully created camaraderie in a bubble amongst our team globally that it's like, I will rep my people and they will rep me. And that's how I think the team really respects that.
I feel like you need to bring her in for a motivational speech.
I was thinking the same
You're
thing.
repping me, I'm repping you. I feel that way about the deal. I mean, we should say that
We're
to
in
each
it.
other.
We're in it.
Yeah, exactly. I'm repping you, you're repping me, bro. So, Alex talked about the next 3 to 5 years. I guess what I would love to ask is like the right now, and sort of as you assess and look around, you're clearly at, maybe you've had multiple catalytic points in your career. This feels like, it feels like you are in a mode where you are leveling up. You're talking about ownership. You're talking about, all these, kind of, I think Alex would agree, sort of next level athlete things. Does it feel like that to you? Does it feel like this is another one of those like leaps forward?
It definitely does. Strategically and financially, I understand that. Like, I'm having conversations that I would have only dreamed about, but also I have such a day one mentality that it's hard for me to sometimes like make those things match, right? Yeah. Like, it's like, have you made it? What's your most, no, of course I haven't made it. Like, none of us have. If you really think about it, like, we're out here like grinding, and that I love that. So I'm having different conversations now, and the stakes have changed, especially when my own money is involved. Yeah. But it also, I'm a student. And so it's just finding the places where I am confident and leaning into that, and then admitting when I don't know something, and that being okay too. Yeah. And sometimes I'm in these conversations where I am known, but around the table, I'm like, what are they talking about? Like, I don't need this deal. Like, these financial terms are like beyond me. And I'm okay asking questions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
I think as I listen to you, I'm so inspired, Robin, because I think the three of us, well, we've done a few things in our lives. I think all of us feel like we're in the super early innings of our career.
Yeah.
I mean, many days I feel like I'm in the bottom of the first inning in business, especially because, you know, I was busy playing baseball for a long time, and now I'm in my pivot, right, which is business. And you're the same thing. And, you know, Jason's made some wild pivots too. I think it's exciting. I think having that thirst and curiosity is the one common theme. I mean, we're all very curious. And some of the great mentors that I've had, they all have that same characteristics. They want to ask questions, and they listen more than they talk, you know?
Well, and I am sitting here, you know, thinking about where you are in this stage, and I'll ask a question. You know, this is a guy, you know, my partner here, who, you know, was a standout athlete from an early age and was getting a lot of attention, you know, goes to the major leagues right out of high school. You had a different journey. And so basically people knew who he was. He's on the cover of Sports Illustrated with Derek Jeter. You know, like we all know that story. For you, it was a very different journey. What was it like, and what is it like where you can't walk down the street without people? I mean, people must shout at you across the street. Like, what is that like for someone who, you know, went to NYU, you know, corporate litigator with Paul Hastings, like you're doing your thing. It's a different world you live in now. What does that feel like?
I mean, it's an honor. It is an honor. Like, that's beyond. And usually the interactions, yeah, it'll be like, oh, Robin, whatever, you know, at the US Open, it was like literally, it's so charming and exciting still when somebody's like, oh, hey, I know you, I just took your whatever class.
Yeah.
But what's overwhelming sometimes are the moments where I have a few more minutes or I'm stopped and it's like this intense outpouring of like,
you changed my life.
The breast cancer, the divorces, and some, it's not always like a sob story, but they're intense. And I'm in somebody's living room and like over hundreds of thousands of classes, like early mornings, late nights, like there's a parasocial relationship that is super legit.
That's very intimate.
Very. And I am being myself, right? Yeah. So I have a class plan, I have notes, but I'm me. And every instructor is that, you know, that's who they are, truly. And that's, I think, the special sauce. And that's why it's replicable over thousands of classes, because it's not an act and it's not a script. Yeah. And we're not wearing in-ears of somebody saying, hey, next up, say da-da-da-da. We're not scripted. I understand just different production environments, and I have such deep respect for the authenticity of Peloton.
I mean, I do think that it's easy to take for granted how intimate an interaction it really is, and how and we talked with Carolyn Tisch-Bladger when she was here about, you know, it's almost like a Rorschach test of like, all right, who's your instructor? You know, like when you're in, you know, like, and it says something about sort of your personality, or even like the mood that you're in on any given day.
And we all do that. It's like, what mood am I in today?
Like,
and that's.
I mean, I will tell you, I only take your classes when I'm like ready to get my ass kicked. So
run through a wall.
When I need it, this would be a good one for you.
We have plenty of that.
Yeah, there's a lot of that. All right, we're gonna do a rapid fire. So it's 10 questions. Just first thing that pops to your mind. You don't need to think about it too hard. All right, I'll start and then Alex will pick up. Ready?
Mm-hmm.
What's one word to describe your deal-making style?
Decisive.
What's more important to you, gut or data?
Gut.
Who's your dream deal-making partner?
Oh, gosh, there's so many. I would love to work with Dwayne Johnson. I think what he's done at $7 is genius.
And Danny Garcia.
And Danny, of course.
What's the best piece of advice you ever received on deal-making or business?
The best advice. It's either yes or a no, thank you.
What's the worst advice you've been given?
Stay in your lane.
What's a deal you wish you had done?
Oh, I don't regret it. But after I left Adidas, I was negotiating with another athletic brand. And the reason I left Adidas is because I really wanted to do a capsule collection or something that had, it was a creative, something that was creatively inspired by myself and the brand. And we were really, really close to signing a deal that would have involved that. But I still felt like the financials weren't there. It was kind of like, we'll throw you a bone, you'll have a capsule collection, but I felt undervalued. And it went a few years without an athletic partner. And then, now having conversations with Noble, it feels like, oh, right, that door closed because it created this one.
What's harder, running an ultramarathon or writing a book?
I think writing a book because there's so many other players in that process.
This one is going to be a tough one. What is your hype song before you go into a big meeting or negotiation?
I mean, listen, MOP Annie Up was on my labor playlist for the hospital. So clearly I have playlists for everything. If I'm really trying to get into a groove, Beyonce's Homecoming Live performance, like front to back, really inspires me. It's obviously the music is dope, but the symbolism of it, of her being a black woman headlining Coachella just really inspires me. And then keeping it in the family, Jay-Z's My First Song. It goes to that day one mentality. Yeah. And it both pumps me up, but also keeps me grounded. Because it's like, it's day one. We're still hustling.
Hustling. This may be the first time you said hustle. I was expecting like hustle throughout this whole thing. You can only watch one sport for the rest of your life. Which one is it?
Watch one. I think it would be track and field, actually. I love track and field.
If one team can win a championship, which one would that be?
I think my husband might be very upset if I don't say the Jets. Because good God, they need it.
Wow.
Yeah. Well,
we can go to church on
that. That's the saddest answer we've had to that question.
I wasn't expecting that
I was not expecting that one at all. Robin, you continue to surprise on so many levels. What a pleasure. Thank you so much for being here.
I'm honored to be here. Thank you for having me.
Isso eu começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling, but when we started to work for David, his one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg. Please welcome to the stage Alex Rodriguez and Bloomberg's Jason Kelly for a live taping of The Deal.
When we were thinking about who we wanted to be here with us today, we're like, who embodies all of the things that are power players, are The Deal? What are the brands that we might associate? Giants, Notre Dame, and what's the name of that bank that's downtown?
Goldman Sachs.
Goldman Sachs, yes. So
Wharton Business School.
Wharton Business School. I think there's literally only one person who fits that. So please help us welcome, for this very special taping of The Deal, Justin Tuck. Thanks for being here.
Thanks for having me.
This is awesome. All right, take it away, champ.
So, Justin, I've been such a big fan of yours, and Jason was talking a little bit about some of the accomplishments you've had, some of your history, but being a champion is one thing. Being a champion in New York is another, and I know that I was very fortunate to be part of one title in 2009 with the Yankees, and it's changed my life. It's changed my family, the trajectory of my business. You got 2 titles.
Yeah.
How has that impacted your life?
Listen, I think the first one was just surreal. You do it the first time, and again, it was very early in my career. I think that was year 3 in my career, and our friend Michael Strahan was the guy. So I was just in awe of this whole process, and didn't really didn't hit me until after the Super Bowl. So I didn't necessarily enjoy the lead up to the Super Bowl because you just didn't know. But that second one, when I was the captain and I had the opportunity of seeing all the things in my life that had changed after we won the first one, and I got to enjoy the process of going through it. Whether that was the road trips, whether that was the media, whether that was, I had a son at that time and he got the opportunity to experience it. That type of stuff is just life-changing. Not only of obviously being in New York and doing it, but just, solidifying that, like, we did it again. That was just amazing.
So, Justin, Notre Dame, then undergrad, then you go to business school at Wharton, then you win 2 titles with the Giants, and now you're at Goldman Sachs. I mean, it's blue chip everywhere.
Yeah.
But take me back. I remember when I was 10 years old, it was the first time that I had a vision for what I wanted my life to be, and I called it the 2 Bs. I was sitting there in New York City, watching Heights with my father, watching the Yankees, the Mets, and it was at that point that I wanted the 2 Bs, baseball and business. I was driven for those 2 things. When did you first start thinking about business, and which one's harder, business or being a giant?
Yeah, I mean, listen, I grew up on a pig farm in Kelton, Alabama. There's probably more people in this room than there is in Kelton, Alabama.
I was going to say, if you were waiting for, like, Kelton, Alabama...
Oh, no.
They're not here.
I'll take Alabama.
Exactly. Alabama, anyone.
No.
Yeah.
See? So, for me, I think the only thing I thought about was, from a sports perspective, is how do I utilize football to provide a phenomenal education that my parents can't afford. My mom and dad was not going to be able to send me to Notre Dame. My mom and dad was not going to be able to send me to Wharton. But I knew if I did what I needed to do on the football field, and I played basketball and baseball, I knew that was going to afford me the opportunity to go other places. And so, like, for me, I never thought about anything other than, hey, play a great football, get a great education. The time when I started to think about all the other ancillary things that could come off of this. I'm talking to my cousin at the time, and this is my rookie year in the league, and he said something to me that he had probably heard from someone else, and this is somewhat of a known phrase now, but like he said, the NFL stands for not for long. And I just started thinking about, all right, if I'm blessed to play 4 years, even if I'm blessed to play 10, I came to the league when I was 21 years old. I'd be 31 when I retired. What am I going to do then? And so I started thinking about that and started really making relationships with people. I tell all of my friends that play in leagues now, I'm like, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on and you're trying to go into some private equity owner or some hedge fund founder. No, do that stuff now while you're hot, while you're winning Super Bowls or you're playing in All-Star games, and then they can be a part of your journey, right? I had so many guys that were part of my journey of taking young Justin Tuck to think about going to Wharton, think about going to Goldman Sachs, think about investing in XYZ. Whereas if I was left to my own advices there, which is fine. I'll probably be back, on a farm somewhere in Alabama, which I love to do. But I probably wouldn't be doing this if I didn't have those relationships prior to lead me to what the opportunities could be.
Well, and it's interesting, too, to think about what your playbook was, because there are, and as there often are on this show, like echoes to you. Alex has talked about how, he would literally like go in his cleats and into Jerry Reinsdorf's office or, other owners. My understanding is you were literally like working the suites at Giant Stadium, right? Is that fair?
Oh, no.
When I say working, I mean networking.
Yeah, for sure. I don't know if it's even legal for me to get this information, to be honest with you. But I had a phenomenal relationship with the Giants, their ownership, and people that work, and I was just like, man, who owns this? Who is it? And most of the time they would know, that guy, he runs XYZ Financial Services, or this guy, his family owns, this real estate group, whatever it looks like. And like over time, I was just like, I just had a good game. It's Monday. I'm not doing anything. I should be making relationships. So I started talking to our staff about, hey, is there anybody I should be talking to? So I got names of people who own the suites and started just reaching out to them and just, doing a coffee chat or dinner or lunch or whatever it looked like. And I didn't want anything. I didn't go in and say, hey, can you help me here? I was interested in how they got to where they got to. What are some things that you can tell me about your story or your process or your journey that if I decide to go this route, because I don't believe in reinventing the wheel. I think people have come before all of us that have done, things that we would like to do. So just learn from them and try not to make the same mistakes they made. So that was the premise. And then again, over time, they got to see me for 8-9 years in the journey of Justin Tuck. And now I'm at Goldman Sachs, and you better believe I'm calling those people and being like, hey. So that part of it was phenomenal in my transition, because I tell people all the time, transition, if you're thinking about transitioning from something, make it a long transition. Don't try to just transition, because if you think about, all right, look at me in football. Think about how long I played football to get to that point. So if I'm transitioning into finance, why do I think I'm going to go from being a, highly touted football player or athlete and go right into the next transition as that highly touted person in finance or person in real estate or person in whatever it is you're doing? No. You need to get back to being the Pop Warner person over here and go through that process of learning all the ancillary things that's going to make you that Pro Bowl caliber or that all-star caliber businessman, and not think that our ego is so great that we got to go from here to here. Mm-hmm. That's not realistic.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Now, you're building teams at Goldman Sachs. Kind of the same things you were doing with Giants. You mentioned you were the captain of the team, right? What lessons and how has that mindset translated to the world of business?
Yeah, I think if I think about things that I would do on a daily basis as the captain of a football team, and now as a managing director of leading teams at Goldman, it's very simple, to be honest with you. Like, invest in the people around you. In football, it looks different. It might be, hey, I'm bringing this rookie and his family into our house and cooking him a meal and making sure I learn everything there is to know about him, his story, his wife, his kids, et cetera, et cetera. And I use that on football fields, too. I mean, 4th and 1, and we need to make a stop. I know exactly what triggers this person. I know exactly what his motivations is. I know exactly what's going to get him so hyped for this moment, right? In the 4th quarter, and we need to get a stop to win a Super Bowl, and we're tired, and guys are, I know exactly how to point those, the right things. I knew which guy liked for me to curse him out on the football field. I knew which guy needed to pull to the side and pat him on his back and say, man, it's okay, you're doing this right? Keep doing what you're doing. I knew exactly how to finagle that. And the same thing in the business and my teams at Goldman. I know exactly how to position our team, and again, as we bring on new people, you got to learn it. But like I know exactly how to position them, what clients they need to be paired with, and which ones the synergies are right for this person to be paired with that client, et cetera, et cetera. And that's, I think, it's simple. If you pay attention to people, if you take an ownership in knowing what your team looks like and what really moves the needle for them, it allows you to make the right decisions around a lot of different things in the business.
And so from a business perspective, as Alex alluded to, you were blending this early, you know, your interest in business, but you also had to think about your business as a football player.
Yeah.
How did you think about that? And you know, I know Alex had this experience of getting smarter about the world of baseball and negotiations and all of that. How did you do that, and how did you think about your deal making as a player?
Yeah, I think back to your point about when you win, you get more opportunities. You get opportunity to sit in some of these rooms that you. Like when I was a rookie, the contract was a contract. It was, you know, you trusted your agent to do the right things for you and get the best outcome for you. As you got older and you had more success, you could dictate a little bit more, right? And you could tell your agent, hey, I want to play for this team, or I don't want to play for that team. I like this, you know. And then like with the relationships I had with the Mayer family and the Titch family and the GMs, I could talk about things around like, hey, here's where I think I'm weak, we're weak. Here's where I think I can get stronger, and et cetera, et cetera. Here's where I think the team can get stronger. And they listened to it. They didn't listen to me to the point where like, we're going to just go out and like, hey, Justin, give us a list of players. But they listened to us from the perspective that they knew, like, at the time after Stray left, it was me and Eli's team. So they knew that we owned that locker room.
Eli Manning, we are discussing.
That guy.
For those of you not on a first name basis,
Eliza Manning. Yeah. So we owned the locker room. That locker room was our place, and we didn't allow nonsense in it. But to that point, we knew the players. We knew what. Because we were just an extension of Coach Coughlin, right? And we knew how to navigate that locker room in a way that we could go back in the offseason and say, hey, here's where we're strong, here's where we're weak. That was the start of kind of like my deal making or negotiations with when I was thinking about contracts at a later point.
You know, one of the things that we've obviously touched on, but I want to sit for a minute with is, you know, you do it, talk about deals, you do a deal, one-day contracts, you can retire as a Giant, great move. And then you decide to go to business school. That's a big decision. Then you decide to go work for Goldman Sachs. When you list the sort of places you've been, I think you're one of one. And so why did you make those decisions? Why did you decide to go to school, and then why did you decide to go to Goldman?
There's a lot of decisions there, but like it was probably because I wanted to learn how to be a better steward of the gifts and the talents and the resources God had given me. Again, growing up where I grew up, not a lot of people get the opportunities that I had, and I didn't want to squander those opportunities. So me going back to business school was to get smarter about, honestly, just managing my own opportunities. Now that morphed into a lot more, but that was the infancy of the idea.
You wanted to know more about how to run the business of Justin.
Absolutely. Because I was getting inbounds from all different opportunities, right? Whether that be on the real estate side, whether that be going into media. I dabbled in that for a little bit, and then also on the financial side. So I wanted to learn more about that. Goldman, honestly, was because my grandfather used to say something to me that stuck. To this day, I use it often. He goes, if you're not at the table, you're on the menu. And what he meant by that was there's so many cases in history where decisions have been made for us. And so, like, when I think about the relationships and the conversations I had in those locker rooms and the advice I had to give kids, and I say kids, rookies and younger players about how to navigate New York City, whether that was from on the field, off the field situation, when I was really, really thinking about what I wanted to do, I started to really think about how do I represent us at the highest of my ability. And I couldn't think of any other place that gave me an opportunity to be in these rooms and be a part of these decision-making deals than in a place like Goldman Sachs. And I get the opportunity to talk to, a lot of our partners of the firm, obviously David and John, who are doing an absolutely phenomenal job.
David Solomon and John Waldron again.
I think they know who
this guy. I mean,
no,
like the first names. I mean, you know,
I still call them Mr. and Mr. and Mr. But they don't like that, so I call them David and John. But like I get the opportunity to see that, and the thing that I always tell my team is I don't really care about owning a bigger piece of the pie. I care about making the pie bigger. So yeah, that's what wakes me up in the morning, and I think that's what drives me to continue to be successful. That's why Goldman.
Platform,
100%.
So Justin, when you think about when you were a rookie, and in recent news, you saw there was an investor that came in for a 10% piece for the Giants at $10 billion. When you were a rookie, it was probably 1, 2, or 3. It's probably 4x, 5x, 7x.
Yeah.
Couple questions there. What do you think is the best investment in sports? And what do you make of this whole thing? Where does it stop? Where does it go?
Yeah.
What are your thoughts?
Listen, I think Roger Goodell and team are doing.
You're a quick study. I love it. That's
good. I'll give you another tip one about me. I listen loudly. But I think Roger is doing a phenomenal job, and it would be hard pressed to think that there's an investment in sports better than the NFL. I'm biased. There's a lot of people who represent a lot of sports leagues and sports franchises out there that would argue that, and I would take that argument. But again, where does it stop? I don't know if it does. If you think about where media rights are going, and now private equity money coming in, the consolidation around, media, et cetera, I'm not smart enough to know where it stops. I'm not betting on it. I think it is a popular game that's getting more popular.
I guess a better question is, if you were the championship year in your second or third year, right? Yeah. If somebody told you the Giants would be worth $10 billion in 2025, would you have said true or false?
I probably would have said false. So it'd be interesting to see, as we sit here today, in 2025, in 2035, where this goes. But I have no reason to think that it might have a slowing down power, but I don't think it has a stopping power.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Annabelle Rulers in Hong Kong.
I'm Sherrian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Why would you want to be chairman of the Fed? Are you sure you want that job?
If the president asks me to be Fed chair, then I'll do it. If I'm not Fed chair, don't be disappointed for me, because I love the job that I have.
You alluded to something, Justin, you mentioned it, private equity coming in. I had a conversation earlier today with Tom Garfinkel and Mike Garrigetti about Ares investment in the Dolphins. You are, through your studies and now through your day-to-day work, very familiar with the power of institutional capital. How does that change the business of sports in your estimation? We went through this period where David Blitzer and Josh Harris and Mark Lasry, et cetera, were making personal investments. Now it's fund investments. How does that alter the landscape, especially for people in this room who are thinking about investing in sports?
When you bring in that much capital in and being able to do a lot of different things, I think the movement in sports investing is going to be very interesting. I don't think it's going to stop. I think you're only going to see more others get involved in it. And just going back to the Giants deal, right? You think about, that valuation. with no control, no path to ownership. What's stopping the next team, next owners from doing that? Like, there's a lot of different issues that I have to deal with on a daily basis for clients, whether that's estate issues, tax issues, et cetera, but like, I just feel like we're at the cusp of this, and it's going to start to happen in not only the major sports leagues, but also some of the smaller ones too, where, valuations are getting so high. What individual can afford these teams, right? And as families like the Mara and Tisch family look for liquidity, I think that only the next option is private equity.
Thinking about the future, the question that I would think about is, what would an investor pay for Notre Dame football?
Yeah.
And I'm just thinking, like, what world are we in and how fast is it moving?
But as well as I know, right? Sometimes this is just a play of like, forget the numbers. I just want to own this asset. Mm-hmm. So a lot of times that can get outrageous. I remember when Ballmer bought the Clippers at what was it, $2 billion?
$2 billion.
And now everybody was like,
we were like, you're insane.
And now,
yeah.
I think. Who knows, right?
But when you think about the college game, we watched, you watched with much more vested interest. I watched just as a college football fan, Notre Dame play University of Miami the other night. That was a phenomenal game, in part because of everything that was on display, including the transfer portal, NIL money, all of those things. These are the things that didn't exist when you went to one of the premier, you would probably say the premier, college football programs in the country. When you look at that through the Wharton Goldman, Justin Tuck lens, what do you make of college sports these days?
Listen, I just wish I was 18-year-old, 17-year-old kid, in some cases, 16-year-old kid. Like, they're going, it's even diving into college, in high school.
High school, yeah.
Right? So, like, I definitely think these athletes deserve to get paid, because for those who wasn't a college athlete, there's not much else for you to do. The program is so demanding on your time, for good reason, right? They're giving you a phenomenal education most places. And you get an opportunity to play the sport you love basically for free. But like, outside of that, I didn't get the opportunity to really, really engage with the student body as much as I would have if I had a few dollars in my pocket, right? And who knew that these athletes are going to be making millions in college?
Yeah, it's more than a few dollars.
Yeah,
in
it's
the
not a
pocket
few
now.
more.
Yeah.
I definitely think they deserve to get paid. I just hope that this thing gets some structure around it before it really, really gets out of control.
All right, so in our remaining couple minutes, we're going to do our rapid fire that we do on every episode of The Deal. First thing that comes to your mind.
Sure.
All right, yeah, you seem enthusiastic.
These never go well.
What's one word to describe your deal-making style?
Truthful.
What's more important to you, data or gut?
I would say gut that has been fed the right data.
There you go.
Who's your dream deal-making partner?
Oh. I don't really have a dream person, but just Alex Rodriguez.
Oh boy!
All right. Jason loves that.
I know.
No, what's the best piece of advice you ever received on deal making or business?
If you tell the truth, it's easy to remember.
What's the worst advice you've been given?
You're special.
What is your hype song?
There's a story behind that, by the way. What's my hype song? Phil Collins in the air tonight.
Oh, the drum solo?
Yeah.
There you go. You started a literacy nonprofit called Rush with your wife, Lauren. What's your favorite book?
Wow. I'm going to give a shot to a friend of mine. I love reading The Other Westmore.
Oh, okay. Really good.
If you can only watch one sport for the rest of your life, which one is it?
Y'all going to be surprised by this one, and it's not even about me. It's about my wife. Because if I had to watch another sport, I want her right beside me. So she loves tennis, so I would watch tennis.
Oh, there you go.
Oh,
very sweet answer. Yeah.
She's going to see this.
You're not going to make us cry.
What team do you want to see win a championship more than any?
Notre Dame Fighting Irish football program. Just to be very clear.
Just in case anyone doubted who we were talking about.
All right, what's your advice for someone who wants a career just like yours?
no shortcuts in this. Do the work. So,
All right. Well, and on that note, go Irish.
Go Irish.
All right. Thank you, Justin, so much.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have the camera, or do we? We don't want to lose you, Emily, in all of this.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
A cidade estava sitiada.
Isso ao começo eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Some people travel to see the world. I travel to question the forces that shape entire nations. How is it possible? My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Please welcome to the stage Willow Bay, Dean of the USC Annenberg School for Communication and Journalism and controlling owner of Angel City FC, for a live taping of The Deal with Bloomberg's Jason Kelly and Alex Rodriguez.
All right, welcome.
Thank you, but that was a very quiet response from this audience.
I know. Well,
very quiet.
Exactly. I mean, are there any Angel City fans in the house?
Thank you.
There we go. All right. Well, we're so excited to have all of y'all here for a live taping of The Deal, and we're especially excited to have Willow here with us. So we're going to talk about lots of different things. We're going to talk some hoop. We're going to talk some soccer, obviously. But I want to start with your day job, if we can, Willow, as you were introduced, Dean of the Annenberg School over at USC. We're at the Screen Time Conference. Clearly, there has been a lot of talk today, every day these days, it seems, around the First Amendment, free speech. You're living this every day.
Yep.
What are you saying to your students? What are they saying to you?
Yeah, so let me just start with one thing, which is day one fan of the deal, as you know.
Thank you.
Day one
Thank
fan
you.
of the deal, so thank you for having me. So yeah, freedom of the press, free speech, free expression, which encompasses all of them. They're core and central to what we do at USC and what we do certainly at USC Annenberg, where we teach journalism, public relations, communication, and public diplomacy. And related to that is academic freedom, right, which is the freedom to teach, research and study free from interference. And my day job is to protect all of those things for our students and for our faculty. We're not an ivory tower institution. We're deeply connected to our industries of practice. So when something hits the news, whether it's Jimmy Kimmel and ABC, whether it's the Compact for Academic Excellence, which is the letter that the Department of Education has sent to a number of schools, of which we are among them, or even the anniversary of October 7th, when we had student protests on campus. The news of the day is what informs what goes on in the classrooms. Our faculty toss out the agenda, they toss out their syllabi for the day, and they get into it. And I think at this moment, our students are really hungry for that. They're asking powerful questions, and we don't have the answers, but it is so clear that right now, at this moment, when we are commodifying outrage, and all we hear is shouting, that we create these spaces where people across our university, and certainly in our classrooms, can come together and wrestle with these issues in thoughtful ways.
Yeah, well, I appreciate your thoughtful answer. Now I'm going to undertake what we call in this business a hard pivot. But one of the places that does feel mostly safe, I think you'd agree, partner, is sports. You know, that we can disagree, and I think you're familiar with people disagreeing about sports, Alex. So let's go back, if we can, to your career. Let's talk some hoop.
So the first time I heard about Willow Bay was, I'm going to take you back to the great 90s, where such a fun era. And I saw you for the first time and my buddy Ahmad Rashad on Inside Stuff. And in a funny way, now being an NBA governor, that's really when I first fell in love with the NBA. It made a huge impact on me. It started my passion. Did you understand the impact it would make on that community and fan base that still looks back at that show as a big pivotal point?
Look, I can't pretend to know the impact it would have decades later. I knew that it was an incredible moment, an incredible front row seat to what was going on. My first day on the job was the day that Magic Johnson announced that he was HIV positive.
That was the first day?
That was my first day, my first show that happened. We actually had taped the show and we had to redo it. And that was my first indication that buckle up. You know, we're really in for a profound kind of cultural journey as much as we were a sports journey. And, you know, when I look back on it now, the two things were clear. David Stern hired me, the NBA commissioner, and Adam Silver, current commissioner, was just starting, so kind of grew up alongside Adam, who quickly became my boss. But, you know, the two things that David was really clear about with that show was expanding the fan base, right? To your point, that was the first time you saw it, and that's why there was a woman sitting there at the desk week in and week out, and not as a sidekick, but as a partner, because he wanted to open the sport up to young people and certainly to women. And the other piece of it, which is the more, I think, obvious piece of it was really the first time on a weekly basis we told the stories of players and their lives off the court. We had great highlights and great music. It was really a cultural moment too. But when you look at the through line between those stories, that was the only way you got those stories. It was the way other players got those stories, right? It wasn't just the audiences. To today's era of, you know, the athlete as communicator in chief, right, of their own brand, you really see just what a wise soul David Stern was.
Because I would imagine that it changes the way you think about media as an athlete. Is that a fair assessment? If you're watching that and you're seeing these players, because just a couple of years after that, you're a professional athlete. How did it change you?
Yeah, I mean, I go back again to the 90s. I grew up with Mo Allen and This Week in Sports, and you get one opportunity on Saturdays to get a recap of the whole week while we're all watching, you know, the score boxes. And we remember those days when we could, like, get the paper and see what Keith Hernandez and Darryl Strawberry did. And Inside Stuff was that. But
people are Googling right now. They're like,
yeah, what is a score box? It just kind of opened it up. When I came in, I led with fear with media because I didn't feel like I had the tools. And as I've, you know, the arc has gone to where, like, I understand that media could be an ally and it's a very powerful tool. And I think you started that.
You are the media now. Remember.
Yeah, you're the media. You're sitting
the
here.
media.
You're on this couch now, not that one.
That's right.
You missed it on Bloomberg Insight.
From a Bank of Korea's perspective, we don't believe that monetary policy alone can control the housing prices. But on the other hand, we are mindful that ample liquidity wouldn't throw the fire to the real estate market. Our official position is that we will maintain the easing monetary cycle, but the magnitude and timing of the cut or even the change of direction will depends on the new data.
Countries around the world are pulling away from U.S. assets. Do you see debasement happening?
No, actually. I think we have discussed this quite a lot. But actually, if you look at the actual capital flows in the last 6 months, I don't see that there's a lot of talk, but there's no real movement away from dollar.
Don't miss Bloomberg Insight live weekdays.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
And to that point, just to go back actually to your day job, sort of bringing it all together, you guys just did some work around this. What did you find about athlete-driven media?
I've been wanting to do an academic study on the phenomenon that we've all been watching unfold, which is athletes as creators, athletes creating their own content, but also owning the IP and monetizing it. So this is the first academic study to drop. Academics don't really use the term drop, but I'm going to teach them how to do that. And what it has demonstrated is this is reshaping the media ecosystem and the sports storytelling ecosystem in very profound ways, economically and culturally. Athlete-owned media enterprises are driving billions of dollars of value, and the athletes themselves as owners are benefiting. It is driving innovation because they are using new platforms and new storytelling formats to connect with their fans in direct and immediate ways. And you will appreciate this because now you are the media. It puts the decision-making authority in the athlete's hands. They get to decide what stories they're going to tell, what platform they're going to tell it on, and how they're going to distribute it.
And so what I find so interesting about that is you guys are now both dealing with this as owners. You know, you dealt with it as an athlete. Now you have several very, very famous, in the news, everyday athletes who play for your teams in Minnesota.
Oh, have any of his players made news?
No, just a little bit. I mean, I'll say their names out loud. Anthony Edwards, Nafisa Collier, obviously are out there in a very big way. You're now dealing with this as the owner of Angel City. So let's talk about what the responsibilities are as an owner, and let's talk about you as an owner. How did this is the deal. How did you come to this?
You know I love a good story, even more so if it's a good business story and sits at the intersection of sports and culture. And Angel City is a phenomenal story in the way they captured not just Los Angeles' attention, but the world's attention with this mission to drive equity on and off the pitch. I had never imagined, right, that I would be an owner. You might have. I certainly didn't. And we made the decision really quickly, my co-owner, and I. But I was the one in some ways who had the grounding because I used to take students there. Every year I teach a sports immersion class in the spring. And every year we would visit Angel City because I thought it was imperative that we make sure we were centering women's sports in the array of sports entities that we were exposing students to. So every year students would do a project for them. And so it was this very intense snapshot of a startup year by year and the decisions they were making from, who's the first player that we should hire to how can we develop our sponsorship partners in a way that aligns our community impact with our player interests and values. And when the opportunity arose, I had that grounding combined with, what we were watching happen with women's sports, both at the college level and at the professional level. And, I literally said to Bob, do you have any interest in doing this? And he did not even pause and said, absolutely. And there we were in the bidding process. Bob Iger is my co-owner and partner in this.
And husband.
And husband. Oh, right, husband. Yeah.
When you look at the deal and you acquired it for about $250 million.
Yep.
Are you looking at this as a double bottom line? Like, what can you do also for the community? Or you just think that this could be a 3 or 4X in the next 5 or 10 years?
So community impact was embedded in the business model. Look, this was the biggest investment we've ever made personally, and I expect that it will continue. That will hold firm for quite some time. What was so compelling was the purpose embedded in the business. So one of the things that's different about Angel City is that their sponsorship model directly invests 10% of sponsorship dollars into the community. So that's not an add-on or nice to have. We didn't wait till we were profitable to do that. That was very much built in to its business, equity on and off the pitch. And by the time we got there, they had invested roughly $3 million in the community. We're at nearly 3 million meals, right, through DoorDash and Sprouts, our sponsors, into the community to people in need. So this is a community asset. I think it's a sort of jewel in the sports universe of Los Angeles. And is there a bottom line? Yes. Do we expect it to improve every year? Yes. Are we on the march towards profitability? Heck yes. But this is really a community entity with community at its core.
It's interesting to have the two of you sit between the two of you. I don't own any sports teams, just for the record, but I know people who do.
It happens every once in a while. It happens.
Yeah, but it's interesting to think about that perspective because you now own basketball teams in the NBA and the WNBA. How do you think about it from a bottom line perspective? Because these are not small amounts of money.
And a community perspective, because you're getting to know a new community also.
How did I end up getting double teamed here?
Yeah.
The other way.
Two journalists.
I think, Willow, you said it beautifully. And just to bring it back 5 years, this was the time right after COVID, which people thought we overpaid for $1.5 billion. And then you had, obviously, the George Floyd tragedy.
Mm-hmm.
So when we acquired this team, it was a pivotal moment in Minnesota that kind of moved around the world. And we thought, I've seen for 30 years how sports can transform communities. And look, the truth is, when the Dodgers win, LA feels a little bit more chipper. So there's not too many businesses, like when your Amazon stock goes down, you're not depressed. Well, you don't say we, you just say my Amazon stock is depressed. But when the Yankees or the Dodgers lose, you say we lost or we won. So I have a good understanding, and I think knowing players, having empathy for players, understanding how difficult it is to be an athlete in 2025, far greater, far harder than when I started in 1994 with all the social media. My God, I got enough trouble without social media. Next question.
And so for you, Willow, this is, yes, it's a community asset. There are deals to be made. There are players that you have to negotiate with. There are sponsors that you have to take care of. There's a community. So when you think about the most important deals that you've done so far, the ones that really stick out in your mind, what jumps to mind?
I think, look, obviously, you know, being in the privileged position to acquire Angel City first and foremost, and taking on that extraordinary opportunity and extraordinary responsibility. But then I think about what we did when we first arrived, which is it was very clear that we had not invested enough in our people and our products, specifically our athletes. So we opened a brand new state-of-the-art training facility, which when we did it was kind of the biggest and best there was. I'm really hoping that's changing, because with every one of these step-ups, others follow, and which is what we desperately need, right? We need a significant level of investment in women athletes and in their ability to perform. So we did that, and then we got to work on the sporting side, right? Hired a new GM and a new coach, because, Alex, we would love to make LA chipper. The way a Yankees win makes New York chipper, and by bringing a championship to the city. So that is one of the primary goals. But also thinking about our athletes, as I know you do with the Lynx, you know, we have underinvested in women athletes for far too long, and this is the opportunity, this is the moment to change that by making sure we are supporting them the way we support all of our world-class athletes and allow them to compete at the highest level.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Tyler Kendall in Seoul, South Korea, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Watch Horizon's Middle East and Africa every trading day, now at our new time. Only on Bloomberg.
You missed it on Bloomberg Open Interest.
Well, if you're worried about inflation, maybe buy gold. If you're worried about tariffs, maybe buy gold. If you're worried that markets are too overvalued with the equity market and with credit spreads incredibly tight, buy gold.
What people are not talking about that they should be talking about is every major currency in the world is collapsing relative to gold. It's been going on for decades.
Don't miss Open Interest live weekdays.
So we'll take this room into the governor's room, the boardroom with your league. Are you a newer owner that kind of pounds the table and screams, or are you kind of an owner that
huge screamer
listens, asks more questions, or tell us about your style as a board member.
What's really fascinating is the NWSL has a lot of new owners, so there are a lot of new voices and wildly impressive voices in the room. And what's interesting is there's a breadth of perspectives. And I think it is clear that some of us have lanes, and mine is, at least initially, media, and how we think about our media partners, how we think about our new deals, how we think about really working with the players, the teams, and the leagues to be in alignment on our marketing and storytelling strategies, because there's a lot of disalignment is easy. Alignment's pretty hard, even today, in kind of an always-on 24/7 media environment. So I think there's a lot of very spirited discussion around the table, but a fascinating number of perspectives and areas of expertise come to bear, a lot of them from outside the world of sports.
And so what are the deals that you think the league and the sport need to make? I mean, this has been a league that's been on the move for the past few years. You have investment in Europe coming. You have a rising tide. But how do you maintain what has been true, that this is the best women's soccer league in the world? What do you need to do?
I mean, first of all, we need to make sure that we maintain our stature as the best women's soccer league in the world. And the reason that it's the best women's soccer league in the world is because of the level of our talent, which remains superior. So we have to continue to ensure that we are the best place for players to come. And that's certainly salary, but it's also all the other things we do, like the requirements that we've put in place to have the kind of training facilities, to have the kind of technical teams and support staff in place, that we're creating opportunities for them off the pitch, something that we really do at scale. And obviously something as somebody who really cares about the talent pipeline, I'm also doing at a team level and an individual level. So first and foremost, thinking about our athletes and making sure that they have the resources they need to compete, but also making sure that we're the most attractive place in the world for those players to come. And the other is I think other on the agenda, very high on the agenda, is our media rights deals.
Yeah.
Making sure we're driving the kind of tune-in that we need to be driving, that people understand where to find us on the array of networks, which I know is a theme that I'm gratified by the fact that the relatively small NWSL and the massive NBA are also having those conversations around what's the right number of platforms to put our games on.
So I know we ran out of time, but I have one selfish question I want to ask you, because as a father, you recently had a panel with yourself, with Charlotte Jones from the Cowboys, Jeannie Buss from the Lakers, and some of my favorite people, Candace Parker.
Candace Parker moderated, so it's already like a luminaries.
We also need more representation of women and people of color in the owner's room, executive level. What advice would you give some young ladies that want to be like you or like Jeannie or Charlotte to have more representation in this room?
The doors are wide open. Please come on through, and then it's up to us on the other side of those doors to make these environments welcoming, productive places to learn and grow and develop. Because Alex, you're absolutely right. I think not only do we need to make sure the opportunity is there for women, but we have massive growth potential ahead of us, and the trajectories are really steep, and we need a very robust talent pipeline entering all of these teams and leagues to really help us propel that growth.
Before we get away from the owner's box, the owner's, the governor's table, as it were, is it what you expected it would be, being an owner?
Because I never dreamt of being an owner, I'm not sure I had enormous expectations. And look, I've had the privilege of knowing and working with a number of commissioners.
Yeah.
So I sort of have seen the world through their lens, and I've seen the world through the media partner lens. But I've never been in the room before, and it is fascinating. The challenges come at you fast and furious, as you're seeing, and it is a learning experience each and every day. And I think I'm grateful at this age I can still be learning on the job.
All right, so we're going to do our rapid fire.
I would lose on Jeopardy, so don't make them too rapid. Because
all right, we're going to bounce it back and forth. I'll start, and then Alex will pick up. What is one word to describe your deal-making style?
Deliberate.
What's more important to you, gut or data?
Gut.
Who's your dream deal-making partner?
Bob Iger.
Mine too. He paid me very well.
Alex, we had our 30-year anniversary. We had the Yankees game at the table. On our wedding night, we had the Yankees game on the television. So
I love it.
It's working.
What's the best piece of advice you ever received on deal making or business?
So on deal making, don't squeeze your partner dry. Leave something. Let everybody walk away from the table with their heads held high. And then related to that is, therefore, don't start at the extremes. Start a little bit closer in and at a more realistic place so you save wear and tear on everybody.
What's the worst advice you've been given?
That I needed to change my name if I was going to be taken seriously in business.
Ooh, wow.
By somebody that I adore, who was just giving me some constructive
That must have been in the 70s. What's a deal you wish you had done?
Oh, a deal I wish I had done. Well, look, my kids would tell you any NBA team that comes on the market that we didn't actually buy, not that we could afford it, we should have gone for and didn't. So I'm failing them left and right.
I think I like the idea of Angel City as your family business.
Yep, I do
your
too.
sons a bit.
I do too.
Who was your favorite interview from NBA Inside Stuff?
Never given that one up. They were all my favorites. I loved each and every one the same.
Wow. Okay.
All right. What's your hype song before a big meeting or negotiation?
Beyonce, If I Were a Boy. But close second is the Leslie Powell Angel City Walk-On song. Here They Come. It's one of the best. I think it's the best in sports.
We got to go see that.
Yeah, you got to do it. I know somebody. You can only watch one sport for the rest of your life. What is it?
Oh, it's kind of a tie. Soccer, women's soccer, but basketball.
Okay.
Basketball edges out just a little bit more.
All right, so we usually ask if there's one team that can win a title, which one would it be? We
know what that would be. We're going to win Angels.
So a little
title,
shift here, Willow, is what's the first thing you would do after you win a title?
Oh, that's so bad. That
And
was
can I
such
be
a
invited?
softball. That was such a softball. You know that.
No, I don't.
We're going to go to Disneyland.
I like that.
And yes, you are invited.
Yeah, all right. Willow Bay, you're a treasure. Thank you so much. Thank you, everyone.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Rulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
welcome back to The Deal. On today's episode, Erica Ayers-Badon. She's now the CEO of Food 52. You knew her in her previous job as CEO of Barstool Sports.
I did, and she's a master at turning around companies. I cannot wait to hear it, but she's a great leader, great communicator, and she's on to new things.
Yeah, she has got massive ambitions. She's also deep into the world of lacrosse. She played in college, and now she's on the board of the Premier Lacrosse League with our buddy Paul Rabel. So lots to talk to her about. Coming up, Erica Ayers-Badon. All right, my man, Erica Ayers-Badon is here with us. You guys are old buddies, so I gotta turn this over to you. You gotta lead this one.
This is strange, so thank you, Jason. So, Erica, we're so excited to have you. Obviously, we worked together a little bit with Barstool.
Mm-hmm.
I saw you firsthand how wonderful you led with the conviction and really how much success they had under your leadership, and the growth was incredible. Now you're at Food 52. It feels like a big pivot. What is the through line for you?
It's a great question, so thank you for having me. I sold Barstool twice in 2023. So we sold it to Penn National, and then we bought it back for Dave Portnoy for $1. And
we're going to talk about that.
Yeah, sure. Come September 2023, I was like, I've done everything I came to do here. Like I couldn't have dreamed that we would have had 2 exits in a year, that the company would be back with Dave. I really felt good about that because I felt like Dave was always the right steward for Barstool, and I gave what I could give and the gift of the machine while I was there. And I felt that the greatest offense to what I had done for the past almost a decade would be to stay after I was creating. And I just felt like it was offensive to everything I sacrificed to build it, that I wanted to go find a new adventure and a place where I could start and try to build something again. And so that was really the pivot. I also felt like I had marketed to 18 to 24-year-old men for, the better part of a decade. And I was like, I know how to do this. I was finding that I wasn't crazy stimulated by it. And I was writing a book at the time, and the last section of the book is, do you stay or do you go? And the point where you go is when things stop scaring you. And I felt that moving into the women's space and moving into home and lifestyle and manufacturing was sufficiently scary. And so I made the pivot.
And I've never asked you this. How do you get an opportunity like Barstool? Does a headhunter call and say, Erica, I have a wild idea? How does that work?
No. So it was actually funny. So when it was very random. It was by accident. So I was in Los Angeles and I worked in music. I had a startup in the music space trying to build really fan platforms around music artists. And we were raising money, and we went to go see the Chernin Group. And I walked into the meeting, and the Chernin Group were like, oh, hey, we just put money to this company you've never heard of. And I was like, well, what's the company? And they said, oh, it's Barstool Sports. And I pulled up my phone, and I was like, I lived in Boston when Dave started Barstool. Boy. I used to get, I'd be hungover on the T, and I would read the paper, and I have the app, and I'm like, here's everything that's right with it. Here's everything that's wrong with it. And my business partner was pissed because he was like, we should be focusing on raising money for us. But I really couldn't shake that conversation. I felt very jealous because I knew that they would probably find a white guy with an MBA and a vest and a button-down shirt, and that was not me. And I pursued that opportunity hard. I tried to find anyone I could to get connected to Dave. I finally got connected to Dave probably 3 months later. We met in a coffee shop in the West Village, and I pretty much was working for Barstool since that moment. But it didn't come, it was actually very interesting because they had interviewed, I think, probably 70-ish guys, 70, 75 guys or men for the job. And you could tell the recruiter was irritated by the time I showed up because the recruiter had done his part, it was showing candidates.
He's like, I've delivered all these bros.
Like 100%. And this chick walks in. And so that's how I got it.
Wow. Did you have any idea what you were in for?
No.
You said something interesting a minute ago that I love, which is the gift of the machine. Mm-hmm. Was that what was in your mind, that that's what it needed? Because it was, it was less than $5 million, right?
Oh, it was less than $5 million. It was probably 14 people. They were based in Boston. Like it was, when I remember my first summer there was no office. I worked in hotel lobbies and coffee shops while Dave and I built the office, opened the office. We weren't sure who was on payroll.
So speaking of that, you go from under 15 people, employees, you go from the sub 5 million in revenue. You probably don't even have a P&L.
Barely, yeah.
By the time you leave, you go from that to about $250 million of top line revenue. What were some of those drivers, the main drivers?
Yeah, I mean, I think the quote unquote machine was what we were really good at is finding new platforms at the time of emergence. So podcasting was just starting to emerge around 2015, 14 to 16. And most of the big broadcasters weren't in it deeply because there was no money there. And we had no money, and the cost of production for a podcast was very low. And so there was a low barrier of entry for us to make a lot of podcasts. So we started to make a lot of podcasts. And then a year later, Facebook Live and Twitter bought Periscope, and it was live streaming on the internet. We got into that. And so the machine, quote unquote, the machine is really, how do you find emergent platforms? How do you find programming that was authentic? I really felt that there's something with young men in particular that didn't want to be preached at or told the whole notion of SportsCenter was dying, where you weren't going to wait until 11 o'clock at night to see what happened today. You wanted the score and you wanted the opinion in the same conversation, in the same context. And what we built was the ability to clip that, post that, promote that, circulate it, and monetize it.
Issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Well, and you also discovered this notion of creators at the core, right? Portnoy, and we'll talk a bit about him, I'm sure, at the center of that, but you also said about finding people, not just, you found people and married them to platforms. Is that a fair?
Yes, we found people, and Dave is really gifted at this, Dave, Gaz, like the core Barstool guys have a very good eye for talent. And we were at a point where, it's kind of pre the capital I influencer world that we live in now. But the alchemy of weirdos from, somebody's railing about New Jersey Transit, and next thing you know, you have Frank the Tank, and you're putting Frank the Tank next to an Alex Rodriguez or a Deion Sanders, and it's just weird. And so that was very captivating.
Alex is like, confirmed.
Yes. Yes.
Yes.
So we did a good job of discovering talent, and then we did a good job of setting a social norm inside the company of a high degree of productivity and a high volume of output. And we had a lot of at-bats. So because we had so many at-bats, it was easier for us to get a hit.
So you had some at-bats. I mean, what was your impression?
I just thought, first of all, I thought Erica was a great leader. You always come up with wild ideas with her, and she never said, no, that's not going to work. She always tried to figure out, like, okay, how do we think outside the box? How do we get to a yes? Let me think on that for a couple of days, and she'll come back to you with really productive feedback. But, I mean, I was working with Dan, who's very, very talented, the cat, right? And he had an enormous audience. The brand is so big, Jason, that when I would go to colleges to give talks or whatever, or even walking here in the cities of New York, the people would be like, Barstool, Barstool. Yeah. I was like, holy smokes, like, not the Yankees, not this, not that. It was Barstool. So I knew the power then when I joined them.
And so, Erica, I want to go back to the Penn deal that you mentioned, because that sort of sits at the center in terms of the deal making that you guys did. So how does that all go down?
So when I joined Barstool, the investors felt that we should be able to do, I want to say, $25 million in revenue in 4 or 5 years. I think it was 5 years. We ended up doing $25 million of revenue in like 2.5 years. So wow. We took off very, very fast.
And that's mostly ads,
mostly ads and commerce. Okay. So, and t-shirts, right? Merchandise. But we then built a subscription business. We built a pay-per-view business. We were able to spin up businesses in a way that was very fast because we were, I would say, reckless, but also highly entrepreneurial. But long story short, we knew that there were 2 outcomes. One was that a media company would buy Barstool Sports, and then when PASPA was repealed and gaming and gambling looked like it would scale in the U.S., that became very obvious that that was going to be the path. And so
this was the Supreme Court decision that basically allowed for
states to regulate sports betting on a market-by-market basis. And prior to that, it was illegal across the country. I had always built the business to have optionality for either path. And it's kind of interesting, like the Fox, Dave was on Fox in September, and then the Good Morning Barstool show launched. Like, that was actually probably the right outcome for Barstool Sports, is to find a media home because the company has intrinsic media DNA. Penn came along. Penn needed a brand. They had a large regional casino footprint. They had infrastructure, and they had a lot of licenses. They had all the state licenses, or most of the state licenses at the time. And so in that regard, we were a really, really good match versus a DraftKings or a FanDuel or an MGM. Those were companies we had worked for before. Those were companies we had supplied a lot of audience to. And the way I built to that, or we built to that, is, in year 1, we had 5 gambling partners. And in year 2, we had 2 gambling partners. And in year 3, we had 1. So I tried to create more and more competition and a king-making of who our partner was. Oh. And then by the time Penn came along, we had a very, very good case study and a very high volume of proof points of our ability to transact and our ability to drive customers for someone else. I think a lot of times in acquisitions, what the acquiree forgets about is that the acquirer wants customers, and you are a conduit to either acquiring, keeping, or upselling those customers, and we were very cognizant of that.
Yeah, it seemed, and Jason and I were talking offline, like a dream. And I remember at the time, what a brilliant idea. You have the regional footprint with Vegas, and you have the bricks and mortar, and you guys have,
with the brand,
the gambling. And also, Penn wasn't cool. You guys made it cool, and you made it relevant. When you trade on something like that, educate us a little bit. Is it more top line? Is it a multiple of EBITDA, or just, how does that work?
So we were a multiple of EBITDA. So we were lucky in that we had good EBITDA in the business. Most of it we reinvested for growth. We were also looked at on a multiple because we had a very healthy and growing ad business, and we were growing thousands of percents or hundreds of percents on an annual basis, really on every dimension. So if it was ad revenue, if it was audience growth, if it's downloads on podcasts, we were trading up and exponentially up year over year. Now, there was a discount because the brand was controversial, and there was like, well, what about Barstool? What about? So there was a discount to that. And the partnership, in good ways and bad ways, Dave and I never set foot in a Penn casino before we did the partnership. And I think we didn't know in some ways what we didn't know going into it. I think we brought a tremendous amount of value to Penn. You saw it in the stock price pop. You saw it in the audience. You saw it in the establishment of the brand. Ultimately wasn't a fit.
When did you know it wasn't working?
It was hard. It just was really...
From the beginning.
Yeah, like from the jump. Like, it, in fairness to Penn, they had state and government controlled licenses. Like, if your business is predicated on a government license, like, you can't mess that up. Mm-hmm. Like, you just think differently, you act differently. So that was really hard for us because we were more successful and most fulfilled the most audience we were getting. Right. The more audience we got, the more eyeballs we got, the more people talked about Barstool, the more people looked at us or talked about us, the better off we were. Penn was like, could you guys just be quiet?
Yeah.
People stop talking to you, which was so antithetical to how the company was built. The second piece of it was Penn was really a cash-driven business, right? So they collected, they were collecting coins in casinos, right? And when you collect the cash every night and you count it, you have a high degree of predictability and you have a high degree of certainty around what your revenue is on a day-to-day basis. In the media business, as you all know, like, it doesn't work that way. Right. So I felt personally I was spending a lot of time of predicting what the revenue 1 month from now was going to look like on any given Wednesday. And it just was like... It just was two really different beasts.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
If you have a mulligan, and in hindsight, Penn never happened.
Yeah.
Knowing what you know now, going back, what would be the ideal, maybe one or two companies that would be the ideal buyer?
Yeah, I think, I'm so grateful that Penn did happen. It changed everyone's life. It freed Barstool up to go back to being privately owned. It gave, a huge reward to the investor. Like, it was a win for, most everyone in that equation. I think Fox is probably the right home for Barstool. Like, always was the right one, to be honest with you. There was a hot minute we thought it was ESPN. Obviously, that wasn't going to be ESPN after we had, our 1 a.m. disastrous one-episode TV show. But I think Fox was right. I think DraftKings or FanDuel would have been probably a better fit with similar challenges to Penn, but I really do think from a media perspective, it would have been Fox.
Yeah. And so, you mentioned this a minute ago, the notion of being out there, the notion of being loud, even the notion of controversy to some extent was a feature, not a bug when it came to Barstool. That must have presented challenges for you as
definitely
a CEO. How do you deal with that as a manager?
you get very thick skin, and, Barstool, we were not in crisis, but we created crisis for other people in our business dealings, which was challenging. That was tiring.
Mm-hmm.
It was trial by fire, which was a really good business experience. Like, not much phases me in business at this point because we had so much happen. Barstool years are like dog years. So there was a lot that happened in that, but it was also, media is a really interesting business.
And I mean, to take it to the obvious point, like, there's controversy, and then there's like Dave Portnoy controversy, and obviously
that's like next level,
right? He's been accused of things that he's denied. Like, how do you take that on as a CEO?
Every day, everyone at Barstool starts with a blank page, and the camera is on 24/7. And most anyone where the camera is on 24/7 and your job is to make people laugh out of a blank page every day, you are going to step in it. Like, that is a byproduct of the business. Like, so the first is just the acknowledgement of this is the world we play in, and this is the business we chose and the cause that we adopted. I think on the Dave piece of it, like, I really loved working with Dave. Dave is truly brilliant. He's a brilliant business person. He has incredible instinct. He is very decisive. He also is confident enough to know what he doesn't know. And I worked for him, with him for almost a decade, and I trusted him. Like, I truly trusted him on every level. And when things got tough and stuff was, thrown at him, we talked a lot about it, and it's intimate and it's personal and it's just, things people don't necessarily want to know about one another. But I also felt like he was super forthright with me. And I think he also is super forthright with his audience. And there's people who like that and there's people who don't like that. But I felt like I had really partnered with a quality person that I was going to ride or die with in that.
And so, one of the things that I think we're both fascinated by is, and I've been listening to your podcast work, which is really good, in part because, when you walked in, I felt like I knew you because it is a very authentic, it feels like, representation of yourself. Is that just how you've always been, or is your professional experience, has it made you that way, that you are transparent and open and, like, very comfortable with real talk?
Oh, no, I think I've always been like that. I mean, I grew up in a locker room, so it's, I think you're just like that.
College athlete.
Yeah, when you're in a locker room. And I love to work.
So a locker room, Alex, is where, like, athletes get them.
Thank you.
Really? He's like, I had my own. I think I've always been very curious, and I've always had a lot of energy, and I think Barstool made me more public than I would have ever been. I would not have gotten to this place on my own, I don't think. But I do feel that there is really a lack of management talent. There's a lack of authenticity. There's a lack of care for younger people at work and passion around being great at work. I think COVID kind of killed the management. It killed management. Like, you stopped getting feedback. You stopped meeting with people one-on-one. You stopped learning in the hallways. And, I really believe that work is an apprenticeship. Anything I learned is because I apprenticed under great people. And to have a concept where I can talk about work, share work, laugh at work, ridicule and push people and confront things at work, I think is healthy.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Rulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episode Friday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
So, Erica, Jason and I were talking a little bit a couple weeks ago about managing talent. And you've had some tremendous talent come through Barstool. I mean, from Deion Sanders to Alex Cooper, Pat McAfee, and obviously Dan Cat. If you had a do-over, is there anyone that you wish you could have kept if you thought a little bit more proactively? Or is this the nature of doing business and people just have to move on in the next?
It's so funny because I think Dave and I always used to talk about it like an athlete contract, right? Where you get a rookie and the rookie contract might not be great. Maybe it is great in rare air and a few exceptions, but you get your first contract or your first gig if you're a regular person, and it's all about how you perform in that first term. And we were very good about ripping contracts up and creating new ones. And you saw that progression with Alex Cooper in particular, because that was very public. But I don't know that there's anyone who got away. There were a lot of talent I'm glad we missed on, to be honest with you. Like, I'm more grateful for the people we passed on. I also think, it's funny, I deal with this now at work. When a talent leaves, there's a feeling, I think, of failure, of like, oh, they got away or we shouldn't let them go. But it's really like, hey, they just graduated to something bigger. And this place, we were very comfortable with Barstool being a springboard to go do other things. I think the world has changed where when you're out on your own in the cold versus you're in a stable where there's constant promotion and cross promotion and instigation is very hard to make it.
That's very much like sports. I mean, contracts are up, they get expensive. The other part that you guys did really well is you had a great farm system and you had great scouting, whether that came from you and Dave.
Yeah, there's always a new crop. There's always a new crop.
And so how do you translate that? Because as I understand it, I want you to, bring us and our audience up to speed on what you're doing at Food 52, because clearly talent also at the talent and content are clearly at the center of that. So what are the lessons you take? How do you approach that talent? It's food talent, essentially, rather than sports. So what's the playbook there?
Talent is succession, right? So it's how do you think about who's at the top of their game now and how do you feed the next generation of that? And that could be if you're an accountant or an FP&A guy, or you're a media person, or you work in advertising, or you work in manufacturing, whatever, it doesn't matter, you work in content. I really think about it that you've got to give talent every possible piece of ammunition you have. You have to offer something to them in the power of the parent brand. I think a lot of times, you read about this with Unwell and the Alex Earl versus the Alex Cooper of it all. Is like, what is Unwell offering to other talent outside of Alex Cooper in Unwell? Like, that's a big question. What's the value proposition? Why is someone part of this network versus another network? I think media people and media networks miss that. But so long as you give talent freedom, you have their back when they mess up, because if you're in the public eye and you're making content on a daily basis, you're going to mess up. And then 3 is the money shows up. Then you can play.
Yeah.
But you always need to be thinking about who's the future, who's the next generation. How do you start? Competition is so healthy. I mean, you see this in sports, like competition, whether you're in a test kitchen at Food 52 or you're a fellowship of creators in My World and Home and Life and Food, or you're part of Barstool, is a great thing.
So you mentioned that you ran into the Barstool opportunity by raising capital, and then it shifted to something else. So I'm going to do a little role play with you.
Yeah.
My friend Jason here, he's a CIO. He runs a family office, and he has a lot of cash.
Okay.
And he's looking to invest. Can you give him a pitch on why he should invest and what exactly is Food 52?
Oh, absolutely. So Food 52 started around the same time as Glossier, and the whole era of the blog turns into a little shop, and the shop turns into a product, and the product turns into a movement, right? And Food 52 did this in the subject of table and home and food, really, food as the center of a well-lived life. What then happened is Food 52 started curating incredible products from all sorts of artisans all around the world, and had a very particular aesthetic and a very elevated aesthetic, but also for the first time had a real vision for home cooks versus chefs or restaurateurs or professionals. It was really about serving the at-home cook. Food media has exploded since that time. And what I really believe is that there's a couple things that make Food 52 worthy of investments. If you want to give me money, I'll take it.
He's got a lot of it.
Yeah, that's great. I love that.
Clearly.
But essentially, when you think about home and you think about food and you think about table or decor or lighting or textiles or furniture, it doesn't matter. The internet eats the middleman, right? And so you're going to have the Amazons of the world, or maybe a Target of the world, and you'd have a Crate and Barrel or a Pottery Barn. And then you're going to have things that are very boutique and bespoke. And the pieces in the middle aren't really going to exist. And what I think is very interesting about Food 52 is that if you create a content engine that surfaces artisans and makers and interior designers and stylists and fashionable women, and you service and put products underneath that, you can create a whole ecosystem that has a lot of cachet, that has a lot of differentiation, that has a lot of aspiration and a lot of appeal. And you can do so in a way that you're not dependent on Facebook and you're not dependent on Google, that you're creating an ongoing conversation with people. So, like, I'll give you an example. I created this thing called Work Like a Girl. I was at Barstool. Everyone accusing Barstool of being misogynistic. So I was like, you know what? Like, that. I'm going to make T-shirts that say work like a girl. And that became my brand. And then last summer, I was like, you know what? I'm going to create this into a Slack group. We now have thousands of women who are giving each other advice all day long about getting a job, managing in your job, finding a new job, HR questions, management questions, AI questions, you name it. It's a hive. And you can surface all sorts of products into that because we're in an ongoing conversation. That's professional women. You could see the same thing with stay-at-home moms. You could see the same thing with interior designers. And the ability to put products into those environments in a way that's organic, I think will ultimately win in terms of conversion.
In case you missed it, on the close.
You've put a lot of emphasis on service, obviously, with the Green Apron Project. What does that look like in terms of staffing, though? I mean, you obviously have to hire more people, but more importantly, you have to retrain a lot of your existing staff as well. How I guess, receptive have they been to that?
I got to give our partners a lot of credit. They really have embraced both the Back to Starbucks strategy and the Green Apron Service standard. And so the fact that we've staffed the stores up and we've added more people, we've added more hours, it actually has set them up to be able to do their job, I think, with excellence.
You're trying to make the interiors a little bit more accommodating. You're also looking to sort of create more, I guess, lower cost models for building and operating some of these locations. Are those two in conflict with each other, those strategies?
No, actually, they can work really well together. You can have great design, you can have a great seat, you can have a great atmosphere, and then also be very cost conscious. And that's what we're doing here.
Don't miss The Close live every weekday.
Why would you want to be chairman of the Fed? Are you sure you want that job?
If the president asks me to be Fed chair, then I'll do it. If I'm not Fed chair, don't be disappointed for me because I love the job that I have.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
And how do you make money?
By selling those products.
By selling the products.
And having really multiple lines of revenue. So if you look at, we are just about to launch with Porsche. So Porsche wants to be associated with our audience. We also are featuring artisanal products that we hand collect or curate. We also manufacture and develop lighting and textiles and furniture, so there's 3 lines of business in one Instagram story. And that to me is an interesting business, which is not that dissimilar from the Barstool business.
And so how do you level Food 52 up? I mean, because when you came in, you were coming in at least...
It's a turnaround.
Based on listening to your podcast, it's a turnaround.
Big time.
Are you attracted to turnaround? Like, what was it about?
I don't know. Now that I'm in the middle of one, I'm like, I'm not sure I'm going to do this again. But I liked the challenge of serving 25 to 54 women. I was like, that's an interesting demographic. They have a lot of pull. They're under penetrated in a way. They're underserved. So I liked that. It's not a viral crowd in the way that an 18 to 34 man is a viral crowd.
Interesting.
So how you build for them is very different. I thought that was intellectually very interesting.
A lot of spending power.
Huge amount of spending power, huge amount of influence, and huge amount of influence on other people. You look at youth sports, it's the moms. You look at what's happening at the home, it's the moms. You look at a family's finances, it's typically the mom. And then the second piece on the turnaround of it all, I'm curious to learn. Like if you look, I've been here a year. I know more about manufacturing. I know more about international shipping. I know more about product development. I know more about e-commerce than I knew coming in just by a factor of 1,000. And so regardless, if I can make this thing turn around and, I've taken a huge amount of cost out of the company, I've restructured the company, I've refocused the company, I've rehired the majority of the company, I've totally changed the DNA. It may work or it may not. I think it will work, but now I know media, I know men, I know women, and I know manufacturing. And so I feel that I'm more viable because of it, because I've been able to now study different types of business, different consumers, and different business models.
So Erica, you made the analogy about sports. You go from running this company, Barstool, again, sub 5 million to north of 250 in revenue in like 8 years or so. You're basically the top free agent in the market. How does this opportunity come? Because I would imagine that you would have many companies, many headhunters after you. How do you land a 50?
Yeah, it's I think everyone thought I would stay in sports, and I think everyone thought I would stay in gambling in particular. And I got a lot of calls. But what I was a little bit scarred leaving Barstool from the big company of it all, where I was like, I don't know. I don't know that I'm going to Disney, or I don't know that I'm going to be a cog in a really big machine. I also didn't want to compete against Barstool because I still have like so much of, I'm a Barstool girl. So I'm like, I still have so much affection for that brand and the business. And I also felt, you know, like life is short and I want to try something completely different. The investor behind Food 52 is the same investor as Barstool Sports.
Chernin?
So Chernin
And Jesse?
is,
Yeah.
yes.
Oh, that's awesome.
So that made it also easy. I had joined the board of Food 52 in 2023. So I also got a look firsthand at what it looked like before I got in there, which I like. You know, I sit on the board of Vice, I'm on the board of Axon, I sit on the board of the PLL. So it's great to see companies. It kind of gives you a sense of where the opportunity and where the challenge is. And I felt that there was a lot of upside if I could turn this around. And I hadn't done a turnaround in the way that this company needs a turnaround, and that was a good thing that would scare me.
So as someone who's been on the buy side and the sell side throughout your career, like what are the sorts of deals that you're looking at? I mean, do you grow through acquisition here? Are you and are those content acquisitions? Are they talent? Like what or commerce?
Yeah,
like where are you looking?
Food 52 will grow organically. Food 52 made 2 acquisitions before I got there. They acquired a brand called Dansk and they acquired a company called Schoolhouse. The company during COVID, the synergies between the brands hadn't been recognized. So I'm more of a try to grow organically. That's how I've seen things. Now, if you look at the PLL or you look at Vice, Vice is a company that's finding its way through JV partnerships.
Right.
And PLL in the large part is growing organically, but
This
also
is the Premier Lacrosse League.
the Premier Lacrosse League. They're also growing through acquisition. Axon grows through acquisition. So I'm more of a grow organic, build a vision, you know, see a vision, build a vision, execute against a vision, have multiple lines of revenue, do so on a low cost basis, and then diversify. That's more my approach. I do think acquisition can be an incredible accelerant. I think JVs are tough.
Yeah. And so, you know, interestingly, you know, the proverbial seat you're sitting in, Melody Hobson sat in there a bit ago. And she put on what I thought, Alex, was a masterclass in being a board member. What are you like as a board member? Like, what do you feel like you bring to the party? What's your sort of, and obviously it varies board to board, but like, what are you looking to get out of that, and what are you looking to give?
I'm probably not as good of a board member as Melody Hobson.
Well, I think she's probably the best board member in like the history of boards, but like, so that's a good thing to aspire to. We all aspire to that.
I ask 1,000 questions. I'm very curious. I like management. I'm not a pomp and circumstance board member. Like I appreciate public boards and private company boards, obviously super different, but I'm more interested in how can you represent the needs and wants, and also protecting the shareholders, but also how do you help the company see something that they have but they can't see from within. And so I'm a high energy board member. I'm very passionate. I have a lot of opinions. I think a lot of times in board sessions, people get very PC and they get very quiet. And I think, you know, hard part, I always say this just as an operator and I have boards, is there's nothing worse than the board member who does nothing for you and says nothing during the meeting. I hate those people. So I'm like, I never want to be one of those people. So I try to be the opposite of that.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Some people travel travel to see the world. I travel to question the forces that shape entire nations.
How is it possible?
My name is Professor Hannah Fry. I want to meet the people with unexpected stories to tell and dig up the peculiar and wonderful treasures that reveal what a country is made of.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Right, so now's the time that we get to talk about one of my favorite subjects, lacrosse. In your proverbial seat, Paul Rabel sat. He's a friend of all of ours. You played lacrosse at Colby College very successfully, so you obviously love the game. How do you link up with Paul and Mike Rabel, his brother, who created the PLL? They have grown, as you mentioned, through acquisition. How does that come about, and what's your relationship to the business of lacrosse?
So Paul and Mike Rabel showed up at Barstool Sports in 2016.
Whoa.
And we had 2 conference rooms and, at that point, probably 100 guys in like dirty sweats. And the conference room table didn't hold up, where if you put your elbow on it, it just fell off. Like everything was in the constant state of falling apart at Barstool. And they showed up because...
That's a metaphor.
Yes. So they showed up, and Paul was playing for the MLL, which was a competitive league at the time. And I believe he had a large sponsorship with Warrior Lacrosse, which was owned by New Balance. And they were looking for advice on how they could get out of that. How could they? How could this thing be created called the PLL?
Wow!
And they showed up, and we were supposed to meet for a half hour. We ended up meeting for like 2.5 hours, and I've been connected to them ever since.
So, what were you thinking? All right, this is a viable option. This isn't a viable. Like, did you think they could create a whole new league?
Definitely, because that summer, when they came to see me, we had just written, Jordy, one of the Barstool guys, had just written a blog on the conditions of the MLL players, which were pretty embarrassing.
My God.
It was one pizza to be shared across 30 guys. They were making like negative $50 every
They were literally like going home with fans and like sleeping on their couches.
I mean, it was awful.
So bad.
It was awful. And Paul was the first $1 million player.
Right.
And he had this big lucrative contract, but the big lucrative contract was tied to the league. And so I thought it was an interesting problem to solve, which is he had a bird in hand, which was a big sponsorship. The first time anyone in that sport had been recognized at that financial level. And he wanted to give it up to start something new. And I thought it was very brave. I thought it was ballsy. And I also felt that, Barstool was getting really a firsthand look at sports because we were doing so much, this was early days for Barstool, not early Barstool, but early in my time at Barstool. Yeah. And we were seeing, hockey is kind of lagging. Hockey is a very insular media culture around it. Football was starting to rage, not the way it is now, but in a way that was big. Baseball was, a little sleepy. And I really felt that when I looked at the energy, you're a great example of this. The amount of money, time, and effort people will spend on their kids in lacrosse is bananas.
Yes, bonkers.
Bananas.
Yeah.
So I'm like, there's an opportunity there.
Yeah, yeah.
And they've been chasing it.
I mean, it is amazing. We've talked about this in the context of lacrosse. I mean, it really is like A-Rod being like, you know what? I think there's a better baseball league that I can. And you just be like, this Major League Baseball.
Crazy,
I mean, it's crazy to think about.
Banana Savannahs. What are you?
Yeah, exactly.
Really cool.
But you had a lot of those ideas. I mean, that baseball should. I mean, when we were working together, baseball should be more entertaining. You've got to commingle the entertainment and the game. Like it's.
And they've done that.
They have. They've done it. Like they have.
And we talked about youth sports a lot on this podcast, and is a $40 billion opportunity,
huge
and
business.
it's so fragmented.
Yep.
And I always go to like, how do we also make sure that, like my mom who couldn't afford, big ticket items, how do we grow the sport but also make it affordable for all?
100%. I think that's going to be the rub.
We have to make it because we don't want to lose great players
Yeah.
to other sport because they can't afford it. That's just not
100%.
good enough.
And so how do you grow again, asking for a friend, how do you grow lacrosse?
I think you have to go to the youth.
Yeah.
You need more kids preferring lacrosse. Lacrosse is low barrier of entry sport. If you look at street lacrosse in Harlem, like perfect example.
Yeah.
Like it's not, if you can pick up a basketball, you can pick up a lacrosse stick and ball. Like it shouldn't be cost prohibitive.
There's also been an expansion into, there's now the WLL, the Women's League. I would imagine as a former...
I'm passionate about the Women's League.
Yeah.
And the women's lacrosse, the coolest thing about the WLL is they will be bigger stars than the men.
Really? Why?
Yes. Because they get it. They want it. They are captivating on camera. Charlotte North and what she does for young girls playing lacrosse is epic. And they're also new. And this is my thing for which I've been saying to Paul and Mike forever. This is what I'm like on the board is like, who is your Dennis Rodman?
Yeah.
Like, who's the jerk? Who's creating controversy? It's the same conversation with WNBA. Like, the more players showing color off the court in a way that's real and relatable and impassioned, the better off the sport's going to be.
Well, I mean, to the point of they get it. I mean, you've seen this through the links. We've seen it in college sports, especially. You think about women's college basketball and the stars that, not just Caitlin, but Paige Beckers when she was at UConn, Juju Watkins at USC. I mean, these are stars in part because they have cultivated that in a much more methodical and serious way.
As a job.
Right. They just see they see the potential there.
100%.
Now, going back to Food 52, I'm curious, where do you see this in the next 3 to 5 years? In a perfect world, because we talked about Barstool.
World, totally. I think in a perfect world, Food 52 finds a home inside of a bigger company and it brings the engine to bear.
Yeah.
And that may be something that should happen in 7 years and, or it happens in 3 years or, but I think it should be part of something bigger.
And potentially, not to give any secrets away, but what type of company you think?
Could be a retail company that's looking for product differentiation or is looking for category expansion or is looking for a new customer set. Or you could see, more and more media companies are looking for food and home and life content. And so they're also looking for diverse lines of revenue and they're looking to expand e-commerce beyond affiliate. So I kind of see those two paths as opportunities for this company.
So I have no doubt you're going to crush it in the next 3, 5, 7 years with Food 52. I always